Coffee. Num num. Who we got? Oh, hello. Okay. I'm just quickly charging my headphones a little bit. Give it one more minute. Oh, I can't hear you in the Discord just now. Just got to keep those headphones charged. Oh, might also go find the air conditioning. Okay. Okay, and we're back. Who have we got? Who have we got in the live stream chat there?
Hey, Sen, can you hear me?
Hey, I can. How you doing?
Hey, great to connect. First of all, thank you so much for taking the time to arrange this.
No worries.
Been following you for a while, and I'm always impressed.
Blue did everything. I just showed up with several reminders and multiple alarms.
Man, you guys are amazing. But I wanted to kind of I've been following the materials, but it's taking me a little while to digest all the concepts.
Hmm.
So what I wanted to do was I wanted to just first understand, how you have the origin support resistance trend tool.
Hmm.
What does that mean? Like, what are the columns? What does
Okay,
it represent? Things like
so
that. Just very basic.
what it does is it looks at origins that are potentially getting created. So what it would mean is that, say, for example, what we have right here on the weekly, this candle which touched the break level, this candle which then doesn't go back to the break level,
Mhm.
for every moment that this candle is open, it would register a potential origin being created on the weekly. So it's more or less giving you a bias as to which way they're trying to reverse the price. But of course, right up until the very last moment, it can change, because if they were to have taken this big candle and dumped it all the way down here, then that would have meant that this is no longer actually there. So that's basically the origin portion of it. Then you've got the break bias. So, for example, we're now below this level. So the level was created, but we're below it. Now, for every moment that this candle down here was a blue candle, so when it was down here in distribution, it would be registering that we have one more potential break pending on the weekly. So, but what it's doing is it's doing that for 1 hour, 2 hour, 3, 4, 6, 8, 12, and it's doing it across about 600 tokens. Plus, there's probably some stock that falls into it somehow, just based on how it works. But so, if the bulk of the market is sitting below weekly levels with blue candles, it's going to tell you pretty much that you're screwed and that it's going down. Now, what we have seen a wee bit of in the past is that it has created a break and then the market has gone in the opposite direction, which is, you imagine just retests happening, like if the entire market, or at least 8% of all the weekly levels across all these tokens, have suddenly broken to the downside, it's not unusual for that then to create a retest. So we see, I'll just bring it up. And it's pretty early days really for this data, but let's find my Discord.
Right. And if you could just click on the trends level monitor, and we could just go through the lines.
Yep. I think one of them's not
Thank
recording anything at the moment. Might be the break
you.
risk on the trends is not recording, but
Mm.
I'll just find it. Go. Okay. Just say something. I just want to make sure you still come up on the audio.
Yep, I'm
Okay,
here.
cool. Should be working. All right. So we'll come down to the bottom. We've got master levels. So the first one that we started was this one here. And so this was basically just break levels and origin levels, nothing more. And the lines that are on there
Sorry,
is
Sin, Sin, the screen is on the other, it's on Trading View right now. I don't know if you're sharing your
oh,
screen. Yeah, yeah,
right.
yeah. Thank you.
Damn. Okay, so then I have to change screens on here as well. No, it's probably got the other one up on YouTube, but this one's different. Okay, just try changing that.
Yeah, I'm on through the Discord link.
Get Okay,
Oh, there you go. There you
right.
go. Thanks.
So this one here, which is your origin. So this was the original one, and what the lines basically are on this was we have the market cap, so we just have a bit of an idea about what's happening with the market cap. We
Yeah.
have bullish percentage and versus. So it's bullish percentage versus bearish percentage, and it's a proximity thing. So it looks at ATR and it says that based on the average range of a token at the moment, we are closer to the support or we are closer to the resistance as a whole. So when this is kind of when this big green blob in the background is sort of in the middle, it actually means we are pretty much just sitting in the middle across the market of support and resistance. And so you might be looking at one token which might be like right on a cliff and about to fall off, but the overall market at the moment, as far as the amount of percentage of move that a token averagely makes, is kind of sitting in the middle, maybe just a little bit more towards the support at the moment, but kind of about 50%. Then you've got broken level bias. So every time a level is broken, it's a pending retest, which can come along at some time. So that's this line that's up here. And at the moment, the broken level bias is definitely higher, except we don't know 100% what the baseline for that should be, because and we will over time as this records more data and that kind of thing, but there are always going to be levels that just never get retested. And on something like BTC, because it's if you think about it, it's 20-year trend, it's a 20-year uptrend, right? Because it's just always gone up over time. So this level, maybe 60% is normal, maybe 50% is normal, maybe it's 55, we don't really know. But certainly if this starts to get really, really high, you would expect that the market is going to react and go in the other direction. Which in this case, if this was up really high on the chart, it means that there is a whole heap of retests to do to the upside. And then you've got the origin potential bias, which is this, I don't know if that's orange or red, it's jumping up and down in there. And you've got the upside break. So if the break risk is to the upside, it means that we're looking to break more resistance levels, which is currently what it looks like at the moment. So we're kind of looking at BTC and SOL, and they look pretty crap, but the overall market is actually not that bad. Like it's looking to go up, but it's also looking to create resistance. So that sort of implies that we've maybe hit up to the top of a range, we've come back to the middle, we're sort of sitting in the middle, and we're looking to break the lower half of the ranges, but we are still creating resistance towards the top side. So as far as how you use this, if you get sudden shifts like these kind of sudden drops, like that one there, which would be the origin potential. So the only way that that changes is if the market actually absolutely dumps and no longer creates those bullish origins, or if the market's quite flat and you get these sudden spikes, it's probably going to reverse because those origins switch from being potential to being real. So that's where the green is jumping up along with the red. So it's kind of early days for this data, but basically what it's tracking is development of support and resistance and breakage of support and resistance, but only taking into account origin and break levels. It's not taking into account hold levels. It's not, so it's just singular from that perspective. So when we look at the time frame breakdown and we look at the overall break risk, these are giving you an indication of how much of the market is currently looking to shift. So 2% is a pretty rookie number. It's a pretty small number. We saw this hit 8% the other day before we had a really big dump. So at the moment, yeah, it's just kind of cruising. The market's just cruising. Overall, slight upside bias as far as which way it's looking at breaking. But if it is going to break, it's going to push up into resistance. And because we're creating more resistance on the top side because the origin potential is lower than 50%. And yes, 67%, maybe that's 50%. We don't know. So obviously over time, we're going to figure this one out as we track it. This breaks it down. The chart at the bottom actually breaks it down better, but this just kind of groups things. So if you were to look at this here, what you're seeing is we've got 109 1-hour levels at risk. So given that it's tracking 600 tokens, it's not a huge amount, but there's obviously a bunch of 1-hour levels at risk. Bullish breaks, bullish origins looking to break. So that's basically support that's looking to break. Bearish, which is holding the price down, looking to break. Overall, we've got more looking to break to the upside. So across this whole thing here, we've got more looking to break to the upside. And apart from the weekly, and we are hovering under a weekly trend. So it's kind of telling you that we may travel up, but we're probably going to run into some kind of weekly trend. And unless this number starts to flip, then you're probably not going to see a weekly reversal at this point. So then come down to the next one, hold levels. So same type of thing, only 2.5% of the hold levels are at risk at the moment. It's pretty even. There's a lot more to retest to the upside, so broken hold levels that haven't been revisited to the upside. And the numbers on here basically mean your hold break risk. So this is that 2% number. It's pretty small. Haven't really seen too much to do with this. I mean, we got a bit of a spike here before we had that big dump. We got a bit of a spike here, but kind of went flat. Maybe a bit of a spike here before we went up. So when we get a spike, and this has sort of moved from 2% to just eyeballing it, probably about 8%, 9% in there, tends to indicate you're going to get some change. Whether it's sideways and continuation to the downside, or whether it's a reversal, some kind of spike in the overall structure of the market. So a little spike there, a little spike there, started going up. The top line, same thing, just more pending retests. So whether or not we've got more reason to be going up, which we do. So therefore there's all these retests to do to the upside. And then you've got the upside hold bias and the origin potential. So it's the same type of thing. Origin potential is whether you've gone into a hold level and you're closing outside of the hold level without revisiting it. So therefore the hold level has rejected the price has not managed to get back to the hold level. If that starts to travel to the upside, it means that bullish hold levels are holding. If it starts to go to the downside, it means bearish hold levels are holding and they're rejecting. The upside break bias, you'd probably expect upside break bias and origin potential to sort of travel quite close together as they do, because one of them means that we're closing inside the hold and potentially looking to break it. So if that upside hold bias is going to the upside, then we're inside bearish holds looking to break them. And if the origin potential bias is going to the upside, then we have exited bullish holds looking to continue the laddering process to the upside. So that is again, just individual, so it's not, not looking at the other types of structure. Chart's the same, gives you a bit of a breakdown on what it is, and as you can see, looks pretty similar. Most things are looking bullish apart from the weekly, where the weekly we still haven't managed to really, flip the weekly structure at this point. And there's actually a couple charts. You've got the break risk, but you've also got the origin potential, which are separated for some of these later ones. The trends. Now, I'm not 100% sure if that pending broken bias line is working. And the reason for that is it's too damn flat. It does seem to be actually recording, and I haven't looked into this yet, but it's either trends are just that damn even as far as which ones need to be retested, which might make a bit of sense because price does tend to bounce between trends. Maybe they are just very, very even. Market cap, same thing, just so we can keep a bit of an eye on the market cap. Now, this trend break risk, there's obviously something, as you can see, happened in here where we were trending up, and then suddenly just dump and it flatlined. But at the same time, that's about where the market retested and started to go up. So it's quite likely we just broke a whole bunch of trends at that point and the market started to reverse. So I guess that's kind of something we need to keep an eye on for the future because this is very new. We've only been tracking this for about 2 weeks, if that. So same thing applies. We've got upside trend bias, we've got origin potential bias. So an origin potential would be that it's basically bounced off a trend or it's broken a trend and it hasn't revisited the trend. So therefore it's looking to polarize the trend. Upside trend bias is just whether it's in a position to break the trend or not. So the higher these numbers go, or the higher those lines go, the more likely it is we're breaking resistance trends. And at this stage, it's kind of just been stuck bouncing between here and the 50% ever since we dropped below, which as the market obviously took an absolute dump once we went below, and that's because we were effectively breaking support trends. So yeah, we're sort of waiting and watching. If this goes back up above the 50% mark and the market starts to rally to a higher level, then that's because we're breaking all the resistance trends. And time frame, same thing. So these can be they're a little bit different, like not quite like the hold levels, a little bit stronger on the weekly, but we've got these just things like this where you just the 4-hour doesn't seem to be so tough, or it seems to be a bit weak. And most of the resistance trends are pretty strong, given that we've only really got the 1 day in here that's looking positive. And then the master level. So master level is taking all of what you saw above and throwing it all together and basically just giving you an overview of the average amount of the market that's at risk and whether it's pointing up or down. So it's something, I don't think that just means origins. I actually think that's all levels. It's about 117,000 levels that it's looking across, including X amount of holds, X amount of breaks, X amount of trends. And then you get your bias. So we've only been tracking this for about, about 2 weeks. So what we are really looking to see is if we get, I probably need to change the colors on this one to make it a little bit better, but sudden spikes to the upside, and then do we get a change in overall market structure and price after that? So, and as we go up, we'd expect the retest to come down because we're actually going to be testing these levels as we head to the upside. So at the moment, everything looks pretty good across the board apart from the weekly. And we're starting to create some 1 hour origin bias there across the board, but everything else is still kind of saying that breaking to the upside, creating resistance to reject. That's pretty much what all that says. So, whole bunch of data. There's other things we've managed to figure out, which we haven't managed to build yet, but found some interesting stuff about how when you break levels down as to how they behave and how their behavior changes, you can actually pretty much find the points at which FOMO begins and the market starts to really shift. So I found some interesting details with that, but need to build the systems to actually track it. So, don't know if that explains it. Hopefully it does.
Creating a thesis if you have being at the top or the midpoint or the bottom of a channel. I think this would definitely help with kind of showing, especially with the green bars that you showed, if those were in the middle, that would help indicate that we're right now. I think you said we're pushing into resistance, right?
Correct. Yeah, and this only tracks up to the 1 week, so it doesn't see the bigger stuff like when you're talking about 30-day moves and holds and stuff like that. They probably don't make a huge amount of difference from a percentage perspective because there's not going to be as many of them, but and also they're going to play out over a much longer period of time. So the idea with this kind of data is to eventually build a proper trend tool, one that genuinely works, that tells you as the trend is truly reversing rather than getting you in too late. And we already know how ranges are created. We know what's required. It's just a case of, is it the whole market doing it, or is it just one token doing it? And that's kind of what this is designed to do. It's basically give you that general market overview. I'm way more excited about another one, which is basically a hold balance measure that was able to pick tops and bottoms through the whole cycle.
Nice.
But it took like 4.5 hours to run one report. So
Wow.
got to figure out a way of getting that to operate quicker.
Cool. Awesome. This is super helpful. And Sin, can you open a sample daily CSV report?
Yep.
Say we pull the one for ETH. I just want to try and understand like how to interpret it the right way.
The master one.
Yeah, any is fine.
Sharing this screen, aren't I? Okay.
Perfect. Thank you.
So, right. Question. I'm guessing you have the question, or do you just want me to generally explain it?
Yeah. Sorry, if you could just give me an overview of how to interpret this data.
Okay.
Like there's 617 days. We have a current price of 1665, and then the level price. If you could just help me validate, and especially we're in relation to what's in column E. If it's incomplete status,
days until. So that's days until next close. So it gives you an idea of what closes are coming up. So if you were to just sort that by days closed, there's a lot of different stuff you do in here as far as what columns you sort. But I would typically open this, and then I would first column I'd go to is minimum obligation moves. So that's these ones. Okay. And then I'd look at what they are, and in this case, they're all shorts. It does not look good for ETH. So it's pretty bad. Most of them have been entered. Okay, yeah, that looks shit for ETH. poor ETH. But as you can see, what do we got? We've got one here in 11 days. So the next one to close is in 11 days. The bracket that the price opened in is between the wick and the 1618. The target is $876. Ouch. Ouch. Okay. I come over here. You can see whether it was a wick engulfment or not. And if it was a wick engulfment, it means it's capable of creating a range. So you've got a 120-day time frame, capable of creating a range with an entry price which we hit on the 17th of the 4th with an incomplete move to 876. Yeah, this looks pretty bad. So you would now want to look that up. So at this point, you now look it up using the indicators, the Vanguard ones, or you look it up through the dashboard and check that time frame, see where the trends are, because that could be a pretty decent dump for ETH if it continues along its path. Some of these ranges like this, they can never really go to their bottom, but they do quite often go to their lows. So something like $777 or 876. Also, you're looking at the repetition of the number, the fact that it just appears in there multiple times. So typically things that appear more than once are generally going to get hit. So it's usually just a matter of time. So that's the first thing I do. Look at the balance of longs versus shorts, minimal obligation. We've closed outside of the holds. We're looking pretty nasty. The next thing I would do is I would look at entry timestamps to see what we have entered recently. I didn't update these today, did I? Because I'm on the live stream. So that's my bad. But so this would be as of yesterday. But this is the stuff we hit recently. So most of it's longs. And that's why, that's partly why you're seeing this little bit of positivity come back in. But it's got like 11 days. And if it doesn't actually get back up over some of those bearish targets and reverse them, actually close back inside the holds, then chances are that those bearish moves will end up playing out. So most of this is quite small stuff, so none of it's really capable of breaking a 120-day level. There's just nothing decent in here that it's bounced off. So I'd be looking at that and just checking. Maybe we did bounce off something bigger today. So then you've got, if you want to see the future, you've got validation. So based on current price, what levels could get created at certain days if nothing changes. So this can see all the way through to say like 2030. Validation would be 2026, June 14th. Okay. So all we did today was validate more shorts. Yippee. Oh, fun. Sucks to be ETH. That Tom Lee guy is going to be crying. And then what was the close on ETH today?
Would have a position in ETH anymore.
No, I wouldn't have a position in ETH looking at this. That's brutal. ETH is, so what did it open at? 1689.80. So it's under all of those. Oh boy. 1687. It's interesting though that it did creep up just above that. So that 38-day target, we did just creep just above that minimum. So it might bounce up just based on that, but it's just bouncing into a world of pain. So,
yeah.
So what this allows you to effectively do is find the levels quite quickly, find the balance quite quickly. As you can see at the moment, it's just short, but we did hit some lower time frame longs. If you were traveling down and you were looking for bounces, you'd come in here and you could filter it. First of all, make sure you're looking at actual ranges that exist. So turn off all the future validation. So you just want valid ranges like this. And if you're looking for longs that could support or give you a scalp bounce, take longs, sort it by the entry price, or just go no, entry timestamp, but I think that's just easier. Oops. Go no entry timestamp. Of course, we haven't entered $268. Sorted by entry price. And that just gives you where your longs are. So there must have been something on the back side of the range. Oh, there was. Hey, look at that. So if you had a look on the chart at the moment, there are some hold levels just on the back side of the range that we bounced off. So you could have scalped a weekly hold or a daily hold or something like that on ETH. Looks like we've already touched them, and there's a couple more that seem to exist now. So yep, so we've got two new daily holds, which are those two that have been created, and they've been created since we bounced off a weekly hold, which would already have an entry timestamp, which is why you don't see it on this list at the moment. And to really find something bigger, it's got to go down to that 1300 area if it's really going to find something big. So you got shorts that are going to try and push into that, but these really big levels are going to try and push back the other way as well. And the more we go down, the more longs will open, the more shorts will complete, the balance will start to shift, and the price will likely start to trend in the other direction at some point. So that's
Well,
a few
Sim,
ways.
yeah, we're at time now. So thanks again. I
Yeah,
really appreciate you sharing all your amazing wisdom and knowledge.
yeah, no
And
worries.
it's always learn a lot and mad respect. So thank you.
Yeah, no worries, man. Catch you later.
Take care. Bye.
Bye. See. Okay, here we go. Oh, don't do that. Right, back to, let's see what's in the chat. Oh, thank you. And thank you. So say, oh, is that a border? Your microphone's muted. I'm gonna drink coffee. Why do you get to go to bed, Blue? I thought you got to stay up with me on all this. Who's going to be the entertainment? The cheerleader for when I take my half-hour break. Would have disappeared. Man, ETH looks like death. I suppose most things look like death. Who wants to see a new toy? Prototype toy. Oh, what up? You back?
Check, check. Hello?
Hey, hello. I can hear you.
Okay, perfect.
How you
How
doing?
are you?
I'm good. I'm good.
You holding up?
Yeah, it's pretty early. It's
What, 9 hours? Only
yeah, it's not so
only
bad.
what? 15 more to go?
Yeah.
No,
What was that?
I want to say firstly, sorry, just really appreciate your time and taking this with us.
Yeah, no worries.
I need it. We all need it. But I really appreciate how much you give to everybody when you really don't need to.
Kind of fills the time in. So,
Yeah. Hey,
but
fair enough. I know. Just in between making money, huh?
yeah, well, it's also it's kind of healthy to have something other than drinking and drugs and trading. It
That's pretty fun too.
gives you something to
That's a
do.
good
It's
It's a good
probably
balance. No, I hear you. I like puzzles too, man. That's why I'm
yeah,
in this game.
it's nice.
Um, okay. I was trying to give Pistachu there a little more time. I don't know if you saw my message because nobody's booked after me, and I booked a few hours.
Nice. No.
Um, but I guess he's good.
Yep.
I don't necessarily have any charts I was looking to share. I might ask you to pull up a few things just very specifically. But
Yeah.
first question, why am I the way I am? No, it th- this game is very mental, and I'm realizing one, I'm really dedicating myself to understanding perception of the charts and really trying to get the broad view so that I can zoom in. But I get
Mm.
so fixated on certain things that I'm learning that I forget the other things. So kudos to all your years you've put in because you make it sound easy, and it is easy to understand from you. I'll give you that high compliment. And then truly doing it is a whole nother level sometimes to me.
Yeah. Execution.
It's honestly it is a lot of times not in any kind of ego sense. It's like I do I can see what's gonna happen, but I don't necessarily get the order right.
Mm.
It's like you can see where they want to go, but that kind of actually leads me into probably the first thing that I wanted to talk about, which was recent, was actually this um the daily closure 2 days ago. It
Yeah.
closed back. It closed back under. It was on Bitcoin.
So this one?
Yeah. Uh, was it that one? Yeah, it was. I believe it closed back under the. Maybe it was on Binance that I was looking at, but it closed back under the into the hold, into the wick. I think it was 61,500. Um, so I expected some retesting back inwards, but instead it ripped up the other way.
Was
I think
it this one? This candle that closed inside
it
this
may have been
hole?
that one. Yeah.
Yeah. So
And that was when we were under that range trend that had been broken and not retested, or we closed under, and
so
then they did that,
gotcha.
which is like
Gotcha.
what
What
it does
creates?
seem sometimes I take those principles of like, okay, I see a confirmation, we looked a little under trends, perhaps take an entry there, and then I am an eternal double downer, which can is my biggest flaw. Thinking, oh, I'll ladder once or twice, and then they'll retest, but then they don't,
Yeah.
and then I'm trapped.
Okay. So let's see. So yes, this did close. back inside the wick level. Didn't
Uh-huh.
didn't close back inside the body, and they are different levels. So
Right.
there'd be something else going on here at a lower time frame. And one of the reasons why you'd want to inspect the lower time frame is that you've got this one candle engulfing one candle, but you do not have another one. So to
Right.
create a daily range, you need a range. You need two candles. To create a
Correct.
daily hold for a daily range, it needs to be a daily range. So fractally, this is not a daily range. This is something else. So
Okay.
at that
So
particular
is that,
point,
I'm sorry to interrupt, but because it is kind of half another question.
mhm,
This is that scenario where that 1v1 is high risk
uh,
in that sense?
honestly,
Or maybe
no,
let's
not.
talk about that after then.
It's not really a high risk one because it's come off an Origin. It's come off a weekly level. So first thing is you need to understand what the biggest thing is that's currently at play. And as far as what support we're bouncing off a weekly level from all the way back here.
Yeah, I was watching those assets. There was kind of two there.
Yeah. So this is what
yeah.
yeah, this is kind of what we're coming off. That's a daily, but there was obviously if we crank it up, I think it was a weekly. Okay. So since we're bouncing off a weekly level, the daily is probably going to evolve into something or at least go sideways until it hits the weekly trend. It's unlikely that that hold was not going to hold. But it's not actually a daily at that point. It's something kind of smaller. So really the trade starts, and most trades start on the backside of a range. And what it only becomes a backside of a range once it's at least gone up and ranged a couple of times. So this is here. If this candle closes yellow, this is technically our first daily hold. Something else is what's going on down in here. So if we were to
Right. Isn't that some sort of formation, that kind of 1-3-1? I don't know.
it's
Some
it's
Japanese.
creating a backside front side. But I'll show
That's
you
a
what.
whole nother kettle of fish.
Yeah. I'll show you what
I'm sure everybody tonight is gonna ask what is a backside front side, and I will after this. So
we got an indicator coming for that.
oh, amazing, man! I'll give you all my money. I'll give you all my money.
It's right, here we go. Here we go. So we've got no new origin in there at that point. We're just bouncing off an existing one. Okay, we've come from the wrong side of the trend. We're underneath the range trend. So if you'd taken this origin trade, you'd already be taking a TP at this point. That would be the first thing because you've pretty much hit that resistance. But the weekly trend is all the way out here. So if it's gonna, sorry, that's the daily on the wrong chart.
Okay. Well, and it's been so steep recently, right?
Yeah.
It's like that cut down from the start of June was just straight to the basement.
So steep trends are, like in this case, the weekly trend's actually kind of cool because it's miles away.
Right.
So it's all the way out here. The only problem is, of course, you can just sit there and go sideways for weeks until you hit that, and then you could dump again, or you can break it and go up. But at this particular moment, we've entered this hold. It's down in here.
Yeah.
Just and what we should be getting is a move back to about that 64,282, which I think we
finally hit
think
that
we
today.
finally hit that today. So just before the week, just before the week.
That was sorry, and that was another one of those little smoke screens because on the first bounce they went just before it.
Yeah.
And then I think I entered a long off of the retest, and then they even did like a little double dip bounce, and those always get me. 'Cause I'm like,
Yeah,
are they gonna keep going? Because they do that on the back of the fear of those drops,
correct.
and
Yeah,
and then it chases me out, where I'm like, I ended out in profit on that one, but then I also feel like doubling the trade has generally historically not worked for me. Like the time you're like, okay, I'll re-enter.
yeah.
I think, and that's where I need to get better with trends and just trusting those a little more.
Yeah, I would be very confident in holding along on anything,
Hmm.
until we hit this level. Once we hit this
Yeah,
level,
on a weekly.
we've kind of hit that
Right.
minimum retracement. Now, the technically we should go to the trend, but what we could end up with is we could end up creating a new trend. And so you don't always end up going back to the one that exists because you might actually make another one. And
Okay.
that's so if we look at what week was that? 1st of June. So if we go to the next candle, pull back up and reject it off the backside of the trend.
Yep.
So this would have been a lot more bullish if it had got up above there.
Right.
And at the moment, we could just keep hugging the backside of that trend until we hit this exterior trend, and then we could reject again on the weekly. So back down we go. That's when we started to get a little bit of volume coming in. Yeah, we're still not really getting above the level. All we've done is actually touch the level. So now what we need to see is we need to see this thing close. If it can close back
Right.
above the support trend, in very close proximity, you've got these two resistance levels, which could reject the price. And
I
so,
was gonna say I've been looking
yeah,
at. I was actually looking at the 2 week, and
yep,
there's a reverse hold, and
yeah,
I think it's at 64.9, 65 ish,
yeah.
or maybe 65 something.
There's lots of resistance at about 65 to 66. There's also
Mhm.
a reason to go there based off.
64.903, and there's a range trend there
You see this
on
one here?
the, or that's a
So
daily range trend.
we've got our weekly range that's come all the way to the bottom, and
Mhm.
that's bouncing back up. Minimum revisit there at 66.019. So the issue kind of here is that we don't have a lot of minimum revisits at higher levels, and we have got resistance all sitting around where we know the price is likely to head. So
Mhm.
it's about how quickly does it get there, and the worst thing ever is for this thing to hit these levels in the next 20 hours, within the next 20 hours. If we
Because of the
do that,
rejection.
bingo, we're coming from the wrong side of the
Yeah.
trend and smacking into horizontal resistance. That's the kind of thing that just sends you, back down again. If we can just fester around here and hover for a bit, then we can
Mhm.
open up over the top of the trend again, and then potentially, push up into the holds. So it doesn't mean we will, because as soon as we start to hit these 66 levels, we're ticking a lot of boxes by the time we do that,
Yeah.
and that could be enough. Particularly the backside rejection off this range here, that could be enough to
Right.
send it back down again. But at this stage, it's got some chance of recovery if it just stays where it is for another 20 hours
So now,
and then
if
goes up.
if it closed roughly where it is here, kind of halfway between resistance trend,
Yep,
and goes up first,
yep.
then it would just, could it maul a little bit, go up, bounce down, come
Yeah.
back on the other side of trend by the
Uh,
end of the week? Like that could be a way they sweep.
it would be unlikely that it would just dump straight back through the trend. That would be unlikely.
Even if it hit the resistance first?
Yes, now that would be
That's
more
what I mean. If
likely.
it went
Yeah,
up and
yeah.
then down and
If
then back
if
up?
it went up and then down, it would be
Yeah.
more likely to break the trend. If it opens and goes down and then up, it's more likely to break the holds. So
Yeah, okay.
it's about where they take liquidity from. So if they take
Right.
liquidity by going down first, then they're normally going to use that to try and sell at a higher price. And if they go up first, then they're normally going to reject down to sell. So when we saw the daily range get swept to the top side, that's a bearish sign. And it looks bullish, and everyone would chase it because it's a
Right.
an amazing pump, right? So people jump in, but all they're doing is they're heading up to liquidate the shorts. So shorts effectively, when they get liquidated, they are a buy. So they buy the token as it's going sideways in consolidation, pump it up to liquidate the shorts, sell their bag into the shorts, and then now that they have nothing, they could either just open shorts and drive it down, or maybe they just drive it down so they can rebuy it lower. They're not always going to be opening shorts,
So,
but
so how would they? And this was actually like this was another one of my questions because I do enjoy hearing you talk about kind of the smart money concepts, and I think I kind of have a twisted perspective where there are times where I guess if there were a large amount of shorts, like if the whales were short,
Hmm.
that would make you would think they'd go get that, but in fact that's the weighted position, therefore need to be paid by the longs.
Correct.
Does that make
Yeah,
sense?
yeah. Well,
Like it's counterintuitive a little bit.
for every single short, there's going to be a long. Just people are taking them out on different levels of leverage, so that's where the
Right.
balance kind of comes into it.
And
If
so sometimes you see a screaming heat map of high collateral or high leverage, but that could be low collateral.
bingo, and that's where
Yeah.
size, the size of the leverage that's sitting at certain levels, and that makes a difference. But also, how does it get to the level? Because if there's a whole series of 100x positions, but they're really, really little positions, they're not going to push the order book up or down much if they get
Right.
triggered. But if there's a really big position there and it gets hit, then the forced buy or sell can shift the order book. And then there's also the timing that you choose to do that. So if you're going to do that, you're going to do that right at the end of a market, or you're going to do that in between markets, or you're going to do it on weekends or banking holidays. Like if
when you can manipulate easier,
yeah, well,
is it when there's lower volume or
there's less orders in the book. So, and then if you want to pump a price, the important thing is that everyone is already sold, because the thing that's going to stop you from pumping a price up into the moon is people selling against you as the price goes up. And
right, taking profits?
yeah, if you've ever been in drawdown for a really long time, one of the mental things that you're going to face is you're going to get in your mind, shit, if it even gets back up a little bit, I'm going to get out. So they can't have that en masse. Like if everybody has tokens and they have the mentality that they're going to sell the moment it goes up a little bit, it's going to be very hard for them and uneconomical for them to pump the price up. But
Well, yeah, sorry to cut you. Go ahead.
but if everybody has already capitulated and gone, and then they pump the price up into the shorts, who's going to sell when the shorts start cascading to the upside with their stop losses and liquidations?
Right.
No one. Everyone's gone.
Yeah.
So
right.
often market moves happen after complete capitulation and boredom. People stop paying attention, they've given up.
I have noticed this.
They've exited, and then boom, the market moves. And at which point, those people get interested again and they start chasing it. And then all they're doing is basically entering at a level which enables the person to push the price the other way later through them. So it's actually
you put all those chasers underwater, and then they have to wait, and then you have your liquidity.
Yep. And they are
Bloody
very
smart,
patient.
but psychopaths. Yeah.
Big money is very patient.
I think that's the thing. I think that's the thing to remember, especially with these ETFs and large funds, is the fact that if they're posting $1 billion and they make 3%, they're doing okay.
Yep.
Or if they're making 10%, where everybody else wants the moonshot, everybody else wants 50% on their spot.
Yeah,
the ETF is happy to just move it around.
And so the silly thing is, that I just struggle. There's certain points in the market where you can jump and ride the waves with the whales and take it from bottom to top. And if you bought the Bitcoin bottom and rode it up and 5x your money, awesome. Chuck $1 million worth of spot in. couple of years later, 1,000 days later, you've got yourself $5 million. Yippee
Yeah.
ki But there's a lot of times when you're just better taking the small move and just compounding it. And
Hmm.
when the market is sideways, you're not you just not you just shouldn't go into any kind of big position. You just take what the daily offers you, take what the 4 hour offers you. It would take 50 days to make 50% on your money.
Hmm.
If you just make 1% a day, and actually it takes less than that because you're compounding it. But
Right.
that's versus if you bought something and waited for it to go up 50%. There was someone on I can't remember if it was YouTube or Twitter comments about ARK, and
Yep.
I made a comment about how you should probably take profits at about 70, 760 or something like that, 780. And
Hmm.
they made a comment about how they were going to hold it because it's a Cabal coin and it's going to 30x, or they want some huge number out of it.
Yeah.
That thing sat between, well, 35, 40 cents and, well, not even that, sorry, it was about 3 or 5 cents and 7 cents for ages, just going up
Yeah.
and down, up and down, up and down, up and down. Now, if they'd just traded the range that it was in for that really, really long time, they wouldn't need to hold
Wow.
it anymore.
You
It's,
said 3 cents, so but you're saying
yeah,
50%, right?
yeah.
That's still 50%.
It was swinging 50% up and down, up and down, up and down
Right.
throughout that whole range. So I quite strongly believe that the reason you hear things like hold, 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 the reason you hear
Hold.
that kind of
Yeah.
stuff
Yeah.
is because really that's what benefits the bigger players. That's the mentality that they want.
Yeah. I
Um,
subscribed to Real Vision for a little bit.
yeah,
Sadly, I must
because
admit my sins. I'll say like in this kind of context and situation, like I was a spot holder. Like I bought randomly in 2021 and saw, 30% daily uptrends, but I bought back then thinking, oh, I'll hold 5, 10 years and just see whatever happens. I actually bought Solana on a whim, only because Exodus had staking. So I bought that at $18 back then. It went up to 300, but I didn't sell because I was naive and really didn't understand the math. And even actually 2024, 2025, I bought I bought the Japanese unwind. Like I bought the
yep,
Japanese yen unwind, and then the Trump pump in the winter, I didn't sell. I just figured like kind of I was waiting for the third wave. I was waiting for the
yeah,
rate cuts. I actually bought the Iranian bottom, the first of 75 or whatever it is now. God, that narrative is just exhausting, but maybe that's how they're getting everybody capitulated.
up,
It's
down,
just a
up, down, up,
psyop at
down.
this point.
Yeah,
Um, but anyways, I remember after finding you and finding this stuff and just putting the fib tool on that 1 month candle of Bitcoin
yeah.
and seeing the top and being like, fuck. Like if I had known this, like I would have been great. And then I held down and I held after October 10 because I had no idea what was happening. And then you popped onto my Twitter and the rest is history. Thank God, because otherwise I was hanging around Marty a little bit. Shame. You know what? I met a
Damn.
few good people through that.
Yeah.
Whatever. We gotta start somewhere. You
No,
gotta kiss one girl to get more.
slay a dragon to find a princess or something.
Yeah. Nah, it was whatever. I don't know. I'm looking at all this as like, look, it is. I don't want to keep paying too much, but you got to pay for your education, and I can reflect on the things that I did okay. But again, a lot of it is execution and understanding the math, as you said, and digging through the narrative because there is so much. Hold, hold, hold. Now, holding can work if you don't need that money. Like you could
Mm,
passively hold for 20 years if you don't need it, but remember Blue posted, if you put $1,000 in Bitcoin and bought and sold within 20% of each top and bottom since, you'd have like almost 10 times your money. It's
mm,
just slow and patient. And I
Yep.
got to work on the patient part.
Yeah.
Got to work. I think that's another part, frankly, is waiting for the entries
Mm.
and kind of waiting for the tests. Trends get me because I think trends get me a little bit because I switch time frames too often,
Yeah.
and then I just and actually, can we look at this? What do you have turned on for your range trend indicator? Because I just have everything on, and sometimes I'm like, man, you go on a 1 minute chart and it's just like a rave.
So I don't bother looking at show broken touched
Okay.
in either respect, but then I have everything else on other than those two in channels.
Show
So
broken touch.
it's just that one and that one. I don't have
Show
some.
range trend broken touch. Yeah. Okay.
Sometimes I will turn those on if I'm just looking for, are there any levels around here that have been retested recently? I might turn them on, but most of the time I'm just going to leave them off. And that's it. Everything else just stays on.
Yeah. Okay. So in regards, we had this daily range trend that was broken, and we touched. I think it was it 2 days ago? I think it was 2 candles ago. I think it was on the doji there.
That
But we
one.
touched that range trend,
Yep.
and we had like two little reactions. Sometimes I look at time away from a daily range trend, and you think, oh, that's gonna give me a little more pump, and it just doesn't. But I guess
No,
it's fighting that with what we just activated below.
correct. Yeah. So there's a hold below, plus there's a prior broken trend that's flipping into support. So if this candle goes and hits something, it's got reasonable equivalent support pretty close
Right,
by. So hence
right.
you just get a 64,000 down to 62,000 move.
But
But then,
I want it to go down. So
yeah,
yeah,
they don't always do what you want.
son of a bitch.
They do what they're gonna
Um,
do.
I know. Yeah, and actually maybe this is a good leeway into I haven't God bless you in those CSV charts, but I cannot wrap my head around all the options in there. I have been looking at the dashboard
Yep.
metrics more.
Yeah. Yeah. The dashboard's pretty good because it's CSV data was kind of the very, very basic how I started, and it was the only real way to keep track of all of the big stuff. But now you got dashboard, and that's that can tell you what's been struck, what's been hit. You can filter it by activated times. You can filter it by time frames. You can do pretty much everything that you do with
So
CSV data and more.
so if we look at, I guess in terms of, really this game is a lot of trying to kind of seek what is the bias of the market going on, right? Like obviously we had a big move
Yep.
and it activated some longs naturally within that,
Mm-hmm.
but they leave, it gets on me because those numbers that they leave behind, which are just shy, you wonder like when is that retest?
Yeah.
Now looking at the hold, kind of the hold levels, and if I think I saw a little bit of you looking at this maybe it was somebody earlier today, but not having completed on, right? So basically
So if we come
what hasn't hit
into
its minimum obligation.
yeah, so if we come into hold levels and we look up filter, and then you're not worried about possible because it hasn't technically happened yet. You're only
Right.
looking at possible if you're trying to figure out what's going to happen with closes, but there's also range filtering down here for that.
I really like, I don't know if this was due, but the closing time frames,
Yeah,
kind of what is coming up. That's a nice addition if that's new.
yeah, that wasn't there previously. It was only available through here, I think, previously.
So when I look at this, if I'm just looking at active and non-completion,
Mm-hmm.
and I look at longs, like longs, there's 169, and shorts, there's 387.
Mm-hmm.
Now, statistically, that would make me think would that not be logical to think there's a short bias, or would it be by kind of weight of time frame? Like,
Yeah,
would largest
so
time frame matter?
time frame does matter, but it is more exactly like what you just thought. If you start to even out between shorts and longs, then the next step is, does it start to reverse? So at this moment, what do we got here? We've got active shorts. $387 active longs. Yeah. So we need to activate more longs, pretty much. And it won't
Yeah.
be as much as you think, because you'll be completing shorts as you come down. So,
Right.
and yeah, if we'd looked at that recently, probably would have found that as we were traveling up into 80K, you were adding shorts to the list and closing longs at the same time. And now we're basically going and doing the opposite of that. So that's where you could go shorts, active, and then take your fib 1618. Let me see, we're not going to be going to that one.
So wait, I think my brain gets wrapped up in this stuff a little bit. So there's more open shorts that have not met their minimum obligation,
Bingo.
but we would need to. So would that not point toward that would point towards going down and activating more longs?
Correct. And completing the shorts as you go down, both of which will actually
Right.
shift the balance. So
Right. I see
looking
what
at
you mean.
this, I mean, there's quite a lot here that are just in very reasonable distance. So 58K, we know that.
It's on my mind. But
We
then
keep
I think I outplay myself, and then I do shit that I don't need to when I just
well,
need to do like a fib hold.
yeah. I mean, this big stuff. The thing with this is you don't know when. No,
Right.
it's like the Japanese yen unwind would have just been a trigger to come down and hit a whole bunch of short targets and open a whole bunch of longs.
Even October 10th too.
Yeah, correct. It was just a big rejection on a high time frame. So all of this, there's heaps down here at about 37, 36. You imagine all the boxes you're ticking if you come down just to those 30s, and that's quite likely.
Even for the size of time frames for the 50s.
Yeah.
Kind of down to 58. And really, I guess then I look, you look at the weekly um the weekly hold that we activated that we're moving on Bitcoin right now.
Mm-hmm.
And the one fib 1 is 59.7. I guess that's trading view. But 0.5, 56, 0, 52. So kind of all seems within bounds of that hold. So
Yeah.
you're like, do we do a sweep through that, or do we has your I've been around you guys since like November, December, and I've just noticed a little bit of your evolution, or maybe you're just sharing more. But in terms of just hard closing a candle, I feel like it's more complex than that now. There was that discussion when things were moving around, like, did hard closing above the 1.6 even matter? Because then they just swept right back down through. Is that related to the front side, back side
Yeah.
situation?
Yeah. Range levels are very fluid. Trying to figure out exactly what the criteria is for a range level to continue its evolution is not the easiest thing.
Hmm.
The hold levels are quite simple, in respects. You
Right,
enter it. If you pull back out of it again, you're probably going to keep going up. Or if you
right,
enter it and you pull back down out of it again, you're probably going to keep going down. Um,
right.
what are the only real factors you need? You need to know the levels and you need to know when the candle's closing. That's basically it. If you're going to try and trade a high time frame one, then you just keep following the trend up and to the hold until it finds a reversal point, and you can even refine where those reversal points may be. So hold levels are pretty easy. Origins are pretty easy. holds and ranges created after polarity is where it gets interesting
I
because
think that's what I've been fixated on a lot.
yeah,
I'm looking for wick engulfments and not really just paying attention to simple hold trend movements,
well, the other side of it too
frankly.
is that a wick engulfment that's in the middle of a range might not be an actual range. It's just if it was created after some form of moment of polarity, then yes, it'll be a range. What I'm still digging into is what exactly qualifies as something that can predate the creation of a range, because
Hmm.
you got a bounce off an origin like this. So can that create a range even though it's already an existing origin, or does it need to create its own one? And if so, you know, there, technically there's nothing here on a daily range if that's the case. Whereas
Yeah.
maybe the 12-hour, because you're looking for actual origin untouched. So here we have an origin untouched,
Hmm.
which was created through this candle here. So this
Hmm.
candle could be the start of a range, and it's not technically a daily range. It's going to be a 12-hour range, and it's working its way up through it at the moment, which is also why when it hit the top of the range, which was here, and it polarized it into an origin, it then had that rejection off it. So
Right.
that looks like just a daily candle that pulled back down, but it wasn't a daily range at all in the first place. It was actually
Right.
a 12-hour range, because the daily range doesn't have a new origin. It doesn't have a moment of polarity, so this does. It created a top, rejected to the bottom, and now we might be looking to break out of the top of that 12-hour range. And if we do break out of the top of that 12-hour range, we will then probably end up with two yellow candles in a row and a daily hold. So the 12-hour becomes the daily as we head towards the weekly.
Look at where they put the 8-hour though.
Yeah, that's
That's and the
trolls.
weekly fib is right under that.
Bloody trolls.
If you put the weekly fib on, it's literally right
Yeah.
underneath of that. Yeah.
So
They're
you
just like,
wait.
no. Yeah.
I mean, that could get
Dickheads.
up and out of there before
It
close.
seems like with the pressure of what's going on, um, it's gonna do that, and I still want it to go down. But see, this is maybe one of my psychological problems. Is I think, okay, I'll ladder a little bit more, but I should have counter traded. But the times I counter trade is when they turn it around, and you're like, fuck. Now I gotta manage two things.
Yeah,
Um,
I mean, the easiest thing to do for trading is look left.
yeah,
It's what's over on this side. And in some cases, it gets pretty tricky when you're dealing with falling out of the bottom of the 2024 type area or 2025 area, is we're now all the way down inside this. Yeah, and this is.
right.
But if you just
Well,
want to
the
make
crazy.
consistent
Sorry, I
money,
was gonna say the crazy part of the range we were in for 3 months there is that it was this same area that we bounced out of.
yeah,
We just went a little deeper this time, but that fall felt pretty steep.
yeah,
Hmm.
all you really have to do is chuck some fibs on candles back here
Yeah,
and scalp them. That's
right.
we would have touched that probably. Anything that's
So
that
we're
far over.
probably, have we gone, did we break 65? I don't think we've gone over
Nah.
65 yet, right? Now that like I say, there's a 2-week reverse hold wick right at 64,903. And I just wonder if that's why they're also hovering so much, because there is some rejection right above.
Oh, there's plenty of rejection above after today's close. And some of it's pretty close. So
Yeah, can you do your entire YouTube video for me live, please? Okay.
I did it. I did it today.
You know what? I literally painted the living room for my wife all day and watched a little, but my right arm is gonna fall off.
Let's
But no, I
see.
think I saw you talked a little bit about it with Biggie. Actually, just specifically, because I did look at a little bit of charts once I got to sit down. That 475-day Bitcoin closure from yesterday.
Yeah.
Um,
That one.
yeah.
Yeah.
Like, do we end up trapped in that wick? Does that give us kind of our range from hold? Because it didn't touch the hold.
No.
It was just shy.
So yes, it might. 69 could be resistance if it comes back up and hits that. But at the same time, 58 could be support. And also 58 could bounce to 69 and then bounce down again.
And
So
it's really 50-50 right now which way that
bingo.
goes, because we're under trend. There's no other trend.
Yeah, got
There's
that
no
one.
top trend. Yeah.
So there is also where are we sitting in relation to this accumulation candle. So you've got to look at that as well, which is got a 50%
the 50.
at about 72. So
Yeah.
72, which is the 50 of that, plus the trend, pretty much line up straight above us. So if you were to travel up to 72, there's a pretty good chance that that's going to be rejection. But excuse me, with the amount of time you got on this candle, it could really do anything.
Right.
Because it's big enough to take us
no,
all the way down into accumulation. Like it could take us all the way down into that 40 to 30 area before, reversing back up. Or it could go up on a big liquidity sweep before coming back down. For the future, you'd want to watch things like this 109 level. That's going to be a problem one day.
I was gonna say I'm so used to 109 on Solana. Don't talk to me about it. Where's 109.41, man? 417.
I want 109.
417. I can't remember my own phone number, but I know that.
109, 109, 109. It just keeps showing up everywhere.
Well, it's almost 190, just to bring that one out for you.
Yeah. So then we got the shorter term stuff. I think so we opened outside of the wick here. We haven't hard closed it. Body bounce 64. We haven't hit this yet. So there's even just a move up to 64 is enough to see. What was it? 64,800 is enough to send it back down again.
Well, that lines up with that 2-week inverse.
Yep. Now, how do they basically avoid that? Is they try to stay above these levels for longer. So it's about keeping the price here, closing the candles, and then having some kind of support underneath to offset it. And that might then give you a
hard closure.
Yeah. That's the kind of thing it needs. It needs a test. So it needs to test it, get back up, hard close it, and then head up from there. But
you need to make an indicator that says which way it's going to go, up or down, and then you can retire forever.
Well, it's probably doable to a certain degree. This new backside testing one, this is pretty cool.
So yeah, can you like handhold me through that like a kindergartner a little bit? Because it really does. I've tried to look at your pictures, and I can't quite. Well, I'm juggling a lot, but it's not quite galvanized in my head. Like it kind of, again, some of it looks like it's a reverse hold, but then I think it's what the middle and the front side part that gets me.
Yep. So look at what we're going into.
Where's that?
So that's our resistance there at 65222.
65, yeah.
And 65657.
That's it. That's what I'm saying, man. It's
So
spicy up there.
it's got 20 hours on this candle. What it's really got to do is it's got to poke up inside there and close up inside those levels if it really wants any kind of chance to head to the upside. And that's kind of why it's almost a good thing if it just hangs around here for a bit and then goes up just before close. So let's see if I can find. So there's your dailies.
You just wonder with all the high time frame kind of pointing down or trends that they've put above at when it's just gonna die.
Well, it'll die
But
after it
then,
takes liquidity is basically it. And
right.
if they, if whoever's buying here, because this, sure, people are getting liquidated, someone's selling, but there is a buy to the other side of that. And
Baron Trump, I'm pretty sure.
Yeah.
Probably.
So whoever's buying down here is going to want to sell somewhere else.
Yeah.
And the idea is, and what you're seeing right here, right now, is if we get this backside form here and we break that level and we bounce off that, there's a pretty big air gap for it to run up on the daily. And of course, it can run into the weekly before it does that. But it's kind of about the timing. If it pushes through the weekly in the next 20 hours, closes, breaks the daily, it will push up and it's going to go for one of these higher levels.
And it would have to get above both of those to have a chance?
Yeah.
Or even just put it in the middle.
In the middle would be.
And give it another week.
In the middle would
or
be
would
an
that
absolute
break
troll.
it down?
But it could do that. Yeah, they could do that.
Yeah.
Chuck it in the middle.
We've seen it.
Yeah. I mean,
but in order to have that run, it would have to be above both of those.
Yeah.
Which I guess is not that far.
No, and if you think about where the weekly 3618 revisit is, it's above both of those. So if we were to go back up to that 66019, we're actually going to be up inside these again. The question really is just when does it do it? Because if it does it too soon, it could just come up, reject back down, close underneath, go down again. This could become a hold, and end up going deeper. And there's a pretty big air gap before you come down here and hit 48s and 43s, and so.
But Trump is negotiated with Iran, so only up.
Oh yeah, of course.
Yeah, no, and it always at a teeter point.
Yeah.
What was I gonna say? It was something to do with how we came out of that last range. I had a really good 2-3 months where I was consistent, and then when we these times always get me, and I think it's because I'm not patient enough to just let some structure develop. And again, that's what I'm working on. I think I need to look more at, I look at the higher time frames, but I need to trade more weekly levels with the amount of attention I can put on. And just look at those fibs, because they give you, even if you're not right on the money, you're still at potent levels. If you at least look at kind of fib 1, fib 0.5, 1.6 of a weekly range that we've closed out of, it's hard to go wrong.
Yeah.
Even if they push a little. But that's always going to be personal to everybody. What was it? Now that weekly short at the top of the last range that we were in, where does that go? Or that was the 66?
This one?
Yeah.
So this has already hit the bottom, and it's just kind of doing its little revisit to the top side. So
did we ever revisit from the kind of December, January one there?
No, there's a couple still to the upside. So the revisit rate's about 95%. It's roughly the same as the break rate. So there's always going to be
Right.
something that we don't revisit, but this one just makes a lot of sense. Like if we look at this range over here on the weekly, which got tested here, we then created our first engulfment here, and we come across here and we've hit that, and then we've got the 65,353. So there's a couple different ranges in play, all inside this area here, and
Yeah.
it would make a lot of sense to go up and at least touch that level. And then do we reject off these two, or do we creep back up inside and do that test? Do we close back over that and then head up here to the 50% of the range? That's also possible. So, because a lot of those big time frames that closed today, they put resistance in here at 69, which is roughly a 50% retrace of this weekly distribution. If we came up to that 2309 area, and that lines up with where a lot of those wicks are on those high time frame candles. So we might get up here. Really,
Pretty
just
derpy looking Head and Shoulders.
shit.
Little
Wonky.
little wonky, that one.
Yeah.
I have to say, coming, at least hearing from you sometimes, and just seeing PA as I learn more, it's like I feel like if I can learn through this last like 8 months, that when we just actually move normally, kind of like it's gonna feel easy. Because
Yeah.
I don't know. Is it just me, or is there just like max time manipulation sometimes? Like there's always manipulation. It's all manipulated.
Oh,
But
this part of the market right now is just designed to make you quit. So makes you disinterested. Yeah, I mean, if I look at this, all I see is price that's slowly grinding to the upside.
Yeah.
As long as it keeps grinding, it's going to end up probably at 70K or 68K, or certainly 66.
And
We just don't know what happens after that.
and this would just be purely off of what we hit in terms of like getting back into these old weekly holds.
Yeah.
Is that really what you think is just driving this pressure?
Yeah. Yeah, we ran into some pretty big holds, some of which should play out before any move down, kind of based on time frame. So if we have a look at what BTC landed in,
I don't think I've hit that triple line button before. That's good.
that one,
That's nice.
yeah,
Yeah, I've always scrolled down to the hold level button, so that's good to know. Thank you.
Yeah, burger button. Okay, so we want active not completed, longs, bodies. Okay, and then we want activation time. Then you just, if we look at some of these, we got the 2-day. So you would really expect a 2-day to play out before some kind of leg down. You've got this 50-day. Now this 50-day
entirety or just the 1.6?
Minimum of the 1.6. You wouldn't necessarily expect anything higher, but this 50-day move here. So if we look at when that was created, that's back in the 22nd of the 10th, 2024. So that's really old. it's definitely back of the range. Okay.
And its first touch was just this month. Hey?
Yeah. So this 787 is quite recent. So that's more like a front side on a really high time frame. So we'd believe that this 50-day would have a way bigger chance of actually getting up to 65,476. But once it's hit that, does it continue? Don't know. That's just the minimum retracement. And sometimes what happens is they just hit that level and they dump. It might poke up a little bit higher than that and complete that weekly retest of the 3618. But it's kind of a combination of the fact that it was created right on the backside of the range. It's been sitting there for a long time. it's pretty spot on with where we went down to, and its minimum move to the upside has a lot of confluence across other things that are going on, whether they're the 2-day or the 1-day or the weekly. It's all there. These bigger ones, they are difficult because they're quite new. Yes, we've entered them. Are we going to go to the target now, or are we going to go all the way down and accumulate and then come back up later as part of a future range that might go all the way up to 263k?
Wow, and what's the bottom of that hold candle?
Oh, it'd be at 787 days.
Is that
the bottom of that
like,
hold candle would probably be the bottom.
$8.
What is it? 38k. So
yeah, okay.
Yeah, so we could go down.
So
and
that's
test.
revisiting the yeah. That's basically the bottom.
Yep. So it could go all the way to the bottom of that thing before it actually reverses because of the size of the time frame.
Right.
And then you get ones like the 28-day. 21-day. Now they look like they're potentially reverse holds because if the entry is here, it was created on the front side.
Oh, what's happening?
Loud alerts. Don't know. Soldiers did something. Or BTC. BTC created a 4-hour origin. So this one was created on the front side. You can have a look at it and see.
So when you say front side, you mean on, like, what does that mean?
Well,
on the downside of a range and pivot?
So this would be the backside of the range.
Okay.
So if you think about ranging, plural.
Right.
We create a hold. We have multiple candles to the upside. We create a hold. We have another candle to the upside. We reverse a little bit. We create a hold. We have multiple candles to the upside. As soon as we've done this kind of second run here, this is definitely on the backside of the ranging.
I see. So
when we go down and we land in this hold, which is over here somewhere, we bounce because it's on the backside. But this hold is on the front side of the range. So it's reversed, but it's only done these 2 candles to the upside. It's come down. It hasn't done another ranging to the upside yet. So this is still kind of on the front side of the range versus this is on the back side of the range. So these trades off the backside are the ones that are very, very risky at the time because it wasn't front side. It was front side at the time. But now it's become backside. It becomes very, very low risk. And that's these bounces that you see in here. This one
that's also due to polarity and time away?
Yeah, bingo. Yep, because it's polarized. I've spent all that time away from it. It's very old. So now that we're over here, well, unfortunately, this one could just break. We've got 6 days to go on this. We could also creep back up inside this level in the next 6 days. We could creep back up inside that hold in the next 6 days. And then we might actually come back up and test like the halfway point of this, something up around that 70 area. Or we could start ranging to the upside. So yeah, that's
only once they bounce lower for me and then go up with momentum. It is. It's hard to believe this grind is more than capitulation, and then they'll do a little sweet bounce. But maybe that's just what I want versus what's possible.
Yeah,
but
I mean,
with those rejection points, I guess, like you say, it's when they do them.
Yeah.
Do they close a weekly and give a structural balance underneath, or do they do it within the open candle?
Yeah, I mean, you do have some old stuff like, see this 547? So that's a 2024 hold. Start of it
closing above it.
Yeah, start of it was there. Target is 91. So
moon boy, we're going to the moon on that one.
This is the kind of thing that can bounce. Yeah, it's old. It's still technically front side because there wasn't another range after it.
Right.
And so you'd also have to look at things like where's your trend? And the trend in this case definitely is causing a problem. We may have actually hit the trend and come back down. So that was BTC.
Yeah, that look on the chart doesn't pull it up, huh? Not
No,
to put
sometimes
more
it
on the
does.
dev's hands.
Yeah, it does on some of them.
I find it does that same way.
There you go. So this is already a trend to hold type move. So we created the trend, we swept the trend,
Right.
we went back to the trend, and this is very similar to what I said earlier in the piece when we were talking about taking entries on origin levels. How if it's already been swept by the candle that created it or first touched it, then the chances are the next one probably can be a tighter stop loss because the sweep's kind of already been done. So same sort of thing with trends. This one swept all the way through, it came back down. This one didn't go so high, but unfortunately, that is still just a trend to hold. So that is a short from 80k. We know there was crap tons of shorts up there at 80k, and the target for that was this hold down here at 62. We've already hit it.
Now with that range trend under,
yeah,
yeah.
Oh well, this has 491 days to go on it. So this trend is miles away.
That was my question.
Yeah.
So I think in terms of the range trend scanner and the origin scanner, great tools by the way, absolutely beautiful. But I think I see a bigger number and I expect a bigger response. But is that a fallacy because that candle's time frame can move through that trend and just bungee back?
Bingo.
So in the same way with trends, you still have to kind of go greedy, but not really know which one will be the ultimate one that stops it.
Yeah, more so with higher
Where's the
time
true
frame.
bounce?
So with high time frame stuff, it's more so you actually have to not enter on the level.
Right. Well, and that's what I mean. Like there was that really beefy, I think it was an origin at like 74 or something before we fell through.
78.
And I just thought yeah, it was that one. It was like 11 different high time frames, including like, I don't know, 20 plus day. And I thought, oh, I would interpret that as like, that should have some reaction. But instead it just got demoed.
Check this out.
But a lot of things got demoed.
So Sol, break origins. Then search 78.9 or something.
I think it was around there, yeah. Man, even just the way they swept up and down through that range was just that first hover above 81, and then they moonshotted, and then not touching the top. So many blue balled situations, dude.
There you go.
Yeah, that's the one.
So now,
like, how does that not give some support?
Well, if you come across to the grouping,
depends when those close, right?
Yeah, correct.
Did they close under?
So here's your grouping. So 18-day is broken. It's broken break touched. So that's already broken. 1 day broken origin untouched, hasn't been retested. But then you start looking at some of these bigger ones, and all of these bigger ones, it's still just touched. So whichever one of these closes last, everything up to that last one can still recover. And because most of these would have come, or a lot of these have probably come from the top side, they could have another whole time period again before they actually break it. So you'd have to go through and basically check every single one of these.
And that's essentially a level being touched over and over until something doesn't.
Yep. So
29 and all that.
29 looks like it's probably the biggest out of all of that. So you could come in here and check out Sol 29 day and just see where that's sitting. Okay. So it's opened under the level. So that's the first ding dong warning sign. So
Now,
if any of those timeframes
yeah.
have opened above it, then they would be easier or a better chance to recover it. But I look at this and all I see is backside hold,
Right.
frontside hold. They don't want you to recover that level. So that's
Now, should that not have been polarized with the fact that that last accumulation candle before the drop,
yeah, it
like if
was. So
like should
that's
that not have led to a response, or is just some other bigger shit went down too? Like
uh,
some bigger time frame pulled it through.
I mean, there's this on the upside, which is giving it a
Mm,
hiding.
95.2.
Yeah,
What is that?
95.234.
Yeah, that fucker.
And actually that one too, all the way over there. That would have been a pretty nasty hit.
So with, I remember the discussion of that 3-day closure in that higher range, almost getting to that daily hold and never quite getting there. Did you ever figure out, was that just like a false signal? Because there was some compelling data that and chart that was like, okay, well that looks like it's moving up, but I did see we rejected off of like a weekly range trend.
Yeah.
Was it
The
just like,
the main thing that throws Sol out in particular is just if you look at the market cap chart versus the actual USD chart. So you can
mhm,
find that some levels have actually been hit. It's just because of excessive inflation of the token. It doesn't look like they have been. So you
I
look
see.
at things like the monthly levels.
So it's just the dilution factor.
Yeah. So you get things like this up here. Which was a perfect engulfment and then retest and dump. And we're underneath this 49 billion level at the moment.
Oh
Looks like
boy.
if we don't go back to it, we're polarizing it. And then of course, and
and
look where your holds are. Look where your backside holds are
and
down
there's the
here.
bottom of that range there too.
Yeah.
The bottom of that accumulation range in the middle.
Yep. So we're underneath that. Underneath that at the moment.
What about the one that's in line with the 216 in the middle of that hole?
That one.
Yeah,
Yeah.
that bad boy.
Yep. So that's another break level that it's. I mean, that break level's already been hard closed, but this potentially is the month that maybe doesn't go back to it. And if it doesn't go back to it, well, it's becoming more resistance.
Mm-hmm.
So if you look at the market cap shows the breakdown. Whereas if you look at these same levels on Sol, never touch the hold.
Right.
So it's a bit tricky, this token sometimes. But then you got this break level which didn't hit,
Uh-huh.
polarization, bigger rejection. So
Right.
sort of between looking at the market cap chart and looking at the USD value chart, you can pretty much explain every single move. It's really just
It's
depends
always
whether
in hindsight.
yeah
It's always
whether
in hindsight.
bingo whether the printing tap is on or off. As to which one of these is actually more relevant.
What do you think of Sui now? You've been training it a little more. She moves.
Yeah, it's just
Um,
it's been moving easier and better, so therefore just easier to make money
yeah.
off it.
Well, like I say, even it was kind of gladly and sadly one of my more major spot holdings, and I saw good pumps and just didn't recognize the times to sell. But the rate of change compared to Solana to Bitcoin, like Sui was almost 2 to 1 Solana when it was
Yeah,
actually hot.
especially through this
That'd be
period
nice.
here.
That'd be nice on perps, but then it also makes it more sensitive to Bitcoin too, huh?
Yeah. And now it's kind of at that point where it's very much at the bottom of its range, and it looks like it's about ready to fall off a cliff.
Looks like Zeus.
Yep.
Yeah.
Marty must have said it was good.
Trying to think. Now these like spike pumps that come out before news, like these literal little 5-minute spike
Yeah.
shots, like yesterday when they just pop up with a massive volume for 5 minutes. Is that something I try to look like what the hell did that bounce off of? Or is that just market makers pumping artificial shit in there?
Normally it's just going to be some kind of liquidation, which, let's have a look at this. So you just sort of had this high density band of liquidity just sitting up in here around 69. So
The
I don't know.
Miami Dragon. I like
Yeah.
it.
I don't know whether there was any news or not any news or whatever, but it's just gone and taken
Yeah, I
that
was
liquidity.
watching that live, and all of a sudden you're like, boom,
And then
son of a bitch.
we've now got high density stuff forming down here because people have taken the longs. So wouldn't surprise me if it comes down here. So then
Yeah, when sweep.
you've really just got to look at what the structure is at the time, and is there a reason for it to go there? And we definitely had a reason to go up to about 60. What do we have? 68. I'd have to have a look now. There's holds.
Yeah, it was kind of I think it was flirting with its weekly. I think it was like what did I have it charted to? I want to say 68.5.
Yeah. Let's see what souls landed
These
in.
last few nights, yeah, are 67.6 before that. Now we've touched the weekly 1.809.
I remember 67.577 for some reason was.
Yeah, that was the weekly 1.6.
Right, that was a TP I took.
Yeah.
Remember that one?
I very much look forward to waking up to money too. I'm working on it.
And then I started looking at Sui, just going, haha, this hasn't gone back to that target. I'm going to do you again.
Yeah. And you know what? I had a BC long from like BTC long from like 60. And after the first little bounce, I was like, again, you get that like, are they gonna drop it a little more? And so I cashed it, and then it goes to the target. I was like, that's where I thought it would go. So
Thing
that's
is,
what I
though,
mean. I just gotta hold those things.
or even don't worry about that. Just if you've made your daily quota, that's it.
Yeah.
It's good.
Yeah.
And
I know.
sometimes
That was when I was more consistent, when I was just happy with 1%, 2%.
Yeah.
And I had a great run.
If you do that kind of thing and you just do it every single day, and sometimes, like a day will open and the price will just sit there, and I'll go to the couch and I'll watch back-to-back movies or whatever it might be. Very little tends to happen in the first 4 hours
I
of
am
the
noticing
day.
that. I am noticing that the longer I have the most time later at night, and I want the market to do something, but it's the worst time.
Yeah.
And when they do things, it's like 4 a.m. Eastern, 6 a.m. Eastern when I finally have to be asleep. So I've just started waking up before 8 a.m. before the 12-hour. Before the 12-hour closes, before the 4-hour closes, that usually sets some intention.
Yeah.
For pre-market.
At the moment, there's just most of what seems to be happening is liquidity building throughout the day, and then New York pings it around.
Yeah.
Seems to be the play, and that's not terribly uncommon. Let's see.
Yeah, so I think I see better what you talk of in terms of backside, um, backside, front side. I guess you just you see it more in smaller time frames, huh? Like obviously it's much easier to see that large scale, like, okay, this kicked it off. There's this whole middle section, and then a return back, and naturally you're gonna get a response. But just make that fractal and smaller,
Bingo.
and you're looking for those things too.
Yep.
Now, is it in a sense, is it a kind of reverse hold? Because, like, is it that you see kind of like a short, long, short, and then an accumulation beyond all of it? Because that's kind of the thing I think that screws me mentally, where you'll say, look, if it goes up and then down and then through all of that and kind of accumulate beyond everything that just happened, then that's a higher time frame move. Like, is that
Yeah.
right?
So say all of this, every
Yeah.
single candle that's up in here. As far as a weekly goes, this is some kind of backside hold, and it's created this rejection here. And the front side is pretty much up here at about $1.65. So if Sui can recover, then it would come back up to this front side, liquidating all the
Okay.
people who have shorts above this dramatic drop. It would typically accumulate up there and then reverse to go lower. So that's what you see when you look at, say, a weekly. But if you were to go through and have a look to see what that level is, or it could even be this candle here, the bottom of this one, something could be that one. Anything that's in one of these lows could be something bigger. So if you look at
Like an origin level.
well, that funny thing is backside holds typically are origin levels, so that is an origin level, and
Right. On some time frame.
yep, yeah, even on that one. So yeah, backside holds quite often are origin levels. The but if we were to look at, say, 2 week, see what that looks like. See, 2 week, it's just two candles, still kind of the same. 3 week, eventually this thing will just be one candle. There it is.
Right.
One candle, one hold. So yeah, it is all fractal. When you're looking at what areas inside this whole candle price could go to, you have to start with this candle, and then you have to sort of break it down into lower time frames.
So that would be the backside, not the long, not the distribution candle. The short would be the backside.
Yeah, so the wick is often the backside, or somewhere down inside the wick, and normally the front side on the lower time frame is going to be up inside the body somewhere. So you could take this fib, put it on there, and it's pretty disastrous because it's under that. In 7 days' time, it's not looking good, is it? Nothing looks good right now.
Nothing looks good, yeah. But it won't go down. It all looks like shit, and it's going up.
Yeah,
that's what's grinding my gears, man. Sounds like you need a beer.
Yeah, I think I do. It's probably not going to keep going up. Just looking at that.
No, I know.
But price has to go up to bring longs in to go down if it is going to go down. But if you took that level there and then dropped it down to the weekly, there's your weekly candle. Then if you went down to, say, like a daily, you're probably going to find something in here like a daily front side, back side.
So that short squeeze was just to activate the short? That squeeze there? Is
this
that why
one?
it targeted? No, the one in the middle towards the end.
This one?
Like that squeeze went exactly pretty much back to the one.
There was a really big hold level down here.
Okay.
And it sent the price flying to the upside, which got everybody excited and chasing, and Sui's going to the moon, and Railpal's out there.
That was the top that I was like, oh, I saw it. I was like, I should sell this. I should
Yeah,
sell my defunct spot. And then I was like, ah, we'll see if there's one more bounce, and then death. So
yeah. I looked at it
whatever.
and said, if you're going to take the top of the range first, you're going to go
Mhm.
below. So it
Right.
was doing that meant that what they really wanted was to get under here. So
Right.
and that's where we are. And now it's a case of, do we break down further? Because we ended up building a whole bunch of whole candles down here. So
Yeah.
all of that can be classed as one accumulation candle that went to
Right.
the upside. So now, unfortunately, the longer you spend down here, the more time frames start to become resistance across the bottom of this.
Right. Yeah, because day to day you could have different medium time frame closures
Bingo. And these
and
candles,
more backside rejections.
you got it. They all start rolling into one candle eventually.
Yeah.
And if you spent this equal amount of time down here, then it's just 1 versus 1. And then, of course, next leg down.
It's really it. Yeah. I wrote something and it tried to. I think it was about kind of the trends bleeding, and kind of the higher time frame you look at, the less you want to be too exact. So even on a like polarized medium high time frame chart, you still wouldn't expect a direct kind of reaction right off of a trend, even if polarized. 'Cause it could
Depends.
sweep.
Yeah, it depends a wee bit on whether it's the first sweep of the trend or whether it's got lots of time to go on the candle. Yeah, that's kind of another aspect you got to take into account.
Yeah. Okay.
Because if they hit it, and let's say it's a weekly candle and they hit it on day 1 of the week, they could go through it for 6 days and then maybe
Right.
come back up
And then
afterwards.
that's the bungee.
Yeah, that's the bungee
Yeah.
cord. Starts
Okay.
pulling the thing back up. And it either ends up back up at the trend or it stops because of some other level that it closed under. So you might find that you've got a trend plus a horizontal level. And if it ends up under the horizontal level and stuck under it for that entire week, then it may never go back to the trend. So that's kind of why they don't always get a revisit.
Man, how did you do this before you had all these tools? The patience you must have had,
Um,
an obsession. I have a healthy
yeah.
obsession, I say. I tell my wife. I tried to talk about some of this and what I was gonna ask, and she just like nodded. I was like, cool.
The thing that always got
Like
me,
go make money.
the thing that always got me was just the when there was there's all these levels, right? So you got all these daily levels, you got all these at 4 hour levels, you
Mhm.
got all these weekly levels, whatever.
They're
But
all the same thing though. That's the trippy part.
and the thing that got me was when you had some small reaction off a daily level, and then you had
Right.
some massive mother of a reaction off another daily level, and it was always kind
Right.
of like, why is this one so much bigger than that one? Why is this
Trust
one?
me when I say that's what we're all learning
Yeah.
too.
And it wasn't
It's
until
like
I
why did that
really
one do it and that one didn't?
bingo, and it wasn't until I really started to zoom out that I realized, okay, this ain't just a daily level. This is a monthly level.
Right.
This is a 2 month level. This is a 4 month level. This
So
is
that's
a
where those data sheets and Confluence came in.
bingo. And when I started, it
Mm.
was kind of like, basic timeframes. And then I was like, shit, we've got 500-day levels. We've got 1,000-day
Right.
levels. And the older something gets, the more there actually is. So you really start to find that it's actually quite easy to scalp new tokens because they don't have a lot going on.
Right.
And then over time, they'll develop something.
Then
And
there's a lot of those backside holds and random rejections and
yeah,
all that.
and the more time something
Right.
spends in an area of chop, the more there is, and the harder it is to actually trade it. And it's one of the reasons why
Right.
Sol had such a huge run in the first place, because it just went down so fast. It didn't really have much to stop it from just traveling back up. And new tokens, they're going to go into price discovery, and they don't really have a heck of a lot. They'll have some fib levels, and they'll have some reverse trends, but they tend to create their own resistance by how they end up closing under a trend. And so they'll just keep going up until such a point as they create something which stops them going up, and then they reverse.
Right. But who does it? Who does that?
I don't know. Lizard people.
The master algo.
They ain't aliens. It's not us.
It's really strange, man. Strange stuff, but it's fascinating. I love it. Truly I have to say I don't have any other questions. I'm sure I have a million questions, but I don't have any questions right now. Any parting words of wisdom?
I'm just trying to.
I know I ask a million questions, so I
I'm just
appreciate
trying to-
your patience in Discord.
I'm trying to avoid coughing.
Cough away. Or like I said, I'm having a Guinness right now. What's the whistle? Get some iron.
That was good.
Mm-hmm.
It's a fine balance between drinking water and having to go to the toilet all the time.
Right. Well, I'll probably give you a pee break here, because as I say, I know you got a pretty full schedule, but as I say, I'm kind of at the end of my mental bit too.
All right.
So I think, yeah, I gotta look for probably secondary support touches. I think it's what gets me, is I see a structure, and I want it to be the support right away. Like even a new range trend.
Yeah.
You see a range trend created, but I need to, I'm sure it's a kind of amateur mistake that you think it's already support or resistance immediately before it's been tested by the next candle.
Yeah.
Or the next few candles.
When in actual fact, you just need to be waiting for the thing to get tested. Sui looks like it's going to close up inside the weekly origin. And if it does,
there's still a day, man.
Yeah,
there's still a day.
We can still troll it.
Yeah. Well, I can see and you can feel when you're like, okay, wait, they've changed the tide, right?
Yeah.
It's like you could kind of like even this. It's like, why is every little trend being closed over slowly? When you're like, this hasn't been like you. It was just like 9 straight days of down, and it makes you think it'll never go up. And then it starts going up, and you're like, well, where's the retest? There's no retest.
No.
It bothers me.
I actually look at this and just think they're probably just going to keep this thing here long enough that it doesn't really escape that 80-cent mark. It's not going to it's not going to shift that trend. But there's probably going to be some more upside to this before it actually really goes totally down.
There's all this inflation data. Do you follow that side of things? I know, I'm sure you get a lot of.
It doesn't
just pure charts, huh?
I laugh about it. I laugh about it afterwards. I look at it and sort of go, okay, what is the thing that people are gonna link this to?
What do they attach to this?
Did Binance do this? Did inflation do this?
Fucking Binance. There's still a group of people I check in with, and they're all like, fucking CZ. You're like, you really? You don't get it. Even CZ's not in control of this shit.
There is certain types of structure that you used to see regularly being formed before things like FOMC, but it was more a case of things like they would create a really eroded range where they would just test every single level, and then FOMC would start and the price would just spike straight through to the untested level at the top and dump straight down to the untested level at the bottom. And so you could tell that the structure was being engineered to have some kind of pump and dump, but and all you'd do is you'd sit there and you'd wait, and whichever way it tagged first, you jump in and go the other way. So that was the way to trade FOMCs when that was kind of the narrative. But it's still.
I wasn't doing perps, but I do remember that was the vibe of like 2024, 2025 early even, was just like big sweeps and bounce.
And it was always
even one of your videos.
outside
I
of
think
the
it was your range
range.
trend video.
Yeah, it was always outside of whatever the range was. Like they'd range in an area for a while, which kind of got people thinking like, the top is $100 and the bottom is 90 or whatever. And but everything they were doing in that range, everything was tested, both top and bottom.
Right.
And then the next thing you know, the price is hitting 120 and it's hitting 80. Yes, that's
Right.
and a day later it's back in the middle again. So
Yeah.
that's that kind of stuff. Yeah, sure, it happens. Nowadays, it just seems to be more about boredom, capitulation.
Right.
These are
But now, would you
Hmm.
say this could be like ETF, especially with their handle on Bitcoin and how Bitcoin can spill over, like with their, billions of dollars of influence? Is that enough weight for
Nah,
that? Because they can, again, they can create a shift that, maybe there's a few whales out there that could, but they're not going to do it in that institutional grade. Like they're
the
just extracting.
ETFs don't get bought on market.
Right.
So there's if you were
Oh, okay. Like
to
they're
look
not
at
over the counter.
and it's kind of why the Asian ones failed, like the Hong Kong ETFs failed, because it's not really what the institutions want. So the institutions want
Right.
the ETF to be settled with some form of intermediary. They do not want a native transfer your Bitcoin in and out of the ETF thing. They want to be
Right.
able to you buy the share and then they have T plus
Yeah.
2, and so they can have up to 48 hours to settle the underlying asset. They can choose to sell it if it's worth their
Right.
time to sell it. So if everyone withdraws from an ETF and they want to sell the underlying asset, and there's
Right.
nothing that says they can't over collateralize an ETF. So if they want to sell it and the market's gone up, they could sell off the asset. Now that person exited the ETF at a price. The institution, being BlackRock or their main market maker, goes and balances it and makes a profit on the spread. So then
Right.
the other way around is true as well. If the price is to go, to the upside, and a whole bunch of people want to buy into that ETF, well, they can because they've chased the long, but they've got a couple of
Yeah.
days to get the price down before they have to fill the ETF. So there's always that
Right.
sort of T+1, T+2 thing that exists in between. And so it's no surprise that you see big inflow days into ETFs and then you see downwards dumps. It's no surprise that you see Sailor buying OTC and then you see the market drop. The old saying of Sailor always buys the top or Sailor buys tops. Well, it's actually probably more a case of Sailor buys off an OTC desk. The market is then driven down, so the OTC desk can replenish if they want to at a lower price
Right.
and therefore
Right.
make money on the spread. And
Yeah, that makes sense.
if they're really, really happy to sell it, it's because they don't believe it's going to go up immediately. Otherwise, and when Bitcoin was at its absolute
Yeah,
bottom
fair.
and he was buying OTC, he was paying a premium for bulk purchasing, and that's because effectively they believed it was going up. So they wanted to
Right.
hedge their risk. If they're going to sell it to you, they want to sell it to you above market price for volume
Right.
because they have to replenish that volume and they're going to lose out on the profit of it going up because they believe it's going up.
Correct.
Smartest
Yeah,
people in
okay.
the world would be OTC desks. They've probably got a
Right.
really good finger on which way price is going to go. So
Bet you they got FibLab indicators.
I don't know.
Eh?
Maybe.
Yeah. So basically, if I did the opposite of everything I think I should do, I'll win.
Probably.
There's a lot of like counter intuition.
Yeah.
I'm new to this space in a time frame sense. I've really only been I've studied like perpetual or futures and really I guess like deeper TA. Like I said, I was trying to pay attention to waves and kind of macro and learning things that way. And some macro is important in terms of monetary management policy, etc. But we've had bull runs in tax hikes. You know,
Hmm.
some of that doesn't matter. It just depends on what's the appetite in the market.
Yeah.
But also probably what origin did we just hit type shit.
Yeah.
So
What?
seeing that now, I will say after finding this stuff, I don't. I will see things, and then I'll go on Twitter to, you'll see movements, and then I go on Twitter and be like, oh, what are they attaching to this? Instead of being like looking at Twitter and being like, oh, hey, I should go look at my charts now, because that's what they want you to do.
That's what I tend to do. I tend to look at something and then just out of sheer entertainment,
Yeah.
I would tend to go and have a look and be like, oh, okay, so it's. I mean, every narrative. Remember the Mount Gox one? Mount Gox.
Yep.
Mount Gox moved some Bitcoin. The price just dumped.
Yeah.
It's like, okay,
Uh-huh.
it's all just the Germany
I
sell
know
off.
who
The
pays these people.
the unwinds. And
Germany look pretty good now, man.
yeah.
They look pretty good now.
So it's just there's always someone who's going to try and attach a narrative to something, and it's human instinct to look for a reason for things,
Right.
some kind of understandable reason. Also, if you lose, like if you've lost, you're looking for some reason why you couldn't have seen that coming.
Yeah.
Because you don't
Right.
want to think you could have seen that coming and still lost. Like that's shit. You're an idiot, right? So
Right.
yeah,
To
there's
look for that backside, front side,
yeah.
50-50 kickflip.
And then there's just times like I just look at this and I just go, when's it been any different?
Yeah. But that's also what they preached, right?
That it's
That was
always
the
this time is
largest
different. This time is
Super
different.
cycle was the narrative.
Yeah, this time is different. This time is different.
Super cycle was the narrative.
And there we are. We start taking profit. We end taking profit, and then it goes, and then we wait for some dots to appear, and then we DCA again.
Right. And even within, I had done some subscription information, so I was trying to at least get higher level understanding. Real Vision did have decent macro kind of monetary education, but when it came to when I look at the chart TA, because they did have a guy that did stuff and he talked about, I don't know, random 56-day cycles, or oh, this one's going to be a translated right cycle circle half arc thing. You just like people just make this shit up otherwise. Like now I look at trendline charts on Twitter and you're like, ugh, what is that? Like, did you use Mario Paint for that? You just like put one long line and be like, look, it dropped below.
Yeah.
Like, it's a little more than that.
300,000 views. But
again, that even within these guys who, they do run hedge fund level institutional information, they were not saying like you should sell here. Nobody ever tells you to sell.
no.
They always say, "Oh, this is a great buying opportunity," and sometimes they buy the bottom. But when you're not top tier, they don't tell you that for 2 weeks. Then they'll tell you like, "Oh, that was a good bottom, wasn't it?" You're like, "Wait, the one that just happened?"
Yeah, the one that I didn't get.
Right.
I think if someone just really wants to buy a bottom, or buy the point at which the price is likely to reverse, they just need to look for the bigger range trends, the older range trends, like this thing up here that's come from the top, which created this October 10 dump. It's contributed to that, and that we're getting closer and closer and closer to. And by the time we get to the middle of August, if the price has done nothing but go sideways till the middle of August, and we go through that trend, then you could argue that this is enough time in sideways consolidation, and breaking that trend would start the cycle to the upside. And you could start with like a spot purchase, and you could just add to it as structure started to form, and as structure evolved by time frame. So you'd start on the lowest time frame, and then as it started to evolve, you could start to grow your position. And then when you ran into your first resistance up here at $1.72, you could take half your profit off. You could let it come back. By that point, we've probably engulfed this 135 candle as a backside, most likely. And then you could take this back to the backside, you could re-enter, you could keep going. And that's the kind of thing that's eventually going to start to happen. And when you see that happen, that's when you've spent long enough here. Now, if we
Right.
get there too quickly, it'll be another rejection. It could also be about the right time for that final sort of dump. Like that was if you look at Sol, that was kind of like back here somewhere. You had that final little fuck you, that FTF, which can't say that
Right.
on YouTube. Um,
Oh no,
maybe, don't know.
you're gonna
But
censor you? No.
I don't know. Maybe.
Oh, you got an accent. It doesn't matter.
See that? Range frame
Yep.
rejection. So this was
Right.
kind of that final just oh down we go. So
Yeah.
we still haven't had this.
Right.
And it's that kind of thing that really often signifies a bottom. And it could come anywhere between now and as we come through here.
hmm
Maybe August, maybe July, something like that.
Right. Do a deep dive.
Yeah, we could get that final warmth to the downside. And then you've got all of this, 53, 47, 30s, all that stuff. Accent shaming. Funny. So we haven't really had that yet. And this just doesn't look like it. It's not much from a volume
No.
perspective. It's
No,
definitely
and
not.
again, you compare it to even just the February. Was it February when we dropped? Like we're not that much deeper.
Yeah. I was looking at this combined volume metric yesterday, which basically just took sort of top 10 exchanges and just worked out the combined volume to try and because obviously if they're going to pump a token, they're going to spread their orders around, so it might not necessarily look massive on one exchange versus another or whatever. But it was quite interesting just looking at
But they're in cahoots.
yeah, it was quite interesting looking at the combined volume spikes that you got. Certain areas like this, which don't look that big when you look at them just on one chart, when you combined all the different major exchanges, there was quite a big volume spike in that you just don't necessarily see. So it seems they move stuff around or spread stuff around to try and.
Oh, look at that. Yeah, I'm just looking at that volume candle on that FU. That's a bad boy. That's the entire pump of our cycle.
Yeah, and
this year. Holy.
We created a weekly. Look at that. So it was a weekly range trend.
What was that? That was when Biden was in, eh? Not that it matters, but.
And it had a
November.
It had a hold, but it had already done a couple of hard closes below that break level. So hard close below the break level, hard close below the break level, created a range trend, created another break. That then became an origin. This became your range trend. And then.
So is that the origin range trend you would speak of? Would that be an origin range trend there, or that's not because that was the? What's going on?
Yeah, that was an origin range trend. So that's
okay.
That got polarized by that massive dump, and then it had that secondary rejection here. But look what happens when it breaks. Off we go.
Right.
So you're looking for those kind of trends. And once we break those trends, that's when you'll get a proper reversal. But at the moment, we're still just in a downtrend.
Yeah, no, we're shit.
Yeah.
We're poop.
We're so back.
We're poop. Well, I'm waiting for that. I really, I guess, is it like the last 2 years where it's kind of like subverted pumps compared to before? Like, was that our dead cat bounce in December? Was that the dead cat when we got to 140? Because I know I was looking through the holds, and that 144 had a lot of shorts.
So
like that 140 area.
The imbalance data, that chart that I made that picks up where the support and resistance is completely out of balance. Funnily enough, it wasn't out of balance here. It was out of balance here. That was
interesting.
That was interesting. Which the top wasn't really anything. It was actually this. So the
Right.
uh, entry was something like here, and the previous imbalance was around here somewhere, and then
Hmm.
that was the entry, and then actually that is what it picked as the top. So all of this was almost just noise to build whatever position. And you look at the volume that was in that upswing,
Yeah.
it's way bigger than the volume
Massive.
that was in that. So I think this was more the building of the position to come
Well, I
down.
remember the narrative around that was like that was Abu Dhabi buying Solana and
Is
all
it?
that other shit, all that other stuff.
Uh, I
I
don't
don't know
know.
what are those funds called, but I was like, who wants to buy that now?
Oh, sovereign
Because
wealth
they would
funds.
just dump it yeah, every time they said they bought that, it would always just dump hard. You're like, what?
Yeah, I
But
don't know if any of that stuff really makes much of a
but it was
difference.
again, I think it's all a psyop, man. I just that's why I don't read Twitter anymore.
Yeah.
It's like reading a horoscope at the start of your day. Self-fulfilled prophecy. You'll be
Mm.
looking for it. But anyways. Okay, brother. Well, I really appreciate your time, and again, I really thank you guys for doing what you do, and especially how much you give, because you could. I know it's good to have something to do, but you could also not take the time to teach people, and I think we all really appreciate that and respect that.
What's this
So thank
Trump
you for this.
token
Thank.
fight token in the first round?
Oh shit.
Trump pulled out a new
Are they
token.
are they making Melania the ring girl? Oh, Jesus.
Is it? Oh my god, is that a fight token? Fight.
Did they just do that?
Fight MAGA.
Fight to MAGA?
That's a shitty
What is
exchange.
that thing? Oh my god. They would try and do that. What's enough?
Oh, it's
I'm
never enough.
tired, boss. I'm tired, boss. Just $2 billion. What more do you need, brother? Is that it?
Oh,
That's weekly.
I don't
No,
know.
that's got weekly. That can't be it.
That hasn't gone so well.
Christ. No, even his. Yeah, you don't need that. Okay, brother.
All right, man.
Well, I need to use the restroom, but again, really appreciate your time and all your patience and
Yeah,
help,
no worries.
and I look forward to making you think in the future too, okay?
Sounds good. All right,
All
catch you
right,
later.
man. You have a good night.
Two. Bye.
Appreciate you.
Nice. Bye. Right. And we need. This is where we need Blue to come in and start singing everyone a song while I go to the bathroom. You've missed so much. All right. Back in a sec. Alrighty. So, who's next? Do we have anyone next? Or we just have a big gap? Somewhere. Okay. J Buddha. Oh, why did they have to do UTC plus 2? So, looks like we have a bit of a gap. All right. What shall we do? Suppose we can see what kind of trades are happening. Now, this is moving 10% on the day. Well, doesn't look like it's moving in the right direction, but down, down, down. Oof. That volume. That's nice volume. ASML. What's ASML? Is it a stock? No. Oh. So I'm picking that this is a synthetic chart of some description. So it looks like it's run into that range trend on the daily, rejected. It's on the wrong side of support now. So if it closes down on the day, it'll head down into this hold. And if it closes up, could engulf that. It may it may be able to continue from there. It's just kind of got to get back up over that level. Guess it didn't quite touch that range trend yet. The weekly doesn't look that bad. Maybe a pullback to that 1772. Sixteenth of the 7th, 2025. Could you have picked the monthly bounce? Let's have a look. How long's it been around? As in, was that when it was actually founded, or is that older than that? Okay, it's much older than that. Yep. That's your range trend. So you could have bought that range trend, you could have bought that bounce, you could have bought that bounce. Yeah, I mean, if you were just watching this on the monthly, you would start with this lovely little dotted polarized trend that's running through here, and anytime it came back to that is basically a long, and that would have been there. You wouldn't have necessarily known that it was going to go up as high as that, but that's because there's something bigger in amongst these two. So it's really big, whatever it is. 12 months maybe. Yep. So back in 2022, when it busted out the top of its original range, retraced back to the 423, that would have been a good spot to take a long. And it's gone up from there. And that's created this one. And now it's basically sitting at the 2618, the halfway point for this range. So as long as it keeps holding trend, it'll just keep going up long term. Yeah, it's it's basically got no topside resistance other than range levels. So it needs to create some so the only negative aspect to something moving like this is that it's separated from the trend quite a way. So if it was to reject from, say, the middle of the range here, it's a long fall back to where it finds any support. And if it closes up over the range, it could head up. Certainly, you wouldn't want to be trying to chase it up past that level 4. All right. So I suppose the answer to your question is, could you have told that it was going to explode? Well, when the trend is going up like this, and it's just a rain to the top side, top side, top side, and it's not losing it, and there's no resistance trend through here, it's going to explode. There's nothing to stop it. And the first pullback created by the smaller range flipped to support, and then it pumped up, created a bigger range. Now really it's a case of it's got to make a choice as to whether it goes above these levels or whether it rejects from here. And of course, like most things, it's right on the line. 16 days to go. Micron. Yeah, same type of thing. No topside resistance. Broke a really, really old origin back here. Hard closed. Polarized. Boom. Don't think I'd be chasing that one though. Because it hasn't really had enough of a wave up and down to be able to hold that. So like if it had done this, then there could be some level through here. But this looks more like the MicroStrategy pumps. So the thing about trading stuff like this is you've really got to be looking at it back here. You see that kind of volume just shoots up. So price is going sideways. You have that big spike. There isn't really a lot of volume in that. Comes back down. Chasing that up, that gets people in the game. This is eating all their orders before taking off. So this kind of increase in volume through that flat price, then all you're waiting for is it to break this origin. And once it breaks that, there's just no real resistance anymore beyond that. And it goes into genuine price discovery. And probably about the biggest range you could find on this is going to be something that exists between the peak and the low, roughly at about the halfway point. So if you sort of visualize that's just a candle, that's just a candle, it would be something like halfway, probably about there, something like that. And even that is massively overextended. So you could fiddle around in here to try and find a level that lines up with whatever happened there. It might be here. Yeah. You'd need to run this through the thing that actually finds all the different time frame levels and just see if you can figure that one out, because there might be something in that, but it's yeah. Could you have known along it? Absolutely. Would you have known where it was going to stop? Nope. There's no target. Zek. Whoa. Oh, well, at least it finally did that break retest. Not liking Zek. I mean, you can see the 6-month trend break. But it hasn't hard closed the level, so and it hasn't revisited the 160 down here. Mm. Yeah, it's kind of gone up too fast. If it closes out under that 443, it could be enough to send it down again. But it will have a trend. So if it can spend another 6 months up here without dying, then it might be able to continue. Look at that pump and dump. Amazing. I wonder what the narrative was that created that dump, other than the fact it was a origin range trend that just gave it a smack in the teeth. So for a weekly close, it's going to have a trend break. It's got a weekly hold above it. It's tested the break at the bottom here. It's going to create an origin at the base. But if this comes down a little bit, it'll open on the wrong side of the new trend. That'll give it the ability to reject it again. Bud in their system. So just out of interest, was the bug in their system discovered on May, the 11th? Beast mode. Bug. Oh. I mean, all that had nothing to stop it other than this hold down here. Three days ago. So if you look at this, how that played out, it goes for a run to the upside, which of course people are going to chase. Trolls this break level. Pushes up into the hold. Now if the candle closes yellow, it will create a range trend. Hits the top of the break. Doesn't hard close it. Comes from the wrong side of the break. Goes up and tests the range trend. Pulls back, first touch rejection off the range trend from the wrong side of the break. Gets above the range trend. Comes back to the hold. Gets stuck inside the hold. Polarizing the range trend. Goes and has another crack at it. Hits the back side of the support trend, hits the range trend from inside the hold without hard closing the break level. Only support left is this hold down here. The prior broken trend that hasn't been retested. The support range trend coming through here. And the levels down here that haven't been retested at 300 bucks and lower. There it goes. So some kind of news probably, but really just came from a position where it had not hard closed any support, got stuck inside the hold, went up, hit the trends from the wrong side, from inside the hold. Once it rejects the trend, it's got to go to a hold, but it's already in this one, so that's not going to be it. It's going to be this one. Meanwhile, the pump up had left all this stuff behind. And it pretty much come off the backside here. So it was a FOMO bounce off the backside. Front side's down here. That's where we're at. So now it's a case of what happens with this candle, because if that closes yellow, it's not breaking the trend, but it's got a hold up here, to reject it. And if it closes blue, it's going to move the trend, but is it going to be above it or on the wrong side of it? Because if it's on the wrong side of it, it's like what happened with that previous one. Here somewhere. Yeah. If this gets on the other side of that, it's going to keep coming down. So that's sick. If this doesn't go back in the next 18 hours as well, this break becomes the top of the range. So if it doesn't go back and it closes under 407, that's doubly bad. Okay. I think we might be about to get that 4-hour on Sol. We're inside of it. Yeah. So come all the way down to the base here at the 15-minute, just sitting on top of that trend. not a bad spot just to start watching it to see if it's going to reverse. We could probably look for a time arrayed entry, which goes all the way back to there. "33 minutes." RSI. Blues the legend at RSI. So it's not really moving enough to take a low time frame entry because there's just not enough percentage in it. Kind of got to wait to see if it comes back a bit more. So could just keep pulling down into this. People have been getting a little bit confident. Good morning. Yeah, it doesn't really involve that much. You just kind of sit here and stare at little lines. The talking, lots of talking parts hard. Keep wanting to cough. So 72, 90, 2H3, H6. Boo, not enough. Um, yeah, you to talk about macro. M2. It's because crypto lines up with M2 money supply. Oh wait, no, it's ISM. Oh wait, it's digital gold. Oh wait, it's a flight to safety. Oh wait, it's an inflation hedge. It's whatever the heck people want it to be, so that I can get views and subscriptions, and I'll talk out my ass until everybody subscribes, and then I'll get a really short sleeve T-shirt and live in my mum's basement. That's what crypto is. What's my favorite news cycle? Um, cat memes. Does that qualify? Nice. What else we got? 90 to our. Um, licorice root tea. Might have to give it a shot. Unchartable metals. What are the unchartable metals? Unobtainium, vibranium. Do they exist? Can we chart Captain America's shield? We've got a live stream for the UFC. Antimantium. Antimantium. Kryptonite. That's like Wolverine, isn't it? Antimantium. Kryptonite Superman. Almost at 12 hours. Yeah. Yeah. It's a pity. It might close under this range trend and come back down. But then that could at least give us an entry. $20. It's always a waiting game. Do I follow any other traders? No. I've got a few that I added. I asked a while back if there was anyone worth following on X, but you've just got to sort of follow yourself. I mean, you'd see it even from me. If I'm really intensely looking for an entry or looking for a trade, I'm pretty quiet in the Discord, so that doesn't help you in the scheme of things. So if you're following a real trader, they're probably going to be a little bit absent when they're actually in the depths of analysis or trying to find a trade. If you follow them to learn something from them, and then just you won't need them much anymore. Yeah, inverse Marty. Marty's the Jim Cramer of crypto. What's he call himself? A commentator or something? Adamantium. Do. You can spend a lot of time just waiting for candles to close, a lot of time waiting for entries. if this just turns into a trend deviation because it pushes down under here, then that's going to be able to send it down into the hold, and then might be able to get a scalp in this area. But it's pretty small stuff. It's 5:40. I was about to say it's thanks Neil. It's 5:41 a.m. here, but I'm looking at UTC clock, so it's 5:41 p.m. here. Okay. While we wait for 20 minutes, let's have a look at some of these massive closes that we've got tomorrow. Because I have a funny feeling it's going to be this stuff that really is going to kick something off. I guess that's today now. Tomorrow became today. If tomorrow never comes. She's got a lot of them actually the next day as well. So many structural closes. Look at that beast. I don't know, I'm just sort of waiting for this to come down into these lower holds so that we can actually get that out of the way. At this point, I don't really care if it rallies or not. I know it definitely can, because we've got the trend that we're getting back in underneath, and we've got this whole move to the 80s that we could do again. But it would just be nice if we just got those damn shorts off the books. Then you don't have to think about them anymore. Once we're down in here, it's pretty much all just looking to build a position over time. Whatever range it ends up in, you just scalp the range up and down, up and down, up and down, and just build the bag and build the position, and then it'll take off once it breaks through one of those big range trends. Tire to chop. Chop, chop, chop. Yeah, when you're looking at the really big stuff, you've got all these levels, but you don't really have a lot of tested levels. Like even this kind of thing is quite intentional, because 48k might bounce, but it may not hold. It's not really been touched before. You know, hard closing this and retesting this. It's all kind of, it's not till you really start to get down into some of these smaller ones where you'll actually find some tested levels, retested levels. Yeah, there's a lot of stuff pointing between 50 and 30. And then you get stuff like this where we'll shift this trend. We could stay above it, get a bounce off it. You know, top of that whole candle, which might act as the resistance at 69. But if it pushes through that, it didn't test these levels up here either. So it genuinely is in a bit of a no man's land. So you could get a bounce off either of these back up to that one. Then you got stuff like this just sitting down there, which hasn't quite been touched as well. So if you took another dip down into this, you bounce between those levels. And could come back up into that hold. Before we do that, they haven't quite touched that either. So I guess it's not the worst spot ever if you were going to start accumulating something. Where's the Trump trend again? So that is /was. It's pretty obliterated now. This one, that was the Trump trend. So this was his, I don't know what that was, soybean thing, something I think, where it dived all the way through the trend, stayed down for 6 days, and then came back up again. And then we just didn't quite touch it, didn't quite touch it, didn't quite touch it, didn't quite touch it. Deviated over the top of it, closed underneath it, October 10 dump. Trump trend. Yeah, the Trump trend destroyed. The Trump trend retest, liquidity grab, and insta dump was pretty cool. And that was the August Trump bounce, 2024 bounce, whatever it was, presidential thing, blah. The Trump trend. Every time we seem to interact with that, there was always some kind of big psychotic move up or down. Yeah. I mean, the good news is it's up around that 300 level, which I think was that top that we looked at on the daily update today. There was some kind of level up there on the high time frame, untested high time frame trend. So it's up there. Just DCA the lows and sell when you touch that thing again. Cycle solved. What's happening with hype? So hype's closes today, aka yesterday, didn't look too bad. See how they finished up. Okay. It's just purely from a horizontal perspective. If it went back up to like 63, 64, it could work through that again or something, but end up pushing back down to 46. What we want to do is find one with a trend. There we go. So high time frame topside trend. $245 days. So if it comes back down to the hold, start to buy and target the trend. Retire on the beach. And it's worth watching this, because if this starts to kick off from 59.41, if things just start to get really bullish, then you've got topside trend, fully engulfed range hold, 83 followed by 93 to the upside. It's stuff like this that I think just doesn't seem right from a timing perspective. But it genuinely doesn't look crap like a lot of the other tokens. On the weekly. Let's see. Yeah, so it's up inside the work of the whole candle. It's probably going to create some kind of downtrend that it's going to have to deal with on the weekly. 16th, 12th. Yeah, tough spot. So if it pushes up into the body of that hold, then it could be rather bullish. But if it comes down just a fraction, then it could be on the wrong side of the trend. This closed above the reverse hold, so it's still quite a bullish place for that price to be. So if the weekly strengthens up for tomorrow, it's probably going to push up. Particularly if it dips today and then starts to bounce, then the weekly closes well tomorrow. If it closes as a blue candle, ends up on the wrong side of the trend, push up will be doomed. TradingView works all right for basically any factor of 1440 because that's just going to keep rolling nicely the way they aggregate the candles. So 4-hour and 8-hour and that kind of stuff. Daily is fine. Weekly, monthly, kind of, but monthly levels in general can be a little bit weird because you get some months have more days than others. That's about it. And then sometimes within the same year, there'll be other levels. Like you can pretty much take any trade on a 3-day or 2-day chart as long as it's from within 2026. But if it's a level from 2025 or 2024 and you're approaching it in 2026, then it could be different. So that's where you're better off using this. Like. So this here, if this bounces now and doesn't create this new trend, then it can go all the way up here. But if this just hangs out here for one more day, then no, 34 days. That can't create that trend for 34 days. That's probably going to bounce. It's yesterday's close. So this is the thing that just kind of does your head in when you start looking across these different tokens. Is you look at Hype and you go, this really looks like it could just run off and do its own thing. So if this was to go to $83, it seems weird when you look at what BTC and Sol are up to. But BTC and Sol do have the ability to bounce, and they could take out all of that liquidity, all those shorts to the upside. And yet, Hype almost looks like it's just waiting to bounce, which is very different. Yeah, is there? I mean, if it goes and takes the top side first, it's obviously quite bearish if it took this, because then it's going to want to eat all that. But if it took that first, then yeah, maybe it's going up. maybe it's literally waiting for more shorts to open. It's got some pretty dense areas down here. Yeah, multi-time frames on TradingView are kind of troublesome. So the main issue you get is if you were to look at something like a 50-day on TradingView, there's going to be areas like this one, where you've got a candle which opened on the 17th of December and closed on the 1st of January. That's not a 50-day candle. So unfortunately, that kind of throws out all the trends. It throws out, all the structural levels, because they're not actually the same time period as these ones before it or after it. Fun times. But if you look at every single weekly candle, they're all a week. Misleading. I guess it's not really promoted for this kind of thing. Let's face it, it was kind of built for stocks and things where you had certain days. Not 24/7. It'll be really interesting to see what happens with TradingView when mainstream institutions adopt 24/7. This might get a little bit more bullish now. It's rejected the range trend. It's revisited the hold. It's pushing back up. Yeah, robots. Yeah, I think it's just a case of it looks like it's weak and sideways while it builds liquidity, probably around the 65 to 66 area. Oh, I'm getting sore from sitting in the seat too long. Never thought I'd say that. I haven't had my usual trip to the couch to watch Netflix. My best guess is we're going to keep baking cake, particularly they're going to want liquidity up here in the 65 to 66 range because that's where a lot of those outstanding targets are. And once there's enough, probably going to go hit that. And from that point, I guess more people will start to chase. And then we might come back down here and take some of this out. I can totally sleep. I'm on coffee number 3 for the day. Don't think I'm sleeping. Not for a bit. Not till tomorrow. Where's the next special guest? Hello. Oh, I can see a little circle lighting up, but I can't hear you. I wonder if it's me or you. Let's see. If you try to say something, I'll see if the mixer lights up. No. Doesn't look like there's any audio coming through. Is your mic on? Nope. What's going on? Yeah, I can see the little box flashing, but I can't hear anything. Okay. This is one of the really big hold levels we closed the other day. So can't help but wonder if we'll travel up to the 50% of this and then come down here. Wouldn't that be? We're back, we're back, we're back. Gotcha. This emergency test alert. Shut up. They're testing the national emergency system, New Zealand. I guess something's coming.
Perfect timing.
Oh, yep, I can hear you.
Okay, cool.
How you doing?
I'm doing good. You're probably pretty tired, huh?
3 coffees. Pretty good. I'm finding I have this aversion to drinking water. I need to pee all the time. But
Oh yeah, I'm the
Yes.
same way.
I guess one thing leads to the other.
It's
Oops.
a diuretic after all.
Yeah. No, it's it would be a bit more exciting if the charts were doing something, but they're just kind of hovering around baking cake.
Yeah. I was enjoying just watching you chart Solana and Hype. A lot of my questions already got answered
Ah.
by the first people. I had a few more, but
Yeah, I guess that's kind of going to be the thing, really, isn't it? Everyone probably has the same questions because they're just all the things I've missed in the past, and eventually, once 1 or 2 people have gone through, they've probably asked them all and answered them all, and here we are.
yeah. And you're only halfway through.
I know. 12. We're coming up. Oh, we've hit the 12-hour mark, right? 6 to 6.
Yeah, I think so.
Nice.
It's midnight here where I am.
Yeah. Normally by this time in the evening, I don't know what I'd be doing. Probably drinking. Sounds about right. Watching some TV, waiting to see if London opens and does something interesting. But
Yeah, that's all you can do.
yeah, lately it's kind of a case of you watch daily close, you know what trade you're going to take, and then you just spend a long time waiting for New York to open up and pump or dump. But,
Yep. I'm loving this HTF closes indicator. I can just keep an eye on all my closes here.
yeah. I've have you tried using the native candles once?
Native candles, do I have that? No, I'm a strategist. Not yet. Is that a Vanguard one?
Yes. I think you have. I think you have the one version of it. You don't have all these other bits and pieces like the trends and all that kind of stuff, but I'm pretty sure you have this, the native candles one.
Ah, okay, yeah, I do.
So that's
Okay,
that's
must have taken that off.
so you can look at the high time frames inside TradingView without having to go through dashboard if you want to.
Oh, yeah. Yeah, that's awesome. Yeah, I got that one.
Yeah, it's a little bit funky trying to do trends with it, but you get the general gist of it. Like,
Yeah.
somewhere
You can
along.
change the time frame inside the indicator, right?
Yeah, so you
Depending on
just
candles.
if you're looking for a daily multiple, so if you've got your high time frame, where did my high time frame closes indicator go? Delete. What did I do? Okay. Need to save this again. Update. Oh, this is the next version. This one's not finished yet. This is going to be the new one that comes out, which actually gives you a summary of all the closes happening.
Oh, cool.
So whether they are potentially
Sneak
breaking
peek.
trends and all that kind of stuff. So that's quite cool.
Yeah, that's awesome, man.
I don't think it's quite finished yet. So if you want to do weekly multiples, like say you want to check out a weekly close, you just chuck it on 1 week and then come in and change the time frame in here. So 50 week, like tomorrow, just change the period length to 50 with the base chart on 1 week, and that'll give you that 50 week close to look at just on TradingView. And then you can
Yeah, that's nice.
get a bit of an idea
You
about
could
whether
basically,
you're engulfing or not.
right. Yeah, it helps you just, have a picture of what the candle is likely going to do
Yeah.
before it happens.
So yours
I
would be, yeah.
I do most of my trades on the daily,
Oh, yeah.
just because I don't have much time to scalp. But yeah, that indicator has been a big help.
Cool.
Yeah, so I had a question about let's see here. I have a little list. Okay, so it's about minimum obligations.
Yep.
So is there a time when those like activate?
When you enter the body and exit the body, it's if you want to be really strict, you need to wait for it to close out of the body. By then, it could already be done. So that's the. So this one here is an example. It's entered. By the time the candle's actually closed, it's done. So that's where you kind of need to choose whether you take the risk of entering it. But if you enter it when it's quite low, so this is, say, best thing to do is find the trend. So you should always just try to find the trend. And so if we look at where the trend was at that particular time. So unless it changes, the trend is all the way out here. So the faster you fall into the level, the easier it is for it to come back out without hitting a trend, because the trend will be far away. And the slower you kind of grind into it, and particularly the way it grinds, like if it's up, down, up, down, up, down, then the trend could be really close. So this instance, okay. So trend is up here, absolutely miles away, hits the body of the hold, comes straight back out. Also, to even get to the body of the hold, it dove through the support trend. So that there is kind of like your ultimate long, where you don't really wait for that to close outside of the hold. You're just looking for it to touch the hold from the top side of the trend and then take the trade. And
Okay, so basically, like when the fib hold gets hit, it has a minimum obligation to
Yeah.
go and hit that 1.6
yeah,
or 1.8.
and the thing
Okay,
that's going to stuff it up is either going to be the trend, because it's just too tight, or it's going to be say in this instance, it would have been pretty hard to stuff this up, but if it had crept down below the support trend and then closed under the support trend, then it probably still would have achieved, just because the minimum level is just below the trend here. But in some cases, you'll have a support trend like this coming through, or you'll have a really tight resistance trend, which could be, just for argument's sake, let's say, shit drawing, let's say it's like that. And then this candle comes down into here, enters the hold, maybe closes under this trend, never gets back out again. Something like that. So this is the kind of thing that can happen. So technically the minimum obligation holds, the really high probability ones are the ones that come down into the hold, get back up above the hold, and they don't have any kind of other resistance, any kind of trend resistance or anything that's within the area of that 1618. They are just destined to go back up.
Right, and hit that trend and just dump off it.
Yeah, and also just what you're looking for is it truly on the backside of a range? So this is a range that's gone to the upside. So this is definitely on the backside of the range because it's all the way down here and you had another range above it. Whereas ones like this one, this is not on the backside of the range because you have this, but you don't have another one up here. So if the candle would maybe pull back to this point, continued up, done another engulfment, created a second candle, there would be something in here you could trade at a lower time frame just because it's we're 1-to-1 on the weekly. So you could take all that crap away. You could look for, so you just got this 1-to-1 engulfment and then you're rejecting off this level up here and you're thinking, okay, I'm going to look to see what kind of trade I've got inside this hold. First thing you do is put a line here so you know where that candle opened versus where that engulfment was. Then chuck your fib on here. Then dial it down a time frame. So we'll go from weekly down to daily. Come in here and have a look. And do you have anything on the backside? You've got this, which didn't really give another range. So then you got this all the way back here, which is tiny. So you probably wouldn't take a trade off that. It's too small.
I see.
So that was technically a front side on the weekly with really crappy daily on the inside of it. So it was not looking so flash. And the backside there, which is, well, that's the backside of the daily. Candle closed inside of it, came back up, rejected off it, dumped. So that's that would just be one you wouldn't take. Everything inside of it is crap. Even on the daily, the candle came down and closed inside of it. Not a trade. So somewhere over here is something all the way on the backside. This is the one you would take. That's what it hit. You could have taken that, but it looks like it might have already been done there.
So basically, the further you go up after the range, it gets more like risky to take those.
Yeah, anything that's, particularly if there's not another hold after it, and this is that's a doji. So dojis are also just a complete sign of indecision. So is that going to hold? Well, it actually did. It did bounce, but it also went right through it, before it bounced, as if it wasn't there.
Yeah.
So this is basically a liquidity sweep of what is an area of equal lows. So there would have been this hold left behind over here, and then kind of like a fake bottom here where when you sort of look through this hold's been tested, this hold's been tested, this hold here was tested by that candle, and then again by that one. There really wasn't much down here to stop the price. And yet everybody would have had their shorts, all their stop losses and everything down here, because that looks pretty safe, right? Until then.
Yeah,
So,
that was a good trap.
yeah. I mean,
I actually lost a decent sized a trade on October 10th. I didn't know nearly what I know now, but yeah, I got caught on that one.
yeah, that was a absolute shitter, that move.
Yeah.
You don't even realize what the heck that thing was when you look at it on a weekly. It was something ridiculous, like a 13-week or something. There's quite a lot of time in there. And yeah, that level was massive.
And that was technically an origin, or no?
It became one on the weekly
After, yeah.
afterwards,
Okay.
but it actually already was one. So that's, but just on timeframes that people don't really look at. That's
the beauty of the FibLab suite.
yeah. And if you checked out the daily, even if you just had the basic native candle indicator, if it was just in your routine to look at those daily closes every day, you would have seen it and you would have gone, oh crap. You probably would have put a line on it and just gone, oh yeah, danger if we ever get there. But yes, you kind of knew something was up because you've got this hold over here, the top of the hold that rejected. So that's kind of another sign that there could be something else in there, because that the very, very top of that hold candle is a distribution at some level. You know, wherever the price ends up closing lower, like here, if you just added all of those candles together, that is a distribution candle at that point. So however many weeks that is, like 1 days, 1, 2, 3, 4, 5, 6, 7, 12, 13, something amount of days in there would have made that a distribution candle. And then the same amount of days going up and hitting it could make that an origin. And then because that is so many days, that close above it is not a close above it, because that candle would be part of these candles if you went to that same time frame.
Mm-hmm.
So all that really is some much bigger origin level that got hit and dumped.
And technically, like, you could go down in time frames in that a wick and probably find like a distribution candle in there.
Yep. Yeah.
Yeah, if only I knew that back then.
Oh, I don't think many people. I didn't really even see that coming. It was not something I was really looking for.
Yeah, that fib hold there was the perfect catch of that liquidity sweep.
Yep.
Cool. I didn't know about the hold candle in the middle being the preferred way to take those fib trades. So that's gonna help, because I've been just taking as many of those as I can, and I probably have like a 55% win rate on those.
Yeah.
It's not too profitable because I don't increase my trade size.
So the other thing to do is just dial it down. So if you're looking at a daily or anything really, because there will be an entire range inside that candle on the daily. So in this case, this one's kind of higher risk because it's here and you don't have anything above it. But if you do take that entire candle and then start looking at something like a 4-hour within that same area, you might find that there is a proper 4-hour range that you can actually take a trade on. So
Yeah, I just like missed a Solana trade just like that on a 4 hour or a hold candle. I think
yeah,
I missed it by like 50 cents or something
yeah,
because I wasn't entering on the border of the box or the candle.
mhm. Yeah. Well, the backside candles can quite often bounce early as well. So you might have, say, a level like this one back here, and that got hit quite nicely. And then you got this level. And that got worked through, but when you come all the way over here, this was the backside of these three. So 1, 2, 3. And it didn't quite touch it, but then it just took off with volume to the upside. So sometimes the levels that give the quickest bounces, they don't enter them like that. And then you got to be a little bit careful about taking them when they do enter them, because that was actually the move. And so that'll only really happen off these backside type ones like this. The front side candles typically go inside.
And you're doing the it's like uh 10, 10, 10, 50 entries, is that right? On the
If
holds?
it was sort of automated, I would, but that's just because you're not there to watch it. All I've been doing pretty much since the previous top is just looking at the daily close, waiting for the price to move into an upper resistance to short, or waiting for it to move into a lower support to long, and then just taking a 1% or more scalp and moving on. And until we really find, until that high time frame structure changes, it's basically just grow the portfolio by 1% or more a day, and then just wait, and then buy it when it gets down into those lower levels again. Once we run out of shorts, basically, we've just got too many. The weighting of shorts is still too high,
Yeah.
and then we'll.
Yeah, it is. I thought that we were gonna go and hit those shorts a lot earlier, but they slumped it
Yeah,
back down again.
it's kind of running out of time. We've got, if it goes anything like the last couple of cycles, we've really only got about 90 days left, and in that 90 days, we've got to have a final last destroy everybody dump where they all get wrecked mentally, and then we've got to go sideways for a couple of months at least before we break through or cross through some kind of big range trend and then start to head back up. So they're really cutting it close. But the last couple of dips have been like that. They've just been violent, fast, big. So
Mm-hmm.
maybe that happens tomorrow. Might have a bad close and then just have a violent, fast dump straight down. Or maybe the
That'd be
cycle ends
nice
up
because
being
I'm pretty
different.
short.
Yeah.
I saw your chart like about an hour ago. You were looking at BTC like on a higher time frame, and you were talking to Jay Buddha, I think,
Hmm.
and you were talking about building a position.
Yep.
Is that just a spot a position, or is that like a low leverage a position, or?
So you'd open it on leverage. So basically, open it just as like a 1x position on leverage, and then start to build it. But it's still basically just equivalent of spot. And the reason you do that is so that later, when the price is well and truly clear and you're in a very safe position, you can set a stop loss, nice conservative stop loss, and then you can dial up the leverage and take your funds back out. And then basically you're trading with exchange funds. So
Oh, okay.
that's
I've
kind of
never heard of that before. That's
it's,
interesting.
it's kind of one of the good things about leverage is you can start with no technical leverage but a leverage position, and then yeah, withdraw the funds and use them for other things, other trades, chuck them into a USDC interest bearing account, something like that.
Yeah.
Although I think that's changing. those new laws that they're bringing in. I don't think they can pay yield on stables anymore. So that's going to suck.
Yeah, I have no clue. The regulatory scene is just a mess.
Yeah. And the other
They're
thing you can
too
do
busy
is,
tweeting about soybeans.
yeah, you can open a leverage position at 1x once you've got a decent actual bottom where you start to see the high time frame stuff turning around. You take the funds out, buy BTC with it, and then use BTC to back as collateral to back the trade. And then, of course, the collateral grows as the price goes up and BTC goes up, and then you can start adding to your position. And then you win off the BTC going up, and during that time you can be scalping. And while you're scalping, you're scalping in USDC, so of course or USDT. So then you get a few $1,000 or whatever on a scalp, and then you just buy BTC, and then you throw the BTC in as collateral, and then that keeps going up. And you wait until we hit one of those really high time frame trends that you've seen on the dashboard, and then you get the hell out. And
Yeah,
we start the whole process
on
again.
the Trump trend.
Yeah, that's it. Yeah, that Trump trend, which is probably going to be the next death of something. Yeah.
Yeah, that's over $300, I think, on Solana.
Yeah, and I think we were looking at those today, and we had just some really high time frame confluence sitting up there. Because a lot of these closes we're starting to see now, we are starting to see some of those really big hold candles that'll be the minimum moves for the next cycle. So if we have a look at those. So I think that was the Trump trend, right? And it's,
Yeah.
so we're consolidating along. All I really want to see right now is one more final, just obliterate everybody, a bit more sideways, and then a recovery. And then we could head up to that trend. It's kind of all you want to see. But that was also backed by some of these bigger time frames that have got untested trends and holds down below. So you've got ones like this, which that's probably sitting up around that 330, 340 at the moment, and we've got the hold down here. So we really just need to go and smack into this thing and then start finding our way back up to there.
That's a big trade.
Yeah, well, it's a cycle. So you'll get 490, it's about 1,064 days in a cycle to the upside. So it's about right for it to go down, hit the hold, then bounce up to the trend. Two more candles.
I was hoping we would see 30 or 20 Solana, or we'll see, but
well, that could be that last absolutely brutal. There'll be something. I don't know what it'll be. Some crash. There was something recently about how all of FTX's assets are getting sold off or whatever. Maybe that's it. Be something. Someone will find something to attach, but maybe what are those all those companies that
oh yeah, the treasury companies.
Yeah, maybe the treasury companies will go bankrupt. Who knows?
But those guys are just obliterated.
Yeah. So,
I remember James and all them were buying a Solana like around 25, 20.
Yeah.
And then it just dumped down to $8.
So I'd be sort of
something like that'll happen.
Yeah. And what could cause that is quite simply this candle that we opened today touching 73 or touching the backside of this trend here at 86-ish, and then it would dump down to that hold. So it's already under the support trend. It's really just a case of we got to do something, and we're either going to come down, hit the support, and then push all the way back up, which is actually the bullish way to start off the next cycle, or we're going to go up first, hit the resistance, and come down, which is kind of the bearish move. But
Yeah, I'm
I'm
leaning
worried.
towards that one.
Yeah, some of these smaller time frames are kind of leaning towards the up before the down. So stuff like this. I think it was. I think it was that one. Yeah. So
Weird how both Bitcoin and Solana look like they're primed to hit like a 48.
yeah, well, Sol BTC has run into a level where it's basically like 0.001, so everything's mathematically quite easy to work out at the moment.
Yeah, it makes sense.
The thing is that 48 in a lot of cases like this is actually not a sustainable accumulation zone. It's a bounce. The real question is whether or not it's going to bounce that, come up, come down. And that's kind of why I feel like it's running out of time. You look at how many candles we had at the bottom there last time before we went up.
Yeah.
And
I think on your cycle indicator, it should be about that time where it starts dropping and going sideways.
yeah. So I mean maybe the difference this cycle, if there is going to be a difference, maybe it's that it doesn't spend too much time down here. Maybe we just go down and bounce. I guess you don't really
This
know.
time is different.
Yeah, that could be the thing that is different. It's just a down and then up. But we're on the right side of the trend. So we just need a 50-day positive candle. One to end in 50 days positive. And we might have. See, we didn't. Corner is not touching that top corner. So if this thing becomes a positive candle, it breaks the trend. So maybe it's this one, maybe it's the next one. But if it pushes down into these hold levels from the top side of that trend, it should bounce.
By the way, on the high time frame candles like this, like let's say it's a 50-day candle, if you were doing the fib, is it still a like if you did the extension fib where you do it from like the on an accumulation candle, it's like from top to bottom to see how far it goes up. Does that still have a minimum obligation?
Yep.
1 point.
Yep.
Okay.
Yeah, so Bitcoin's got a 50-day that it's bouncing out of at the moment, which is kind of why we should see 65 before we dump. So I think if we're going to dump, I should say, I suppose. So this is what I was thinking they were up to today. So we got this one, which we hit here at 59, and it's just got to creep up a little bit more to the 65.4, and that's basically then completed its minimum. But what I was quite suspect about is the fact that they were just keeping it here for the close. So now we have actually engulfed the wick of the one above. So we could touch that and just dump again down into the hold. Or we might go up and just hit that minimum obligation. They've really just created all of this sort of resistance in really close proximity to the target. So that is that minimum obligation body bounce. Now we could also then go back up into the body up here, but this is technically a front side if you think of it as a short. So this was engulfed up here. So that was a decent entry to take on the 50-day. Question is, will this reject, or as a front side, will it break? Or in the next 50 days, do we literally go down, bash, crash, smash, come back up, close inside this, and then keep going? So it's kind of all, I think if we look at the trend on this, BTC
That would just be
looks
like,
a lot healthier than Sol, I think.
yeah.
I think this opened here, touching the trend. So this one probably can't break that downtrend. And it's an interior, so we've got this one sitting out here as well. So we could push into the hold, push down through the trend, possibly bounce back up. We've got this range trend through there that we haven't touched yet. It's down around 55. There's a lot of stuff in this area. Whether it's the bottom or not, probably not. But is it capable of bouncing? Yeah. I think there's another hold that's just below this one as well.
Yeah, I'm not trying to be greedy, so I'll probably just start like buying around a 50K and just have a larger buy as it goes down.
Yeah. Yeah, I think if you wanted exact levels, you just buy all the holds. One of them's going to be the bottom.
I remember you shared a picture a while ago. It was somebody had asked you how you would trade like a spot bag,
Yep.
and I think it was like a fractal chart, where you would buy it on the bottom and the top of the fractals.
Yeah, I mean, if you were doing a spot trading, I do struggle a little bit with holding. So the reason I would buy BTC at a real low and then end up using it as collateral is because ultimately I still just want to trade it. I just can't. I just really struggle with buying and holding anything. When you look at all the cycles, what cycle have we not ended up retracing? You know what I mean? It's
Yeah.
sure, a good asset like BTC never retraces as lower than what it did in the previous cycle, but it can get pretty damn close. So,
Yeah, I
so
know
for
that from painful experience.
yeah, so I mean, from a spot bag perspective, it's all really going to come down to those holds, and then if I wanted to cycle it, you'd have to then sort of break it down and go, okay, I know the destination of a lot of the bigger holds that we've got will have 100k or 101k is going to be sort of one level that we're going to face in the future. 109 is going to be another one, and then knowing that, you sort of go, okay, well maybe I'll just take weekly moves, but with a directional bias of it going up, and I'll take profit at every single break level that ever gets created, and then I'll just re-enter it on the break level again when it comes back down, and that's if it breaks through it. And if it doesn't, then I'll just be re-entering it at a lower, and then when we hit 100k, I'll probably start to ladder out a little bit, and then if it breaks the 100k area, then we know what the next level is going to be, which I think is like around 140, 150, something like that, and then so on and so forth. And those high time frame ranges, we could get up to 263 next next time.
Mm.
But you could buy it and just hold it to 263, and maybe something develops in between that means you never get to 263. Or you could just cycle it through on the weeklies or the monthlies or just something reasonable, which can be a bit of a pain if you've got it as collateral. You might have to suck it out of the account and then flip it, then put it back in again or whatever. But it's,
Yeah.
you're not going to have to do it terribly often.
It's probably more profitable just to cycle it on the weekly,
Yeah,
unless you're scared of paying taxes.
yeah. Or you just leverage it up. So you could take, for example, take every single hold entry and just increase your leverage. So if you know you're heading up, every time it comes back to say a weekly or a daily ladder point, you just take your trade and you just take your spot and effectively 2x your spot. And until you hit that very top, you don't really have to worry about that ever coming back down and hitting that level. So you could just keep doing that until you get to that topside target, and then at that point you stop stuffing around. And if you've 2x your spot on every single daily or weekly hold that exists through the next 1,000 days of a cycle, if you exit the cycle halfway through, you've probably still made the same amount of money as if you held it. So
Yeah.
without the risk of ever missing the top, you've still made the money. So that's the other way you could look at it too.
Yeah, it's a good plan.
Yeah. And if you want real mental stability, just think to yourself, how much would I get in the bank? Not much.
Yeah, I know.
Anything is going to be better than that. So
I know. The banks are awful.
let's have a look.
You
Inactive.
said something that I think answered my other question was, do break levels turn into backside holds?
Yeah, well, they can. Depends on what's happened with the price while it's above them or below them.
Because I've seen that, like, if the price goes through a break, it likes to come back and like bounce off of the wick, and
Yeah.
it fakes me out because I'm going like for the body entry
Yep.
when I should just be taking the wick entry.
Yeah, so you can get break levels if we let's find where has a break level become a backside hold. So this is on the weekly. So something in here probably did. So if we look at okay. So 1, 2, 3. Just turn all this off. So this level in here, which we marked on the weekly, that level. So that's a backside hold. 1, 2, 3. And that's up inside the weekly. So that's probably another one.
Yeah, it's a perfect one right there.
That one, yeah. It's another one. So can a break level become a backside hold? Absolutely, because if it's got another engulfment candle up above it like this, or engulf candle with a separation, that break level can become that rejection level. So
Yeah, that's like 2 good trades right there.
yeah. So inside those 3 weekly candles, you've got a 3-day, you've got a daily, and so yeah, break levels effectively. The other one is actually, or more so, it's actually origin levels that often become
Yeah,
backside
is it
holds.
okay?
Because if you think about what often happens with an origin level is it's a break level that's going to get hit. You're going to have another range. Now, if you have another range, then if that whole thing gets engulfed, then you do have a backside hold level because you've got multiple ranges engulfed in a single pass. And then that's a good reason for the creation of them. So, and that's also partly why they appear to create such big rejections, because a lot of backside holds are actually broken origin levels,
Yeah.
moments of
Yeah,
polarity.
yep, exactly. Oh, polarity is such a great concept.
Down it goes.
It's a lot easier just to look for those levels of polarity because like you'll lose a lot less, even if it takes like longer to wait for them.
Yeah. Yeah. So trading backside holds is basically trading broken origins, which are going to be levels of polarity. And then if the price
Oh yeah.
recovers,
Oh, go ahead.
yeah,
Sorry.
if the price ends up recovering from it, then it'll go up to the front side, and then front sides are the ones where you just don't really want to enter straight away a lot of the time. You just want to sit back and wait and try to get some kind of refined entry.
For the refined entry, that's like arraying it down into time frames, right?
Yep. Yeah. So say this one over here could be daily. So you're looking for an entry down inside the candle here somewhere. So you start with your daily. And then you jump down timeframes. And you've got that body of that 4 hour there.
Mhm.
And you still don't generally just put a limit order on this.
That's my problem. I got all these limit orders hitting while I'm at work. I can't like check them immediately.
Yeah. I had that problem once. I realized I was making more money not being at work. Stopped working. So you just keep going down, body on the 15-minute, whatever. And then as the price starts to enter that area, you're looking for a reversal of one of these levels. When it eventually gets in. Whenever you get these kind of equal lows like this as well.
Yeah, I didn't know that when you get equal lows, because I just started to look into the those ICT concepts or whatever.
Yeah.
And that's like one of their setups is they look for like a floor and then they place their orders under it because
Yeah.
they're like waiting. Yeah, I I didn't know that in the past, so I'd get caught in those all the time.
Yeah, that's kind of like SMC or smart money concepts.
Oh yeah,
This
SMC,
is
yeah.
this is your quote unquote strong floor or strong base. It's not. It's designed to look like one.
It's a trap.
Yep. And there'll always be that hold level left below it, which It's kind of obvious when you got a hold level sitting below something that looks like it could be quote unquote safe. Answering all good questions before you can ask. Yep. Someone else in the group. Okay, running out of patience with 15-minute candles. Let's try 4 hour. Come on.
Yeah, I had like 20 questions, and like just doing a brief look through the notes on the Google forum, like they basically all got answered. So I just have to go through the video and find them.
Here we go. So what you're looking for here is big volume spike. And probably didn't. I let that get a little bit too fast. But if you're looking at that on the 15-minute, you've got this pile of volume in here. Come down and hit the 1 hour level. So the lazy part of the hold is actually this 350 level up here. You almost touched it, went up above it. That's a good sign not to actually enter on it. And then straight down through it. So even that level, they kind of fake it out so that it, people go, cool, I'm going to long here, and then straight into them.
Yeah.
Volume starts to pile in. You could look to take these levels down here, but all that happens is it goes back up here, rejects off that, comes back down again. So once you've got the reversal on that 15-minute chart, you could look for something like this, just as your entry. And it goes back up, hits resistance, starts coming back down again. You're pretty much already out of the trade when you see that it doesn't make its way back up above this. And now you're looking for the next level down. So that 1 hour level down there. Wait to see if it breaks up. Okay. Yeah, you can look at anything in here. Or you can be really, really safe and wait for it to get back up above here. Or you could go, nah, we've created an origin, we've got a hold, we're reversing, and that's probably going to be our range to the upside.
You got the hold hit, you got the volume spike,
Yep.
You got the move up.
Then you look at the minimum move of this hold, which is going to be up to about 383. And then you look at that hourly range that's created off the hourly origin, which gets you up to about 376. So that's a pretty good indication that that's going to go up. And that's that minimum level. Rejects again. So, you got up to that and then had that instant rejection again. And that's kind of why it's just, if you're looking at taking these scalps, you don't really bother to hold them. You try to get the best entry you can, which in this case was sort of down there around the 1 hour, and then you just take your profit. So a 1 hour entry inside a daily move on,
that's big,
whatever that is a 20% not greedy move. So
yeah, I TP at the 1.618 now.
yeah,
I'm just scarred now. It's just easier on the mind. Second guess yourself, you just take the first exit.
yeah. If you do that, you'll get to see your P&L just go up and up.
Yeah, I know. That's what happens.
It's kind of good. Good morning, Charlie.
But I figured with more practice, like I'll eventually understand like when to let the winners run.
Yeah, well, it'll come. That was, down here at that point of the cycle, and then now we're at the point of we're retracing to try and find a bottom, and really it's a case of where's it going to go? Because
So you see that
what do you reckon
you see
that
toward-
is?
there's a distribution candle that hard closed that trend. Could you take that and be like, oh, we're going down still, or
I mean, there'll be trend bounces in here that you could be taking. Let's see. See, it's never managed to get any kind of polarity over that 371 level. Every single candle that's been above it has come back to touch it on the monthly there. So it's not really flipped that. It's hard closed it.
yeah,
It's had bounces, but it's never really reversed it. And this is quite an old token, spent a long time in accumulation. So you've got this, which we recently retested, on the dump. So it could still go back down to there. This is effectively a backside bounce. So that's your range there. All it's really doing is bouncing off that. And then if it does want to continue down to the front side, say it doesn't sustain this, then 160 would just be that 3618 revisit, and then your hold levels all the way back down here at $62. So it doesn't really matter how bullish it is and what the narrative is. It can still just completely round trip in a cycle like it's done before, especially because the people who accumulated through here, they would have sold into this. So price goes up, everybody gets all hyped up about privacy tokens and whatever. Mert starts ranting on about how it's going to go to $10,000 or whatever, and then and meanwhile they're selling.
And you got Marty selling all his Bitcoin and top blasting.
Yeah, that's it. So and all you really have is you have a backside level, which has had a bounce, which we know is most likely not a sustainable bounce. We have a frontside level untested. We have a range level that hasn't been revisited. And we've got a big blue candle. So, the next thing will be, how does that end up closing in 16 days? And if that's the trend, which it might be. I don't know if it is. So.
Yeah, that hack moved the price, I think, in 1 day, right?
Wasn't that oh yeah, that's right. And then Monero had something, and it's all just kind of rubbish, really.
Yeah.
You'll notice that
I learned
each
that here
token
too.
at this particular point, each token that hasn't already been harvested is going to have some kind of reason for whatever it does. But you'll get that trend, and it will be a brand new trend. It will be untested. The candle can break it. It can get on the wrong side of it, and if it does, it continues down. but it is kind of running out of time. So it is possible that if this thing has any life left in it for another cycle after this, then maybe it bounces off this trend, sweeps it, comes back up, and then, does go up. It's possible.
That'd be quite bullish.
Yeah. And the only thing that sort of says that is a reasonable chance of happening is because of the timing, really. And we've got this trend up here. It's about $842. We've created it. We haven't gone back to it. We've got this one down the bottom. Both of these are pretty equal as far as what they can do as far as support or resistance. And it's kind of running out of time to do too much more unless it has a fast dump down to tag that 160 level. And if it creates this trend in 16 days and then dives to tag that 160 level, that's a good buy. That would be the kind of thing you'd look at. And it should be able to bounce back up through that. Maybe it goes up there.
Yeah.
I know a guy who had Zcash, but he bought it back here in the previous cycle top.
Oh.
Hopefully he sold it.
Yeah, I know, right?
True believer.
Yeah, I was a true believer of Zeus.
Poor Zeus.
I lost like a good amount of that token.
Oof.
That was a good lesson learned.
Oof.
But I can say Marty didn't convince me to buy it.
Oh, okay. How the heck did it get under that? That's evil.
Yeah, it's just brutal. Absolutely brutal.
It reversed a 6-month hold. Can't even get to that number. Oh well. I still think I'll buy some of this if it hits the right level.
Isn't it at a 0.0005?
Yeah. Why not? Look at the death of that thing. I actually
I
remember.
round trip that token like all the way up to $1 and all the way back down last year. That's why I want to try to make some money on that. Revenge trade that.
What was it? 0.5?
Yeah, that's just terrible.
0.52. It's got to reverse at some point.
I think I have an alert there.
Just set an order for 0 or really close to it. You never know. You might become the sole holder of Zeus. I mean, it does have a range trend like this. If you actually say this was to become the next Zcash, because someone is buying these liquidations, right? So if it was to become the next Zcash, it's kind of like just waiting for it to break this trend and then travel back up to the top of the range.
Every Tyrant Zeus becomes a reality.
If it breaks the trend there and goes up there, it's like a 3,000% move. Never know.
But we'd all have to apologize to Marty.
Well, it's still not $1. He did say accumulate under $1. He didn't quite specify exactly how far under $1. Will Doge live on? Let's have a look. For as long as Elon likes it, probably. Golly. Ouch. Oh, yeah.
It hit an origin from 2024.
Yeah, I mean, it doesn't actually look... I mean, it's definitely at a range bottom. If it sneaks back up inside the break level in the next 16 hours, it might have a chance of surviving on the short term. And failing that, it's got levels down here, which it hasn't quite hit yet. So now if it doesn't get back up in here and it takes another dump, it could bounce between these two levels.
Sometimes it's hard to choose which origin is like the right like one to trade.
Yeah, you've sort of got to look at what came about, like this, which is huge. So if you create an origin like this and then you just have this massive pump to the upside, that's usually a good sign. If you create an
I see.
origin and
Okay.
have a tiny little move to the upside, it's not usually a good sign. So
Right, because you're looking for polarity, right?
yeah, so say this origin here, created by this work, it moved back up, yes, but it didn't really create any new high. It didn't, from the looks of it, didn't break a trend. We still had that range trend through there. Yeah, didn't really break a trend. All it did was get created, go across to the trend, and then continue to reject down. So yes, you got a bounce here, but look at how close the trend was to the origin. It was
Yeah.
pretty screwed. Like you had a good chance to get out of it in there, and you really should have, because it went under that level and hard closed and gave people so many
Turned out,
opportunities to get out.
yeah.
But that's, so that's not a very strong level. Whereas these ones down here that created these massive moves to the upside, they will typically be stronger levels. So
Okay, cool.
just about every origin will give some kind of bounce. Sometimes it goes below it for a while before it goes back up. It's very rare that you'll ever get stuck in it, but you've also got to know where to get out, and in this case that's not a risk reward worth going for, when you're that close to the trend. You're better off to actually let it pass through the trend, and then
Yeah, it turned out to be a good backside hold to trade.
yeah, or a good this one. Take that back up into the origin.
Yeah.
That was a better chance than trying to take that. Which led to
Does
another.
the origin scanner or the origin bot automatically choose origins that come off of those types of moves, or does it
No.
just get a bunch of them?
It just basically tells you when you're in proximity to any of them, and then you have to go look.
Yeah, that'd be interesting to look for the volume after the origin, and then also watch the like the sequence of origin creation, and if the two line up, it could be a good level to trade in the future.
Well, you could measure the historic volume. See, I'm just making work for myself now. So historic volume of the origin when it was created would, for example, whenever this one got created, was there a historic volume spike after creation, which would be touching, origin creation, volume increase. So you could maybe look at from when the origin got created, which would be this candle, was there a rise in volume after that creation? And then you'd see this, and then you could put some kind of priority on that as a level to take a trade on. So yeah, everything like that is possible because you've got all this data. You know when it was created, you know the timestamps of all these candles. So then you just have to look at the volume of the candles and did it increase after the volume after the origin was created. Versus this one, which this was the candle that created the origin up here, and the volume decreased from the period before. So yeah, technically we could do that. Dev. Come on, Dev. Not me.
He would have caught that October 10 dump.
No, I was out, so I wasn't short, but I was not in the trade anymore. So, and then I managed to catch a long at the bottom and bounce it back up. So it was a good long, very quick.
Oh yeah.
But it would have been nice to have been in the short, but I wasn't really watching a 13-week chart or whatever it was at the time. Which is also kind of the catch is you can get some of these levels that just appear one time, and they don't appear over and over again. I think we call them singularities. So you get there's a button for this dashboard. So strange little levels these. But quite often they have shown up as being the absolute tops and bottoms of really big moves. So,
and that's like the only value that they have.
Yeah, so it only shows on a singular time frame. Haven't gone too much into these, but they appear to be quite brutal. like shorting 119.
Yeah.
Which, as you can see, was quite brutal. So yeah, these levels are ones that are interesting, and there's a few of them.
Singularities, you basically just like watch those to see what happens in the future when price it comes back to them.
Yeah, so they can't be. If you think about like a lot of the other levels that exist across many time frames, those levels can be dived into. It can be broken on one time frame, not broken on another. That sort of stuff, because they exist all over the place. These things only exist on one time frame. So all it takes is one daily candle above or below the level. Boom, level's gone. So that's, and a lot of them are, as you can see, just singular day candles. And then you get weird ones like these, which are 12-day levels. And this was, look at the price. Remember the Germany sell-off?
Was it the carry trade thing?
This was the Germany selling its Bitcoin dump.
Oh, I remember that. Yeah.
Look at that.
Yeah. Wow.
That kicked off that move. So they just, I don't know 100% how that even exists. That it exists on a 12-day time frame. It doesn't even exist on a daily. How does that work? I don't know.
A rabbit hole.
Yeah, I haven't bothered to go down the rabbit hole of how these actually exist, but I know to watch out for them. So I think,
yeah, Germany really messed that one up.
Yeah, next one is down here. Yeah, well, it's not long, and they could always buy it back for what they sold it for. In fact, if they bought it back now, it's probably within their average because they started selling at about 71k, I think. So they could buy it back now. No foul.
Yeah.
So this is one that we bounced off very recently. Or sorry, we created very recently. So there is a good chance that this level, if it gets retested, we could have a big bounce off it. But if we close a 2-day candle under it, that could be nasty. So that's the sitting right there. Then you got 56. So there's a few sort of untouched ones just below us, 49s, 48s, 37s. And then have a look at some of these moves that just kicked off. The cycle that kicks off. It was one.
Yeah, they just come out of nowhere and just launch it.
Yeah. So yeah, these are singularity levels, which are little known things that we don't really talk about too much, but definitely key moments to watch out for. And we've got some, look at this one. It's 77k. Untouched. Short.
Yeah, that fits the narrative of going up and bouncing off that trend.
Yeah.
Is it a trend or is it a hold level?
It's an origin. It's an origin level.
Okay.
But it's just unique in the fact that it only exists on one time frame, and you've got, look at them all up there. So 77, 79, 81, 89. You know, 1 day level at 89 untouched. Look at the move that thing created.
Yeah.
So whether it's this cycle or the next cycle, that's going to be a key moment. You know, for BTC, it's either come up here, hit that thing, and go donkey deep, or it's maybe next cycle we hit it, have some kind of rejection ranging, break it, keep going up. But it's going to be a pretty important moment at some point.
Yeah, I think there's a lot of liquidity there on trading different, like around the 89 on Bitcoin.
Yeah. So if you were looking at cycling spot, here's an instant way of cycling spot for next cycle. Just sell some at each one of these levels.
Yeah.
Buy it back
Yeah,
when
for
it
sure.
finishes dumping. That's a pretty easy way to cycle some spot and make some more money, because it's doubtful that it's going to go through those levels. And if it does, it'll probably retest them from the other side anyway. So, and so we had that 5 day down there.
And all of those are tracked, right? On the dashboard.
Yeah. Yeah. So you just go into the filter. So this is stuff that the Origin bot doesn't really understand this. You could figure it out. You could just do a debug on a level, and it would only show up as one time frame. But that you'd have to do a debug on the level to see that, or maybe next to it, it would say it would only be on one time frame. It wouldn't say also on. So you can kind of tell, but it's not as easy as it is in here. You just come in here and tick a box, and then they all appear.
Yeah, the dashboard's a big help. I haven't spent much time on it, but it's a big help to look at all the big closes.
111. $67 days to go on that, but it looks like it's already achieved.
Something else I was curious about was laddering through the fib levels.
Yeah.
So like you know how it goes from like if it's creating ranges, then it'll go from like 1.618 to 2.618 and then back down and then up to 4, back down to 3.
Mm-hmm.
I'm confused by the sequence. Is it just up one level and then back down, or is it typically 2 and 1?
No, it can. Unfortunately, the sequence can be everything, including blasting straight through all 4 levels. So range levels are not like hold levels. They don't seem to obey the same sort of rules as hold levels or trends. And the things that are very, very common is that if it hits the 4 or goes through the 4, it'll probably come back to the 3. That's a really, really common move. If it fails to close over the 1618, it'll probably come back to the body of the hold, and then try to go again from there, but may or may not. And if it closes above the 1618, it'll probably make it to the 2. So those are kind of the really common things. But everything else, nah. Whether it retraces back to the 2 after hitting the 4, that seems to be a bit more random. There's the only one we really track is we track the 4 to the 3 because it is very, very common. So
Okay.
that's kind of where. So there's a command in the Origin bot now called range retest. So if you jump in and try that,
Oh, interesting.
I'll just bring.
Okay. Bot or commands.
Yeah, I'll just see if I
Okay,
can
cool.
bring it up for people.
And then you use the let me put a fib up. So you use the 809 and 309, and you look for closes that close above those levels to see if
Correct.
they continue.
Yeah, because they are basically the halfway, the true halfway to that next level. This is range retests.
Yeah, these I've been like kind of on like level 1 of the fib holds, and so I haven't understood these yet. I feel like these are the next step up.
You can't see my screen, can you? You can see TradingView.
Yeah, I can. Yeah, you're on Dogecoin still.
Okay, I'll just change this. Accept. That's that one. There you go. See that? So you've now got this little fella in here. And unfortunately, what that says is we've got range retests, 65 and upwards, but if it wants to go lower, look at all that stuff in 48. There's not really much in between.
Yeah.
So that's basically, unfortunately, what that's telling us.
But you could use like other confluences with that information, I feel like.
Yeah. It's a pretty big one sitting down there waiting to happen.
So the for this command, the first time frame it gives you is where the fib retracement tool is placed on the candle. Is that right?
So that would be the start candle of the range. And so if you were looking at a 4-day chart or a 63-day chart, you'd have to look back to about the 16th of the 7th, 2023 to see where that range actually was created. If you're looking at this 4-day chart, you'd be looking at a range that was created around the 21st of the 4th. And then the level that it's referring to is going to be the the 3618 level that hasn't been revisited after the 4618 has been touched. So
Okay.
I'll jump back to the dashboard. Gotta do this.
So that tool is specifically for 4 to 3.
Yep. 4 to 3.
Okay.
So um, so you can probably see dashboard again now.
Yeah.
Okay.
Oh no, it's on the Dogecoin still.
Ah, it is. Okay, sorry. I must be on application rather than screen. I am.
Are you using OBS?
I've got OBS running and I've got Discord streaming running. So you're looking at Discord and then everyone else is looking
yeah.
at YouTube through OBS. So screen. There we go. So if we go Sol and look up 63-day, there will be a 63-day range level sitting down here, which is a front side hold. And if we chuck a fib on that one, since it's passed through the 4, so it never quite touched it there, since it passed through the 4, it hasn't gone back. So that's in 6 days' time that closes, and it may close, for all we know, under 69. If it closes under 69, guess where it's looking to go? To that level
So,
it hasn't quite touched.
Yeah. Okay.
So that's
So it'll come back up to 69.
yeah, it could come down, hit that, come back up. There's no guarantee that bounces back to here though. The thing that happens is that the retracement eventually seems to come down to this level, and it can blow away like this for a long time before it comes back down, but unfortunately it's got about a 95% chance of coming back. So the more of these you have built up in one direction, the more likely you are to retrace. So then if we look at the 4-day, which is wanting to go the other way, so it's going to be something up here. It's probably that one. What was it? The 21st of the 4th. Could be that one. Yeah, it's that one. So it wants to come up here.
I see. Okay.
And we're bouncing off the level 4 of the range now. So these shorter term moves, if they can play out soon enough, then we hit these topside targets. But once we hit these topside targets, so that closes in 1 day, 16 hours. This could be a trend break, and that might be all it's waiting on. So if we check, yep, interior trend break, if that stays like that, and then what it might end up doing is wicking through that exterior trend, tapping the level, and then retracing back down. Break touched down the bottom here, 63, so that's probably looking to become an origin. So we could come up into that, come down to test the origin. So these are all sort of playing out in the next few days probably. At the moment we're building cake. We're waiting for something.
So basically you want to look for it to go through the 4 and then you look for the move back to the 3, but it you have to use the other confluences, make sure it's
what you don't
able
want
to go there.
You don't want it to close under the 4. So if it closes under the 4 and then hard closes under the 4, it's losing that entire range. But if it pulls back up inside the 4 like this, and now we've sort of created a trend, we've opened on the other side of the trend, we've touched the 4 again, I mean, it just seems like it's either waiting to get closer to the trend so it can reject the trend and avoid going up, or it's just waiting
Mm-hmm.
for or it's just waiting for liquidity, is the other option, because you'd need to have a decent sort of amount to make it worth the while.
Yeah.
And we do have liquidity short term up around there. It's starting to build around 70. There's also a weekly trend coming through there. Excuse
Mm-hmm.
me. So it's all kind of a matter of timing, and sometimes the same reason it would hover over a level on the downside before touching it is sometimes the reason why it just stays away from a level to the upside as well. We might just be waiting for the right time to come up here and close over it. May even want to continue up.
Yeah, so you could like jump on the daily and look for like a better a refined entry since you know it's most likely going to go and tap that trend.
Yeah, yeah. You could actually have a pretty decent long bias just based on this one little thing here um, in the next couple of days. Your where you would look to TP though could change, because if it just went off, say during the New York session, or when the New York algos kick in next, if it just went up and grabbed that liquidity, then it's probably game over. But you could still target that level or the trend above it even. The of course that changes in 1 day 16 hours. If it hasn't gone up and it stays sideways, that means that the trend is closer, so you might want to change your mind about exactly where you TP. Maybe it
Yeah.
stops at 69 again, um, or maybe it pushes through. It's all just a game of, is it worth the liquidity? What it hasn't done is it hasn't polarized the bottom of the range because it's touched it every single candle, so it's still technically testing that. And what it may do, as long as it doesn't go back down again, is give us another support level here at 63. But it may not really be a huge bounce. Like we've hit it, we've created a range so far. As long as that doesn't change, you'd have to have a look and see what the volume was like during all this period. But I think the volume has been, last 8 days, the volume's been kind of okay. So it might wick down again, hit that, spike through it, something along those lines. If it breaks the trend and then comes down to do a retest of this area down here at $60, or hits the trend again through the origin, it's pretty likely that that bounces. And if it was to become
Yeah, that's
bearish,
nice.
it's basically got one day 16 hours to come down and just close under that level 4. If it opens on the
Yeah,
underside of that, down.
so the invalidation is a hard close under the 4.
Yeah. So you'll find
Okay.
that most of the ones that get left behind is because they've gone completely through the base. So like this one, this could be one. Yeah, so that
On this
never.
time frame.
Oh no, that hit.
Sorry, go ahead.
No, that hit the base and went back to the 3. Scratch that. So that one did it quite nicely, nice and quick.
That was a good trade.
Yeah. So these are just the weird stuff you start to notice when you stare at charts too much, is it does this and does that, and it does it and does that on such a regular basis that it becomes something you can actually use for bias or for trading.
Yeah, patterns.
Yep.
I've never been too good at recognizing patterns, but the longer I stare at it, the easier it gets.
Yeah. Yeah, once you see it, you just can't unsee it anymore. But there's definitely ones that are left behind that, which is why there is still targets to the upside. And just can't remember what they are. Of course, there'll be something like this, which probably happened in reverse. So went up, hit it, came down, bounced between the levels again. So they don't always bounce between the levels like this, but certainly once you hit the top of a range, there's a pretty good chance that you should just take some profit, because you'll be able to re-enter it down here at some point, even if it continues. And for the ones that just blast up through the range, then yeah, you might lose out. But if it does, yeah, even as you see here, even if it hard closes above the range is not actually polarity. That's a hard close, but that's all it is. And it came straight back through it, tested it from the other
Yeah.
side. And then you can see how it became resistance for over here. So the test, polarity, rejection, no flip, rejection, polarity, back up, rejection, down. So
Yeah, you could just like use those levels over and over again.
yeah, well, Sol never managed to actually break that level from a 4-day perspective. It's still the top, 242.
That has to be a polarity on a higher time frame.
Yeah, it is. There's a whole bunch of stuff around that 240 area and 250. Yeah, so if you've got little surprises for the future. 256.
$40 to $256 is pretty good.
Mm-hmm. Back here you've got this one. Never managed to crack that either. So yeah, there's lots of stuff up there. And if everyone had kind of looked left and seen that level up there at 253.2, that was a 2021 break level. Pretty old, got hit, polarized, failed to close above it. It's a pretty good reason to get out of a trade.
Yeah.
Look there. And this is that thing about
the perfect short.
Yeah. This is that sweep here. So I mentioned on one of the earlier sessions that if a level gets swept, there's a really good chance that the next time it will become a very much just touch and go. And that's what you sort of see there, is we did our sweep there, and then you just get this perfect tap and dump off it the next time. If these candles had just been taps, then maybe this one would have swept. But that usually means that.
I wonder why they bring it back after sweeping.
Because everyone chases this. And so if you look on the TradingView chart, you'll see all the volume actually came in here. And some of the data that we've got recorded actually has no imbalances in structure up here. The imbalances are all here. So it's really weird, but basically this entire thing, this entire move, got people so bearish that they opened up a whole bunch of shorts in here. And then those shorts were the ones that allowed the big institutions and bigger players to build their positions by going up into those. And then this quick flash dump to the downside, right? Well, that pretty much they've taken the shorts out. Now, of course, the longs have started to chase this. Those longs are all now trapped. Big move, sudden big move. And then down it goes. Down it goes. So
ruthless.
Yeah, and that's why technically this could be a bottom, because this whole period through here could just be a slow unwinding of shorts into capitulation, and just gets people to cancel, close out, and then we could have now seen the sweep of this range, and we might bounce up again. So That's why it technically can be a bottom, but it's just doesn't seem right for that to be a bottom at this point.
Yeah. Lots of people were trying to call the bottom, which got me concerned a bit.
Yeah, I think Marty called it up here somewhere.
You gotta love Marty.
Yeah.
Endless entertainment.
Yep. Someone just needs to get those t-shirts and extend the sleeves. Hello.
Next big trade is going into short sleeve t-shirts
Yeah,
for everybody.
that's the one. So I guess all we're doing really now is waiting to see what this does on the weekly. Does it creep back up inside or not? It's pretty much it's the same kind of with every token. If you look in the Origin SR channel there and you have a look at the overall bias for breaks, everything kind of looks okay apart from the weekly. The weekly just looks horrid. It's about 90% of ranges looking to break to the downside. So it's only really got 16 hours to undo that. So it needs to pump in the next 16 hours.
I don't know like how these old meme coins just keep going.
Well, I guess the question is, do they? Let's see.
Like I see that sideways action in 2023, and like if I was a spot buyer, I'd be too scared to buy there.
Yeah, it just looks
Seeing
dead,
all
eh?
that there.
It does kind of just look dead, but the key thing is, does it create some kind of origin, and what is it testing? And like these wicks test these, well, they test these holds, which means that these holds have already had their first touch rejection, second touch rejection, third. It's getting pretty worn out, you know.
Yeah.
And of course, you're probably laddering origins, and that's that, big volume spike you got there off that break level. So there's probably that origin. So you got this one in here, massive volume spike. Then you can see it started just tap dancing across it over here. So you're kind of expecting that to do something.
Yeah, that's a great tip to look for the volume on the origins. That's gonna help me.
And it just slowly accumulated, and then off it went. And every kind of step of the way down here, every candle was coming back up and testing the one before it, whether it was the wick or the body. It was just testing. Then you start to get some range trends through here. Once it starts to break these
Yeah, look
range
at that
trends,
hard close
boom,
right before the pump.
Yep, look at it go. Hard close, retrace, woof, off it goes. And then even the retest of that range trend, off it goes again.
Yeah, it's beautiful.
And it's still on that now. Like that's where it is. So it's getting kind of worn out. It's already had quite a few bounces off that trend, but you can sort of see how these levels take off. They just go back to where big volume used to, or where big volume came in, and then big volume comes again and sends the price.
I'll be watching that one.
I think that was Very top.
Well, I'm having a great time. I could keep going, but looks like the next guy is up.
Oh,
So I'll just jump in with everybody else on the sidelines and
Okay.
keep watching.
cool. All right.
Thanks for everything, man.
No
Appreciate
worries.
you.
No worries. Catch you later.
And,
See ya. Bye.
and thank you, devs. Yeah.
Devs.
Ciao, Jesus. Ciao, Sync.
How you doing?
Good. It's a weird way to say hi to Jesus.
It is a bit.
Hey, Sync. Appreciate the live stream, man.
Yeah, no worries.
Happy about it.
14
Okay,
hours in.
okay.
Starting
14
to feel
hours.
starting to feel the tiredness.
Yeah. So now in Italy it's the morning. So yeah, I've had my fresh cup of coffee. I hope you're caffeinated.
Yeah, I'm on number 3 and I've got a little bit left.
Oh, okay.
And no, I don't.
Well. Okay. So I'll catch up with the stream later. So I have a bunch of questions,
Yeah,
but
sure.
you can tell me, hey, I already replied to those earlier, and we can skip because I did my studying, and it's more on the with my pen and paper.
Yeah.
And I'm trying to put things together. And I wanted to start in general by the macro analysis you do every time on your daily updates. What to look for, because I want to understand actually, how actually the macro analysis that you do in the beginning actually matters when trading, for instance, lower time frame origins. Because I really want to get good with origins. Especially with the polarity concept, where you say that even like a 4-hour origin can even break a weekly level. And so, a little bit the meaning behind, watching for totals, watching for Bitcoin dominance. I know it can affect a little bit an asset, but how often like a liquidity going into the totals, if there is a resistance origin, how often do we actually on the totals, that actually matters, and if you've used it for stop losses or as a short position in any kind of trades.
Yeah.
Let's start with this.
So the totals is kind of going to give you a bit of bias, but it's not one thing. It's not going to do is it's not going to tell you which tokens are going to take off. So if it's if totals are going to pump or they're going to dump. Actually, what I'll do, I'll start with just what I do every day. So first thing I'm going to do is I'm going to look at my dominance, safety dominance, effectively, which is BTCD, it's USDC, it's USDT, and the reason I look at this to begin with is that I can tell if this is going to break to the upside, the entire market is probably going to go a bit risk off. And that's where you're going to see altcoins lose all strength. If this starts to break to the downside, then that's when you're going to see altcoins have more strength. So that's just in general, but it doesn't tell you which one. So maybe Sol's still shit. Maybe Hype is the one that takes off. Who knows? When it's in a really tight range, it's also quite possible just for one token to have a great day, or a handful of tokens to have a great day, and other ones just to do nothing. So, but as a rule, if this is looking to break to the upside, I'm not looking for there to be strength in alts. Now, if this has a retracement, so say for example, if at some point we came down into this hold down here, then I'd be looking for this to bounce, and it would be bullish for alts for it to be coming down into here, but then I would instantly be thinking, cool, they're going to cool down the moment it comes down into here, because that would then create a bounce back to the upside. So first I'm just looking at this. And so say today as an example, I realized, okay, we're potentially going to, excuse me, we're potentially going to open over the top side of the range trend. Puts it in a bit of a compromising position. We are underneath the support trend. So we're probably going to at least have some kind of, pullback in alts, because we're just in a place where about the most minimal thing we could do is just push back up into this resistance again. But after that pullback, if we hit this untouched origin at the top side here, we're probably going to have a rejection in this, which means then we're going to have a move back or a pump back up. So that's the first chart I look at. Second thing I do is look at totals, and there's two different versions that I look at. So both of them have got stables taken out. So totals excluding stables, but this one is the total one, so that includes BTC. The next one, total 2, so that excludes BTC as well. So I'm looking at these for two different reasons. I want to not only just see, is the entire market looking to go up in value, because risk on, risk off doesn't mean price. It just means strength. If the entire market is looking to dump, then it just means that if you're risk on, it means you're probably going to see alts dump less than BTC, but they're all still going to dump because the market's going to come down. If this is showing that it's going to go up and the safety assets are showing that they are going to come down, then I'm probably looking at risk taking in most of that money, and therefore alts are going to be a better choice to actually take a long on. Vice versa as well. If this is looking to come down and risk is looking to bounce up, then I'm probably going to see a bigger pullback in altcoins than I would be in BTC. So then I would look at this, and the first observations are we open between the trends, so we can have a bit of a move in here. I'd be interested to see if it touches these break levels again, because that means it's not trying to create origin resistance here. So at this stage, it's semi-bullish. We haven't come back down to the hold. I would be interested in taking longs if this was to come back to the hold from the top side of the trend. And that's when I would suddenly go, okay, well, is the risk hitting resistance when this hits the hold? If that's the case, I'd be looking to long altcoins because they're going to bounce and bounce better than BTC. So then go to the next one. Where are we sitting in regards to this? Well, a bit more troublesome. We haven't come back up and hit the break. So in this instance, unless that does that in the next 15 hours, then the risk is currently looking like it wants to break to the upside. The totals excluding BTC, so the riskier portion of the assets, look like they could create resistance. I would then be saying, okay, well, we might find a dump. And if this stays exactly like this and opens on the wrong side of the trends, with the break level converting to an origin level, with the BTC dominance USDT looking to go risk off, then I'd be expecting alts to have some kind of pullback, and a bigger, bigger pullback than BTC. That's kind of why I would look at those three. Then we get into individual dominance, and for that, you really, if there's just a couple of things you trade all the time, like if you just, like for me, it's mostly just Sol, but if I've been taking, because Sol's been boring as shit, so I've been taking a few SUI trades. So if you would then move to look at individual comparisons. So this is where we have our daily, and I'll also look at the weekly for this because we're getting close to the weekly. But we looking at where did we open? Where did the dominance open? So in this case, unfortunately, the dominance against BTC opened under the trend, so it's pushing back down and trying to break through the hold. Now that means that this hold down here is a little bit risky, because if this is going to push down, you've now got flow between SUI and BTC, which is sucking the life out of SUI. And so from a USDC USDT perspective, this is looking to create an origin at this stage because it hasn't touched the break. This hold is probably a little bit risky for a couple of reasons. One, it's just a one candle versus one candle. We never got a range. Number two, this is rejecting. But if this hits the trend down here, or if it, because I think we've gone from the hold, which we've just touched, we've got this 1164 level down here, which is kind of the target, and that's roughly where the trend is. So if we come down and hit that level right here, this will probably find strength again. So if we're looking to long SUI, we'd let it bleed down, let it take some liquidity. If it gets down here within the day, it doesn't create the resistance hold against BTC, then this would probably start to bounce. This would then start to bounce back up, and then it will probably go up and test the top trend here. And that would just be your sort of swing between the trends. But it's not really worth taking any kind of entry on that at this stage, not until this finds a reason to turn around and start going back
So
up.
we wait for confirmation on the SUI BTC.
Yep, bingo. So waiting for confirmation here. Now, what about BTC? So BTC, that's good. It's over the top of the trend. It closed over top of the hold.
Okay, we opened well on the trend.
We opened well on BTC. So if SUI BTC finds the support and completes the short, because it's in basically a minimum fib short based on this candle coming back down to the 1618. If this completes that, starts to bounce off the trend at the same time that this hits the hold, and this starts to move up to its minimum level, then this you could long.
But what is the target that we expect BTC after it bounced on the trend? Is it targeting the next
60
range trend?
Yeah. Well, actually, I'd expect this to probably, at the beginning, it would probably come up to about the 65.2 area. And if we check out some higher time frame levels, that's about where we start to run into some of the retests. So I think we've got 65.5 is a 11-day retest, 66.019. So I'm reading these off the other screen based on the Origin bot. Is a weekly, and that's kind of these untested levels up in here. So
where you'd take a breather, let's say.
Yeah, I would definitely take profits there because we haven't actually broken this trend yet. We got a hold. We can break the trend, but we haven't yet. So if we head up into these levels, you definitely want to take some profit when you do the retest, because you may not break this trend. It could dump before the end of the day and end up back down here as a blue candle. But that would sort of be the gauge as to where you would go. There's also some kind of trend. Look at this range trend you got coming through here on the daily as well. And that's all in that same sort of area. So we could reject the backside of the range trend. We could spike through it, do the retest, come back down. That's even more bearish, because if it spikes through the trend and then starts pulling back under it, then usually it's going to dump further. But that would sort of be my daily peak at this point. We just don't have, this is just not very bullish across the board. It's kind of, this is just waiting for that liquidity to build. These are pulling back. Risk assets and totals with risk are not great closes. Well, sorry, they're not. They're looking to create resistance. So that's kind of what I would be looking at from each day. And then like today, I took a sold trade just right at the start of the day, because we opened in between the trend and the hold. We were going to go touch both of them at some point, so I just opened the position smack in the middle and just took it at the trend, and that was live. So I think it was this one.
Okay, on the 4 hour.
Yeah.
Was it a okay?
So it was here.
You opened?
So
okay,
we opened in here. We started pulling back a little bit. I mean, okay, no, we're gonna come up and hit this. So we're either gonna hit this and hit this, or we're gonna hit this and break this. One way or another, we were gonna touch that. So it was just a case of opening that. We were also up over top of the range trend, so just opened a little swing position up into there, dump back down again, job done. So that was basically the day.
Okay, so it was just the range. Is it a range trend or a trend? The red line.
That's it. That blue line's a range trend coming through there.
Okay.
And this top one looks like a normal. It's a normal trend.
A normal. Okay.
Yeah, it's an origin trend.
So basically, okay. So you scalped basically. You were expecting a rejection.
Yep.
And you entered. Where did you enter? At the
just here.
Red.
Yeah, just
you entered there.
Just on the little blue line, just above the hold. So then straight up into that, it's gone.
Ah,
That-
okay.
so that was
Okay.
it.
I see.
I think I rounded it down to 69 instead of 69.6 or 69.06. Just rounded it down. And
Okay. Yeah. This is a simple hold level because
Yeah.
you waited for the candle close. Then you said, okay, at the retest, we target not 1.618, but just the next structural level, right?
so now, as
Okay.
far as well, actually, technically, that's a range trend up to a trend. It's that move,
Okay.
and then that trend is breaking this hold, which
Mhm.
yeah, because that hold is a front side hold, so that was always going to be a little bit more risky.
Yeah.
So that's on the 4-hour, and that was about the only kind of energy we had in the day. And then after that, it's been heading back down. So it may create an origin down here. If it does convert that break in the next, so this will be a trade that could take us up a bit higher because we've got this resistance level up here on the 4-hour. But if we create the bottom of the range here, and then we end up engulfing this candle, getting back above the trends, then we'll look at taking it up to that 69 level there, 69.8. But until then, it's just wait, see what happens. We've got a hold here. We're stuck under the trends again. We could just hit the trend and then break that origin, which could be another trade. We could just look to see if we open this, if we come down, touch the origin, we could just take the scalp back up to the trend again. So there's things to do in here, but it's just slow.
Yeah. Oh, I understand it. Luckily for me, slow is good.
Yeah.
So I can ponder cautiously. But would you actually take that break trade, which is not a confirmed origin, before the origin is confirmed? Meaning, okay, I enter at 68, and then my next target is just the opposing origin, which is the 69.90 level.
I mean, it's 50-50. It's kind of 50. Excuse me.
Yeah.
It's 50-50 really,
No problem.
because only half of these only half of the breaks that get touched are going to convert. So I normally wouldn't take 50%. I'd go play blackjack if I wanted those odds.
Yeah, no, for sure. So you wait after like the hard close. You wait for the hard close to confirm the formation of the origin or not.
Yeah, this candle here, the top of this one, is almost a better reason to take a long here. So if we get the hard close and create the origin and stay above the wick of this candle, we might see some volume come in from that. But we have kind of already done that volume bounce, which is this one. So this was a trade you could have taken yesterday or this morning, which is that move. So closed above here. So this is basically a hold getting reversed as such, or a backside engulfment is probably more accurate. And then now we're bleeding back down. But it's also just stuff like this that's kind of why I wouldn't be too interested to open anything here right now, because we did bounce off this. We had that volume. We're bleeding back through off the trend. It's
so the
normal.
momentum kind of died.
Yeah, it's kind of normal to accumulate in this front side candle here now, and so we may just keep doing this until tomorrow even, and then we might, by that point, we might have walked through this trend, and that would be a better point at which to take that or open something. We might also end up creating this origin, closing underneath it and coming back down. So this candle up here was the break of that trend that's running through there, and we haven't retested that yet. So kind of what you want to see is you want to see price take liquidity from a level and then close back up above it. That's one of the ultimate ways that you know you're going to get some kind of move in the other direction. And
Okay.
that's
Taking liquidity, hard closing above a level,
Yeah.
and then we are expecting a move in the other direction. Okay.
yeah. So even this,
Yeah.
like this level that's here.
Mhm.
So all of this under here is taking
Mhm.
liquidity and capitulation with this level that's here.
Yeah.
Now, once it gets back above it, it's all up.
Mhm.
So that's
So, for instance, that break that
Mm.
you highlighted now,
Yep.
you would have played it on the 12th. No, sorry. Let's a little bit on the right. Here we close below. No, we went through totally.
Yep, went through.
Okay.
We hit the trend.
Yeah.
Okay.
That was clean.
Came back up, closed just
Mhm.
underneath. So there's your
Uh-huh.
warning sign. You can see
Yeah.
they troll it perfectly. Stop just underneath
Yeah.
the level. Then
Mhm.
another leg down.
Mhm.
Create the hold. Create the origin. Come back down.
Mhm.
Hit the trend again. Hit the next trend. Bounce back up. So this whole area here was really just
Yeah.
taking liquidity, building liquidity. You
Mhm.
could have entered when it reclaimed that level, because
Mhm.
everything that they bought down here, they're going to want to sell somewhere. Probably going to want to sell it above these highs.
Mhm.
So this close up in here and the retest of this hold, which is that wick, would have been a pretty reasonable entry. So it got back up over
Mhm.
the level. So this is actually an origin. So
Yeah.
the engulfment
But you enter
after.
around that area, right? Where you enter there, not two clusters on the right.
I don't think I actually traded that at all.
Mm-hmm.
No, I didn't trade that. Where would I have entered on that? Let's have a look at the daily. I wouldn't have entered on that. So,
Okay. No.
So that's because here's the thing: when you zoom out, where were you on the daily? You were rejecting the
Of
hold.
course.
So
Mhm.
yeah, the 4 hour can look like it's going to go up, but you're rejecting on some other time frame. So this would have been a better entry down here on the daily,
Mhm.
somewhere down in here. And the next sort of good entry, it's probably going to be if it walks through that trend.
So we wait for tomorrow, or today's candle close to see.
Yeah. Or if
Actually, we need to
it's-
see how we open tomorrow, right?
Yeah, if it sneaks back up above that level, some kind of close back up over that, which definitely could happen. It's kind of opened in between the trends. It's opened above the level, sweeping down now, getting a bit of liquidity. If enough shorts open up, this will end up pushing back up to a minimum of touching that trend. So probably about 69.3. If it does it on the next candle, it's kind of, there's pros and cons, because if it opens through here, then it can still come up here and test the trend at about 70.3. But it would also be inside that hold, and it wouldn't have created a proper range after the hold. So you kind of want to see it go up today and close yellow if it's going to be bullish. But it may come through here, stay bearish, come down, bounce, go up. Could bounce off the backside here. And failing that, we come down into that hold. So at the moment, it's just kind of wait for that liquidity. Volume is rubbish. It's a weekend. There's not too much going on there on the daily.
By the way you look at holds, so actually you don't actually trade it, but you use it as a confirmation, or to judge on the trade you want to take. You mostly take origins, right? Or do you also take holds?
No, I take holds. Take holds, take origins, take trends. Equal opportunity
Okay.
moneymaker.
Yeah.
The
Depends what's on the menu for today.
Yeah, I use it more for bias, because if we were to close down inside here, I'd be thinking that I should be a little bit risk off, particularly because I've already looked at those other things. So if we've already looked in here, and if this is looking like it's trying to break to the upside, and Sol is looking like it's trying to close inside the hold, and BTC is looking better, but still it hasn't technically broken trend yet. If you start to see things like Sol closing back inside holds and not actually creating new ranges to the upside, and this stays up here for close tomorrow, create some kind of hold level, then you shouldn't really be longing an altcoin. You know, that's so it's kind of everything together that gives you a bit of an idea about what you should or shouldn't be doing. And what I'd really like to see is this thing pull back down below the trend, go blue, close down, and that gives it
maybe at that range, at that trend level.
Yeah, I mean, it may have to just simply go up to reject, but that's where it all comes down to the timing, because if it hovers here for long enough, opens above the trend, then hits this, then it's got a better chance of holding and keeping to the upside. If it goes and hits it right now, it's pretty shot because it's come from the underside of the trend. So if it comes up and hits these levels in the next 15 hours, then it's got a better chance of pulling back and going down. So, and you just can't really guess at what it's going to do. You just sort of got to wait to see what it does and then have a look at where the others are sitting at the time and then execute, basically.
Okay. So it really dictates the trend you take. Okay.
Yeah.
Okay.
So this pulling down to this hold is partially why you've got risk assets looking to break to the upside, and therefore general weakness in alts. Same reason that this is not bouncing.
So we are looking for risk off where altcoin go down and BTC might claim higher dominance.
Yeah, and totals. So if we look for totals, we're inside the break and hold on the totals, including BTC. So we're basically just fighting between creating a range and a hold and using the top side of this trend to try and push up. But even if it does push up, it's going to run into another trend. So this is really just struggling.
Maybe a little breather in terms of liquidity.
Yeah. Yep. And during this time, people will be guessing. People will be coming up with whatever reason that suits them to open a trade, long or short. And so what's going to end up happening is this liquidity, which looks pretty empty, very much weekend looking liquidity. You just got big blocks, but you can see there's these people up here. They think it's going down. You've got this layered leverage. So but here's the thing, all the structure says it's actually going there. So all it really takes is for enough people to believe it's going down, for this pool of liquidity to become big enough, and then this probably is going to go up there. So could you open along now? You probably could, and it's pretty safe as a swing position that it should come up here. Would you miss out on some form of opportunity? Well, yeah, because if they don't go straight there, the way to get more liquidity there is actually to bring the price down. If it comes down, more people will be convinced. They'll open their positions. This will become bigger, and then that's where the structure says it wants to go. So yeah, it's kind of a bit of a game where you're playing chicken, because it could just spike up there and take that.
Because my next question would have been on the liquidation level, on the the liquidation levels again, because you said you cannot trade on liquidations.
No,
but
you trade on structure.
Exactly.
But liquidity is kind of going to give you an indication about boring time versus price is going to move time. So up here, as it builds, it's more likely that this is going to start the move. But the move to that level is actually dictated by things like bigger hold levels that we're bouncing off, range retracements on the weekly. You know, the things that are actually pointing to here are structural things. When it goes there is a matter of when it's efficient to go there. And it's only efficient to go there when there's liquidity both there and in between. Because if you want to push the price up into that pool to sell or to open a position, you don't want to have to buy it up into there. You don't want to be doing that. What you want to do is buy it just enough to trigger someone's stop loss, and their stop loss does the buying for you, which moves the price. And then what you do is you launch limit orders at that level, and those limit orders get filled by the liquidations being triggered as market orders. So at the moment, it's kind of a case of sometimes price looks like it wants to go down because what they really want to do is actually create that. Then you get that spike to the upside, fills it. Then you get generally the true down comes after that. So
they're hunting for liquidity a little bit up by pushing people with saying, okay, we are going down.
So open a short.
Okay.
Yeah, that's
exactly.
Effectively, they're creating it. So the structure of the chart makes people make a choice, and often that choice that they're making is to benefit the person who wants you to make it. So you've always got to ask yourself, like, am I making this choice, or is someone making me make this choice? That's the difference. And there's some really, really obvious ones, and they're so stupidly obvious that I just don't understand why most people get trapped by them. But just things like equal highs, you know, double tops, double bottoms. Yeah, it's like, oh, put it under the equal lows because it's safe. It was never able to go past there. It's like, really? So you and 95% of other people are going to do exactly the same thing, and then that's where it's going to go. So, you know, there's just stuff that's really stupidly obvious, and then there's sort of behavior that's not so obvious. But that's
because my monkey brain says, okay, if there is liquidity there around 65 area, I will probably add or place a limit order buy around 65 50 or a little bit above, because there will be a liquidity sweep and then we go below, or vice versa. But
so I guess at the same time, you know, you've also got liquidity down here, layered liquidity at 63. And so you'd have to have a look at the chart and go, so what actually structurally is at 63? Is there some reason for BTC to go to 63? So if we look at that, it's probably a daily hold, or it'll be something down here. 61, 60, let's look at that. 62. So basically down in that 63 area could be a trend retest, because we did break the trend and haven't gone back down here yet. So it could be sweeping down into there, which would actually be even lower than 63.
So the liquidation level gives you a lens of saying, or an indication of saying, okay, these are some important levels. Let me see structurally what's happening there in order for me to take an informed decision, or a trade based on the, you know, some decision that I can take. Okay,
that's it. And then if we look at where we're sitting now with BTC, so we're above a break level, we're above a trend. We have a range trend retest sitting here at 65.2, 65.7, and 66. We have break level retests and origin level retests. And then after that stuff, it's all the way up here at 69. And those really high time frame ranges that we closed today, the wicks of those candles that we closed under are 69. right? 69.1, 69.3, they're up here.
Mhm.
And so we've got this huge air gap up in here if
Mhm.
we break this trend. And we've got reasons on everything from weekly to multi-100-day timeframes
Mhm.
to come here and then
Point on that direction.
and then reject off there. Now, what we
Mhm.
don't have is a lot of liquidity there yet.
Yeah.
And so that's kind of why liquidity is the timer. Structure was already decided. The
Mhm.
weekly retrace was decided like 3-4 weeks ago. The
Mhm.
really big timeframes that close today are multi-100-day timeframes. And what we don't have is all that liquidity all the way up to 69 yet. That's kind of where,
Yeah, we are.
you know,
It's empty. Mhm.
and if it builds and develops, then we could get, a spike, or we could
Mhm.
range up, range down, build some more. We could do it in a boring manner, but
Mhm.
one way or another, we kind of need to break the trend first, and we need to hard close the level. And once we do those two things, we'll probably have that liquidity there by tomorrow. I
Mhm.
reckon if that closes up there, particularly if they have some fun with it tonight, like if they wick it
Mhm.
down and
Mhm.
start pushing down into the trend, then they've already created a hold level here. If they
Mhm.
push down through the top
Ah.
of the trend into that hold, it's probably going to come back up before the close. But in doing that and coming down, more people will open shorts up here.
Mhm.
And
So that hold level could be a good trade actually if we go
bingo.
down.
Yeah, a hold level below a trend,
Mhm.
if the candle is above the trend and comes down into it, is usually a very good place to get an entry. The question is, how far down will it go? Does it go to this one?
Mhm.
All the way down here, maybe. But anything sort of down in that area, if it goes there first, is a really good indication that they're then going to spike up here.
Mhm.
Meanwhile, we
Okay.
sit there. We sit, we wait.
Yeah, we sit and we wait. Exactly. Okay. And going back to the questions, let's have discussion on stop loss
Mhm.
or invalidations that
Mhm.
makes you skip a stop loss and
Yep.
exit a trade.
Yep.
Like, what are the invalidations that I know you are very cautious and you're teaching us that, meaning you always wait for, you don't have to take every trade, and you wait for hard closes and confirmations before taking a trade. But when does even if you have entered a trade cautiously,
Yeah.
you say, okay, no, this thing invalidates my thesis, and I have to cancel my stop loss manually, or if you actually use stop losses, and then exit the trade. I don't know.
I mean, I know where I'd put a stop loss, but I'd only really be using it for potentially black swans, and I would do that if I was going to go to sleep with the trade open. So, or if I was going to absolutely stop paying attention to the charts or something. So, I'd put it under here, just put it under the lows, and it would be very weird for a price to go through this hold, through this hold, through this hold, through these levels, and go under here. And if it did happen, there's probably something really big that's happened.
Yeah.
And if I got stopped out on that, the first thing I do is reassess what is happening. And if I see that it was just some kind of epic liquidity sweep and it's moving back to the upside, I'd be jumping back in. So that's the kind of thing that could happen October 10. It's the kind of thing that could happen COVID breakout.
Yeah.
It'd have to be a real big. It'd have to be a big reason for it. Other than that, I just wouldn't enter the trade. It's
Okay. Yeah.
and I think that's probably if you only enter high probability trades, very rarely are they ever going to get invalidated. That's that's kind of the easiest thing to do is figure out what actually works, and always trade with a bigger bias. So the bigger bias is still that we're going to come up to 65, 66 based on the high time frame. And until then, it's really just a case of, do I get confirmation for another long? And if I do, I'll take it and take a conservative TP. So if I was looking at this daily trend break, I'd be taking some profit straight here. When I hit the backside of that trend, I'd have these TPs preset so that if it did a liquidity sweep straight through, I'd be TPing instantly without having to think about it. And if it went all the way up to the trend, I wouldn't care. You've made a trade. You made what you need to make. I'd look at the fib levels I've got here for the range, and I'd look for just stupid confluences like this where they're just so close together. You got the trend and you got the 1618, and then I'd look across at other confluences. I can't even remember what the heck they were now, but there was range retracements up into this area. I think on the might have been lower time frames. Just check. What have I got there? Okay. Yeah, so I've got just an absolute series of things from March that are all sort of between 8 hours and 2 hours, and there's all sorts of stuff just sitting right at that level. So a spike
That's
up,
a good take profit.
yeah, it's just a good place to take profit. And yeah, they might go through it, so I'd still have half of it taken here, and I'd have some TPs up at these levels as well. But at the same time, if we rejected off that and started heading back down, just close it. That's pretty much the way. And at the moment, it's doing
maybe
nothing.
I take a break even. I take a stop loss at my entry.
Yeah.
Just to close at the break even, and I still locked in the 1618 and the confluence around that area.
Yeah.
Yeah.
And because it's not this will not create a range unless it closes over that. So if it comes up and rejects it, comes back down, trades over. You've also sort of got to look at, it's really about timing. It's about what it does with this candle, because you can break this trend, but say for example, in 10 hours, this spikes up and hits this level, starts pulling back, still breaks the trend, but the wick is so long on this candle, if it closed yellow with a big wick, that you then open underneath. Now at that point, you could end up doing a deeper retrace back to the body of the hold before potentially then pushing back up again into the trend or going sideways to break the trend. So it's execution when you're dealing with an open candle. You just can't really make a choice. But once this thing closes, and once it closes a certain way, so if we go up to this, see if it closes exactly like that, it's a break, it's a hard close of a break level, it's breaking a trend, and it's opening over the top side of the trend again. At that point, I wouldn't be worried about any kind of dive down. I wouldn't consider that as even an invalidation. I just consider that as a way to get a greedier entry, basically. And I would expect it then to bounce.
Okay, let me challenge this with a thought experiment. What if we go down and we close this candle below that break?
Yep.
Because maybe we find in the very lower time frame, like on the 1 minute, on the 3 minutes, like an opposing engulfing level.
Yep.
Wouldn't this buy into the thesis of okay, we have a polarity on that break that might become an origin, or we are advancing, like we are playing actually, because this break has not become an origin, so no.
But it came from the other side. So
yeah, it came from the other side.
You notice we haven't actually touched
now...
it.
Yeah.
So very subtly, this hasn't actually touched that level, even though it's above it. So that's another thing, is we could technically hard close this, come down and test it from the other side and then bounce off it. And it's already showing sort of some subtle signs of polarity because this candle hasn't gone back to it.
Yeah.
So that's kind of another thing to be taken into account, is if this just doesn't change whatsoever from the way it is now, the next time we touch that level, we could see volume come in.
A bounce.
Yeah. But if this comes down and closes below the wick of this candle, I'd be considering that they're done. They've kept it here long enough. Maybe tried to get people to open longs. And then we might see, some kind of pullback because it's closed under that level. If it comes down and closes back up under the break level, same thing. I'd be expecting that, they've just hung around here long enough to get people to open some more longs. That would also be another reason why I might think, okay, well, we're not going to come straight up here. And the ultimate trap, and the reason you'd be looking to short every single pump into here, would be if it closes lower but goes up anyway. That's when you go, uh-oh. So closing under the structure and then pumping to the upside is a definite sign of they've created the liquidity, top and bottom, they're taking it from one side, and then it's going to go the other way. So that's that's another option. And at the moment, all we have is a doji. If it gets a support trend, let's see where that is. Zoom out. Jeez. There we go. There's our trends. You have to go so far out just to find trends these days.
Yeah.
Okay. So we're quite away from our trend. We've created it. We haven't revisited it. That's down there, funnily enough, at 63. So
where there was a liquidity cluster actually, around 63.
So created it. Haven't. Yeah, it's just been testing it from both directions. So that trend could bounce. So that would be another reason to look for an entry. If it was to close up and then liquidate 63, you'd expect it to bounce because closing up structurally means it's probably going to go up. But if it then came down and liquidated the lower level, then it's really going to go up. And that's what you see in sort of bullish flushes just in the bull market. You'll see structure close to the upside, works down, touches the left behind hold or the trend or something that's down here, liquidates, and then pumps. So we've got a trend
question. If we look at this on the 3-day, we have a clear engulfing, right? No, sorry.
No. You got a range trend that you're bouncing off.
Yeah.
And you got another range trend that's a target up here. So 15 hours to go on the 3-day. We're bouncing off this down here. And we've got this sitting in our way up here. But we haven't lost this. So we came from the top side, yellow candle, yellow candle, yellow candle. So that's not necessarily a problem. This candle may push up and close over this, and then that could give it another push to the upside. We haven't lost this level. We haven't lost this level either. And the first actual hard closed level on the 3-day is this backside hold level here, also break level, sitting at 70k. So there's a lot of potential for this thing to go up and hit that. It's the first hard close, not tested, but hard closed. Most of this stuff up here is not tested either.
But above 66, I think there was no liquidations, right? So
no, not really yet. But you don't know what will get created. All they've really,
as the price moves.
Like you imagine, all they've really got to do is get back above this range trend, pump the price up to 70, start rejecting, and then people go, cool, I'll short again. And then forgetting that this was just a huge sweep and deviation of a range trend, and if it heads up here and then bounces back and hits that thing, it could just explode to the upside. So it's not really polarized as anything at this point. And we've got this origin that we could recover through here. So we've come through it, haven't lost it. So if we do recover that on the 3-day, and even that one above, that break. So everything, and this is kind of the troublesome thing with BTC at the moment, is the structure itself could easily go back up. It's engineered that it could go back up. It's just will it? And
or when?
Yeah, or when. And if you're sort of got a overall bearish bias because of the high time frame, then it does kind of make sense for it to at least go back up and grab some shorts before going down lower.
Jumping down.
Yeah.
Because we have some higher time frame obligation around the 50K area, right?
Yeah,
that we haven't touched.
Bingo. Yeah, 50K and 48K and all that kind of stuff. So yeah, it could just go up, grab some liquidity. Then you sort of look at the liquidity charts, and the weekend's not really an ideal time to look at liquidity charts because it tends to be pretty much empty. But as it starts to develop tomorrow, and if this area starts to get full, maybe we close up over that range trend and bounce, come up and hit this trend, hit that 70, 72 area even, very possible. And we might
then reject strongly on the
can reject off that. So you know that it's getting bullish if this thing gets over the range trend, sneaks over it, pumps up, holds, sneaks over the trend, pumps up. That's the kind of behavior you're looking for. It's just how it moves through the levels effectively. So it's but at this stage it's
just to confirm, you never look at news about war or other stuff happening because you say that this actually reflects on the market, on the charts, right?
Yeah, I mean, if you think about how many times they've fired missiles and the chart's gone up or down or nowhere, the charts are only going to move to liquidity and they're only going to move to structure. And there is
during high manipulation, like the October 10th incident.
Yeah, well, even that was just structure. It was just really big structure. So
with regards to that, sorry, let you finish.
There are certain levels. Did you see the part on singularity levels?
Singularity levels? No, I haven't.
So there are certain levels on the chart that are just crazy nuts levels that create big reactions and rejections or supports. And
singularity or polarity? Sorry.
Singularity.
Okay.
So you've got these things in here. So they're effectively range levels, break levels or origin levels. They're typically origin levels that exist on one time frame only, and they normally create large reversals. So this is where you see big pumps, big dumps, and you find them both
like the 141 Solana level was a very old hold level.
Yeah, so these are different because a lot of them do not exist. Well, actually, sorry, none of them exist on anything more than one time frame. So that's the first thing.
Okay.
And some of them exist simply on just a 1 day time frame, nothing more, which means they will have a reaction typically within 1 day. They will either break one way or the other within that 1 day of being touched. And when they break, unlike a lot of other levels where they exist across multiple timeframes, these things, when they break, they break. And so you've got this option here for singularity. And So prices like 6K, BTC, they're the real bottoms and the real tops. But these things created those huge moves. So if we look at what some of these are, like 120s, one of the ones that we bounced off. So things like the bottom for the Germany sell-off, which created the whole move to the upside from here.
Yeah.
So these are these types of levels. And so if you go digging into it and you have a look at what we hit around October 10. So October the 2nd, 2025, we'd just run into this thing.
On the 11th day.
And
yeah, because I remember Blue was calling it in the chat, but everyone was too hyped up, I think. Me too, Me too.
That 10-day singularity level, goodbye. That's basically the end of price, as we know it.
But also maybe on July, on January, beginning of the year, when we hit that higher Solana
so
highest price. What's it called?
13th,
my English.
13th January.
Time high. Yeah, exactly.
That one, which just nuked it. Yep.
Yeah.
So, and then of course you've got things like Trump inauguration, and most of the really big events are going to be floating around in these types of levels. And so they're there. They're on the charts. They're just hard to find. Most people don't know what they are. And that's kind of why...
These are still origins, right? So these are events that have like...
So they're singular polarity because they exist purely on one time frame, and they just kick the living crap out of the price. So that's the...
But when you say they only exist in one time frame, it means that during the day, if I have my scanner on, I don't see any hold, any range, anything. I just see that level.
You'd see it. You'd see the level, but you'd only see it on one time frame. So most big levels exist on lots of time frames, and that's kind of how you know they're important. But the irony of it is that if it exists on 30 time frames, it's probably important. If it exists on 2, it's probably not. If it exists on 1, it is. So there's very, very few things that just purely exist on one time frame. And I don't know how it even does it, because I don't know how you actually create a 143-day level without creating a daily level. But structurally, it only exists on that time frame. It's not there on any other level as what it is. So they're just something that we ran into a long time ago and just started going, this is weird. These things only exist on one time frame, which would make sense if it was a daily. Of course, a daily could only exist on a daily. But when a 440 or 143 day level only exists on 143 day and doesn't exist on any other time frame, that's odd. How did it have a top or a bottom?
But you would be able to catch it because when you usually open the trading day, you look at what are the closing time frames on that day, right?
Exactly.
Or would that help in any
So
manner?
you'd see it on that. You'd see it when you go through your routine of checking out the daily closes. You wouldn't necessarily know it is this, but you would take the precaution anyway. And in a lot of cases, you would have a pretty good understanding that it was an important level, because you'd see that if it's one that's already been touched, you'd see how big the dump was or how big the pump was off it previously. And if it's one that hasn't been touched, no, you wouldn't really know without actually coming in here and going, well, that level only exists on a singular time frame. So that's the button there.
I see.
And there's not a huge amount of them, from the very, very, very bottom of BTC to the most recent highs. It's not too many. And you can see the problem if we go up 77, 79, 81, 89. These are all levels of this type.
Mm.
So if we do pump, it is very possible that we hit this stuff and we just take a big fall. It's also
Mm.
very possible that, we go down, we accumulate at 30K or whatever, and come back up and hit these as part of next cycle, and they can just be the first sort of pullback. That's possible. And I'm sure there'll be a news event or whatever.
Yeah.
That's kind of why I find it so comic, is that there's the Germany sell-off, it lands on a level, has a big bounce. And if you look at the Germany sell-off, it was a monthly short. So a monthly short that landed on a singularity level to the cent, to the 30, to the 0.33, and then bounced. So the monthly short sent it there, the level sent it back to a much higher price point because it was way stronger than the monthly short. So all you really had was a monthly short that went up to like 71K, greedy level. There was distribution, positions got unloaded, they went down, everyone bought that singularity level, $53,333.33, and then the price pumped to an all-time high. And all of that was explained somehow with news, because people wouldn't understand this.
Of course. It's it's not an easy concept, but it makes sense. So
that's kind of why
it's easier to understand news.
Really waiting to see what
Stock
happens
goes up.
when we enter those 50s. Do we have to enter the 50s to then go see the high to then reject back down to a lower? That's kind of the bit that, or are we going to go up first and hit these higher
And then
levels
reject.
and then reject down to these lower levels? So,
Mhm.
but there'd be good levels to, if you were looking to DCA into BTC, 56, 53, 50, 49, 37, 36, 25. That's basically, those are just DCA levels if you've got a really long-term perspective.
But because you say that eventually we are going to touch all the levels, or some levels actually.
No, there's always going to be some left behind. So I don't, I wouldn't necessarily think that you're coming back down to 7K. The biggest minimum obligation holds that exist, I think, can get BTC back down into the 20s, but it's but even they may not play out because holds travel to trends, and if they take too long to actually get to the target, a trend will form, and the trend could stop it. So so even heading down to these levels is not necessarily accurate. But I then have a conspiracy theory of
love it.
The pool of money and the interest is different this time, and everyone kind of sees that as a positive thing. They sort of think, institutional investment, but I think you'll probably find institutions want to screw over institutions more so than they do retail. You know what I mean? Institutions have money.
Bigger fish.
It's bigger fish. So, and there's always going to be a bigger fish. So if we've now got a bigger amount of people interested in this and they're looking to build even bigger positions, who's to say they're not going to try and knock a large institution out? It could happen. So, and at the moment, most of what people see as institutional investment is actually just ETFs with lots of little people in them, whereas if a really big institution really does start to get in behind this thing, maybe someone will take them.
Yeah. I can subscribe to that theory. But the interesting thing is that I don't want to get into the news so much because times and times again it proved to just be noise on the charts.
Yeah.
But the big beautiful bill, Genius Act, etc., that is allowing banks to build their crypto coins and offload the debit of the dollar on their customers. yeah, potentially I see us dumping a lot uh, around that below 50 area. I don't know about 25, but maybe high
Yeah.
30s we might see.
I mean, I was looking
You
at
know, that's just
I think it was the 89 day, something we closed just recently, which is about 35, I think, is a target.
Mhm.
So there's a couple at 35, there's a couple around 20s. But we've got to get through some pretty big stuff to hit those levels. So
Mhm.
you'll know if it's going to happen because it'll happen. You'll see a daily close. You'll see them troll something and close on the wrong side of it, and then there you'll go, oh, the catch is just to get out if you're in a long and or have a stop loss or wait, because we haven't had a cycle yet where we don't bottom around the same time and start to recover around the same time, and that time is
Yeah.
not now. So it's
We are still a few months, I guess.
Yeah.
on that cycle low. So
yeah. And if we see a different one this time, then maybe we forget about cycle lows and cycle highs. But until we do see it change, I can't see why people can justify it being different when it's not. That's kind of my thought process. I don't see it being any different than the last 3 times.
I watched Bob Lucas thesis saying that he was saying, you know, a cycle is a cycle. Whether if we do another cycle low or like, you know, a cycle is time dependent, right? The price that happens between that cycle might differ. So
Yep.
yeah, but still, a cycle is a cycle, and maybe we have diminishing return cycles.
Yep.
But yeah, I
Well,
can agree on that.
Pretty much every BTC cycle seems to be about a 4 to 5 times from bottom to top, roughly. And all the structure that we can see when we look at the really big time frame would, if you then reverse that, you would say, okay, well, 50k is a perfectly
40K.
fine, 40 to 50k is a perfectly fine price if the 4618 on the high time frame becomes 250k or 260k or 230k. So all of that is quite possible, and all fits within the normal boundaries of everything that's happened before. So
in that case, would you potentially be looking at entering some spot position, or still you do quick trades and
I'll flip my stables to spot, and then I'll use that to collateralize the trading account. So through the cycle, as the price of BTC goes up, I'll be getting the benefit of that. But at the same time, until we hit the first sort of 1618, 2618 high time frame levels, anything I make out of a trade, I will take it out. I'll buy BTC and then I'll put it in to the collateral pool, and then I'll just keep doing that until we hit those minimum levels. And last cycle it was about 114k. I just took it out and just flipped it back again, and then it went down to 76. And then I was sort of cheeky and I think I bought it back again and took it up. I didn't hold it so long the next time, so I didn't sell the top. You know, I knew it was there, but it's just, you don't need to. It's why worth the risk? You know, we were so close. You know, and if you missed it because you were in bed or whatever, and by the time you take everything out, because number one, you got to close your trades, close your positions, take all the collateral out, swap it, then put it back in as USDC or USDT, and then you're probably not going to reopen your trades anyway. So I just started taking it out at 114, and then I did one more cycle, and then I did one more big spot buy when we hit 60k. Took that up to about 68. That was enough. So, and everything else is really just trading.
Yeah, because I remember also a discussion in the chat some time ago when we were at Toppy, that you were saying, exiting now would be good because when we are very lower, you would regret not taking out some
Yeah.
spot position, and I took that to heart. Also
Yeah.
with Blue advising. Yeah.
I think some people did, some people didn't. I mean, you've always got the ability for this stuff to go for another run to the upside, but
Yeah.
it's just, I don't know, if you've run it from 20 something K and you've times your money by 4 and you've been adding to
Still
it with
happy.
all of your wins along the way,
Yeah.
do you really need more? I mean, greed is
Mhm.
effectively what destroys people when
Makes-
trading, because they just hold it too long. They get some emotional belief that it's going to keep going when the chart probably says something completely the opposite. So, if you're going to open a candle under a trend, the chart is not saying I'm going up. It's when you're going to open it under a trend with a hold, it's really not saying it's going up.
Under a trend, under a hold. Okay.
Yeah.
Yeah.
So that's saying I want to go down. Now, might it open and go up initially? Yes, it might. But you're playing chicken, with an oncoming car. If you open along under there,
Yeah.
you really need to see it come down, and then you've got these little levels that just didn't quite get touched down here at 48K. If you're going to open the trend and you've got an untested hold at 48K, and you're opening under the trend and under a hold, even if you do go up, you're probably coming down. So just a case of which one it does first.
Yeah, and maybe it's just a week, like a high liquidation level, but maybe if you have your fishing net with a limit order, you'd be happy.
Yeah, you catch something down in here. So if you bought 48K or below, somewhere between 48 and say mid 30s, and if it did go down to 20s, and it was just spot purchasing, I really wouldn't be worried about that. That's not. It just probably means you're going to be holding it a bit longer. But yeah, if you were DCAing in down in that area, I think you're pretty much okay. That's very deep inside the holds, down at the base there. And
yeah. But one question: why did you put the hold on the wick in that case?
Because these two candles fully engulf that wick. And
because the two full candles,
these two,
okay,
and
okay,
they stopped just before it when they did that pullback. So those are just little things you see on charts.
Oh, I see. I mean, it's smarter because you say, it maybe. Okay, I understand.
So this is
even if it's
this one.
There is a class, not a clusterization, but there is an area of interest.
Yeah,
that wick is pretty close to that other wick.
So
didn't really close, but you have a double engulfing that eats.
Yeah. So at a lower time frame, this is going to have different parts inside of it. So if you were to look down from this level and find something smaller, you'd probably find a backside, a middle, a front side, like a full blown hold down inside here. Now, the fact that this didn't touch the level is a sign of that being pretty close to the backside. That's kind of like a FOMO level. And the price never quite touched it. It just rapidly bounced when it tried to touch it. Yeah. So I'd be looking at that as sort of a starting point, but at the same time expecting that because it's already had this kind of rapid bounce off there, I would expect it to come deeper into there, but that would be a start point. And it could even have a bounce off that level from the beginning and maybe even come back all the way back up to the trend. So it's not a bad area to start an entry because you might find that you actually just get a really big scalp out of it, like a $20,000 scalp. Yeah. And then it could come back down again. But to really dig into this level, what you need to do is start looking at some of the lower stuff, because by itself, it's really just one candle. But if we start rolling down, and you've got
Oh.
this down here, which is even lower.
Mhm.
So it may come all the way down to that. And what you really want to find is you want to find a level that's got a full range inside of it.
We are looking into catastrophic events if we see BTC at 20K.
So here's the scary part.
Mhm.
This is a backside level up here.
Yeah.
This is the front.
Mhm.
This is the unsustainable move to the upside. This is where we are now. We're having a weak bounce off the backside, which we already had a bounce off.
Mhm.
If we go back inside there, the front side is down here at about
Around that
30 to 28K-ish.
Mhm.
It is very possible that it goes down there. So I wouldn't totally disregard it. And that could be the thing that's different about this cycle, is that maybe they really hammer, these bigger players that have actually bought into it. So we're back below this trend, closes tomorrow. So that trend shifted to here, created that. So if this trend at 55 doesn't hold, then
we're looking,
well, yeah, down you go. You got 51, 44. These are all parts of the range, obviously, but you could. It's not out of the question. If this doesn't hold, and if we close under this area, then these lower levels. Or if they just want to completely liquidate the living crap out of everybody, then this could be a wick.
I'll have my conspiracy limit order buy.
Yeah.
Around.
Look at
for some spot.
You look at that trend. So that is the trend from the bottom, the bear market, last bear market. So previous cycle low, this cycle low, and next 14-week candle, that hold crosses that trend. That's the kind of stuff you don't want to see on a chart. And because price is limited to only traveling in the vertical, right? All it can do is go up and down.
Up or down, yeah.
And if you get a point where there is a horizontal level crossing over with a trend in the vertical time frame that you're about to enter, it's not so flash. So who knows? We don't know what happens, but I'm sure if they announce a nuclear bomb somewhere, that's going to be down there.
Yeah.
So, should you put a limit order there? Hell yes. Just see what happens.
Yeah. Actually, maybe that singularity search that you did earlier could point on that direction. Could be a good buy entry around the levels that the singularity were showing, right?
You've got those 30K levels down there. So that's kind of why I said if you just wanted a DCA into into Bitcoin, you just put an order on every one of those levels.
Yeah, might make sense. On top of trading on the daily or on the 4 hours.
Yeah.
Okay. No, very very interesting. Very interesting. Oh, okay. See, I have some theoretical questions.
Yeah.
If you okay,
Sure.
let me start with the actually makes more sense to start with breaks or with origins, because origins starts from break, right? So
yeah, breaks are the start,
Okay.
and then origins become. Yeah.
Okay, then let me start with the questions on the break. So, how often do you take a trade a rejection on the first touch of a break before it becomes an origin?
No.
Even
No,
yeah, you don't.
because it's 50-50.
50-50.
Yeah.
Yeah,
you
said it
you
earlier.
could you could watch it, and if it closes back inside of it, then maybe. Breaks, if it goes through a break, comes back up, it is probably going to go up and hit a hold. It's probably going to go hit another break. It's probably going to hit a trend. So you could, but you'd need to wait for it to touch it and then close back inside of it. And then it's no longer sort of 50-50. If you just put a limit order on it, it's
50-50.
There's so many better trades you can take that are way higher probability than 50-50. So just nah.
And another one, on your indicators, so what is the difference between an origin and a touched break that shows rejection from the indicators?
So an origin and a touched break. So a touched break won't stay a touched break for very long, because if it's a touched break, it's going to either get broken or become an origin somewhere in the next few candles generally. So this one up here would be one of those weird exceptions. Like we've hit this break, we've come through it, but because we've not closed any blue candles underneath it on the 3-day, it's still technically a touch break. And all it takes is for this to get back above this and then have one candle that doesn't go back to it, and that can become an origin. So a touch break will be a touch break until it is either broken or becomes an origin. And in most cases, it's going to do that on the next candle. It's just in the rare situation that it comes down below it and goes back above it, in which case it quite often becomes quite a good level, because this kind of liquidity sweep and deviation to then convert this to an origin often makes that quite a decent level. But does that answer your question? It's a touched break until it is either broken or becomes an origin, one way or the other.
Okay. Okay. After a break is invalidated by a hard close, can that same level be traded again in the opposite direction? And this is coming from a polarity, right? So, how?
Sometimes, because sometimes a break level actually becomes a hold. So yeah.
Okay. A break can become a hold. Yeah.
So see this break level that's here.
Which one? Okay. Yeah.
So this one right here. So this is actually going to be the backside to that front side candle. So this break level at 76,271 isn't just a break level. It's actually a backside hold and a break level. So could you trade that? Yep. Is it going to reject as a break level? No, not really. Is it going to reject as a backside hold? Very possible. That's the actual trade off that thing. Now, if it didn't have this yellow candle sitting here, then it's just a break level. And could you take a trade off it? Yes, but you're not taking it as a backside hold. So it's probably not as likely to reject if it wasn't for the presence of this candle here. So yeah, same as this one.
Okay. And so after a break is confirmed, how often do you expect a retest before continuation?
Before continuation? Not often, really. I wouldn't expect one.
Okay.
Eventually, 95%. Eventually.
Okay.
But yeah, it's like at the moment, we're about 68% untested breaks in the market to the upside. I think 68 or 63. So it's like anything. We're sort of expecting it to go back up just to do some of those things and come back into balance a wee bit. But how far will it go before it goes back up that's a whole nother question.
So,
more a question of where is the liquidity to be taken.
Okay. Origins. I mean, I asked it in the Vanguard chat, and some other people answered, but just to for confirmation, to form an origin from a break rejection, do we need or not 2 same color candles?
No, you don't. All you need is one candle that doesn't go back to it. So now, of course, the stronger the range that comes off it, the better the chances are that it's actually going to have, some kind of support in the future.
Mm.
But even that's not always going to be the case. You look at what they did here. Plus, you've also really got to figure out which time frame you're actually looking at, because that level at, what is it, 65,560, I think. Let's see. Make sure I got that level right.
65.
It's a bit blurry, isn't it? Make it bigger. Oh, look, there's 2 levels in there.
Yeah, it's 2 levels.
No wonder it's blurry. So we got 65,569 and 65,556. So come in here and have a look. Okay, so 65. Oh, I'm on hold. Whoops. Yeah, so it's a 2-day, a 4-day,
and a 3-day.
And a 3-day. So it hasn't actually broken on all of these timeframes yet, but it has broken on the higher one. So so we'll see what that did. Yeah, so
I mean, we might expect a rejection. Actually, this confirms also the liquidation clusters that we have around that 65 area, right?
Bingo. Now we could actually recover and break through this, because if we create this hold on that candle before the close of this, then we might have a hold level to actually push the price up through that origin again. So, and there's also another one. See that the wick of that candle there? Touch, touch, no touch. So what we might end up with is a move between 65 and 62.5 again. Now that pretty much takes out all of that liquidity, right? So, so structure is effectively developing, and liquidity is developing in the areas that the structure can go to. So our support and resistance are sort of forming to probably take the liquidity from both sides.
I'll be looking at that closely, because I'm taking more of an academic, studies on what you're teaching, basically. And I have my thesis, and I want to see. So probably we're going to go with the body a little bit above that origin. If we close above, and then we have an opposing candle going back down, that might be a good entry, but I'll be looking for those engulfing on the lower time frame to see if the direction is confirmed with polarity, right? And then that's a high conviction trade, but I have to look for liquidity sweeps on the upside, because that 65, 50, 500 area, we might go a little bit above again to scare people before going back down, right?
And the thing with that level is we haven't actually tested it yet from the other side. So this didn't touch it, this didn't touch it, this didn't touch it. So first we've got to test that level. And when we test that level, it could reject down to this level at the bottom, which could bounce back up to that again, and actually go through it. Or it could come down to here, stay down here, and because we've touched this and then stayed down here, that becomes polarized from the other side. The next time we touch that, we could get a bigger rejection off it. So you really can't tell what is going to happen with that candle until it actually does whatever it's going to do. But at this stage, it's a level that could reject, but it's not necessarily a level that will reject, other than potentially the first touch of it, which might have some kind of reaction, and then it's about how that reaction recovers as to whether that is actually resistance. And
maybe they fake a move higher.
yeah,
So a lot of support goes into liquidity on the 62 area, and then we take it.
yeah. And you've got other sort of reasons why it might reject. So
Yeah.
this blue hard close below that blue hold candle there. Now that means just above that origin level, you also have the wick of that reverse hold. So that's sitting in there waiting. And then when you look across the amount of levels and ranges you've got in here that were all engulfed by that move, up inside here you've got a whole bunch of, like that level there at 70k. So that's a backside. So if we come at the backside from the other side of the origin, hit that, we could reject back down. So it all depends on how much liquidity gets formed in that gap. But approaching it from this direction and then hitting that backside hold could result in a big dump, straight back down and down again. And maybe the whole thing plays out over a period of 4 to 8 days, so up into there and then down it goes. So yeah, there's all those possibilities. What do you do when you trade? Well, you take profits. You take profits at that level because it could be it. And then if it does close up over the top of it, you'll probably get the opportunity to re-enter. And
Yeah, exactly.
It may even wick down through it, hit the hold, and give you a better entry than where you took your profits. So, yeah.
Yeah, no, I'll probably, I think I'll probably do something like that. A limit, dipping the toes in, and then if we confirm going while we are above my entry, probably re-enter. Don't know. I'll think about it because I don't want to get stuck because I have to wait for the hard close before taking a decision. But yeah,
now's kind of not the time really to be getting stuck in anything because you're just dangling under the bottom of a range, So if we head up, the thing that I see is I'd look at those singularity levels that are all between basically 77 and above. I look at those and I just think to myself, well, maybe we do push all the way up to 77. But if we push into all those levels, it's almost certainly going to end up coming back the other way and going a lot lower. And then we've got all the bigger time frame stuff that we're closing below holds and below trends. But most of those holds, some of them are down in the 65s. Like we did close some of the smaller time frame holds that got created today are down in the 60s. So I think it's just stuff like, so the smaller stuff was pointing up. I think the 5-day was pointing up. Yeah, so 5-day was, is that the 5-day? No, that's the 5-day. 5-day was kind of just creating engulfment, but not great. But once we started getting into some of these middle ones, we were actually building holds to the downside. So just see if I can find one. Closing under break levels. And we snuck back up. Yeah, we did sneak back up inside that, so that's good. But we still got that. Still got that one. And that's sitting there at 65, 657. So same sort of area. And you got that little reverse hold just below it, 64.9-ish. Then we start to move into these. So
Engulfing.
below the
Is it an
break.
engulfing?
Yep. It's below the break and it's below the engulfment. So that's at 66,573 with the break level at 64,936. So we were still creating resistance today. These smaller timeframes are going to try and push up into this, and then these middle timeframes we're creating resistance, and then the really big timeframes we're closing under trend. So it's definitely not out of the woods.
Okay. Oh, actually, in my notes, but you just answered. The next question was, do you trade the rejection on the first touch of an origin, or do you wait for confirmation? It's the latter, right?
First touch of an origin. No,
first.
I would take a trade on the first touch of an origin. I would typically wait to see it touch it, and see whether it tries to push through it. Kind of depends on whether there's been any sort of liquidity sweeps of that area previously, and I'd also look at the liquidity charts and just see if there is a build up down below the level. But no, first touch of an origin is a pretty safe trade. I'd look to take, if I was just going to take it on the level, I would look to take it smaller on the level, and then see if it actually dives below it, because you'd always want to basically get that lower entry. But
yeah. So okay. That goes back into my thesis of maybe dipping my toes on the 65,500 level on that origin, and then see if we go a little bit higher. Maybe I enter again, and then with the confirmation, maybe I add a third layer, or I leave it that way. But okay. And okay, this goes back into the next question, which is targets, right?
Yep.
I understand that origin often target opposing origins, but also other structural levels such as holds, ranges, trends, and whatnot. No, actually, these are the structural level that we play with. But is there like a hierarchy of importance or strength in terms of levels that you need to look into? Meaning, like how do you manage that? Because I understand that the highest hierarchy would be origin to origin, if I'm correct.
Yeah. So an origin to origin move would typically happen if you've just completely lost a range. And
if we lost a range,
there might be a couple of origin levels, and it might close under one, dump to the other, bounce off that one, and go back up to the one above. That kind of thing. So that's when origin to origin would potentially play out like that. The thing is that an origin level is effectively the beginning of a range. So if you want to really, find trades, what you've actually got to do is look at when they're created, not so much when they get touched. When they get touched as a scalp trade, and the target of that scalp trade is going to be whatever is trying to break the range. So if you are taking an origin trade, let's just find, should we do it on the SPX? Why not? If you are taking an origin trade on the SPX, here's a really good example on the weekly. Because this shit works on everything, right? We sweep the origin, we come back up, we bounce. Now, the actual range is this. That's the range. Okay. And we created the origin, we engulfed the candle, we failed to get above the base of the range. We failed to close over the 1618. So the price rejected. Now, we'd already tested the body of the hold, roughly in here. That definitely got it. When that hit it, it bounced back up to that hold. So that was a move between there and that hold. That hold laddered the price down again, which comes down and hits the origin, being the base of the range. We accumulate under the base of the range. We never hard closed it. We never broke it. Got back above it, and we pump. The volume comes in.
Yeah, we never hard closed it.
Never hard closed it. Never broke it. But here's the thing. What's the target? Well, the target is what is trying to break the range. So the hold is up here is trying to break the range. So the sensible target for this origin is going to be this hold, because that's the thing that tried to break the range. That's the thing we've got to break. And obviously there was massive volume in here. This is when everyone was talking about how, you know, the it's going to dump 50%, blah, blah, blah. Short. Now, when you start seeing this, you think, okay, I'll short. And look what happened. I'd expect this to dump now, but not then. So the target for the origin in this case would have been that hold. Would that hold? There's a question too. Probably not, because look at how many times it was sort of, it was already tested. It wasn't an untested hold. It was a tested hold. It was hit. Yeah, sure, it came down. Where's the untested level in amongst here? It's probably that. It's been tested. Technically, that level even got hard closed before it went back underneath, polarized, and had that big rejection. So you're probably going to go to this hold, potentially going to go to that level. Anything past that is a bonus. That's where SMC comes into it, and you go, will they go past this? Almost certainly, because the entire point of this was to induce shorts and then knock them out. That was the whole point. So,
but you suffer a little bit on that enter at the first touch.
Yeah, if you didn't,
you dip a lot.
Yep. If you'd entered on the first touch, it would have been down underwater, almost certainly. The level that was your backup to get out was this hold over here. So,
okay, that other hold.
Yep. So if you had entered on this and it kept diving, when it closed up above the body of the hold here, you could have added to your position and even escaped at the backside of the origin right here. But in this case, it opened back up and went anyway. So yeah, that would have sort of been your way out of that trade by just trading that hold. But this is kind of a good example of a trade that looks
actually, yeah, I see an origin there. I see a backside hold level that has not been tested yet.
Yep.
Then I say, okay, that's a small cluster where I could put entry 1, entry 2, and then...
And you should have been able to escape that trade in profits regardless of what ended up happening with that origin. But it ended up getting above it. And you will see this kind of deviation. And I probably mentioned before, when you see a deviation below a level like that, it normally means the pump's going to be bigger because they're grabbing all that liquidity and they're going to look for somewhere else to deposit it, which is going to be over here. So those are reasons why you might take, say, a partial TP at the hold and just keep holding it to see where it goes. So origin, range. Now, this is the part that I think a lot of people in the Discord and a lot of people that follow me, and I probably don't explain this very well. The origin is the base of the range. The engulfment is the start of the range. So a created origin is actually your first sign that you're going to get a trade. And the trade is actually this hold, which is going to be a very high probability move. Because if you touch the origin and engulf the candle, your next step in range creation is to get over the base of the range, which is the 1618. So this is the most likely front side type hold you're ever going to see play out. So it's technically on the front side of the range, but it's after or during the creation of an origin, because it's actually this engulfment candle that confirms this origin. And then you enter on that engulfment and you take the scalp to the 1618. Now, if it gets up over the 1618 and hard closes, it's going to keep going through the range until it eventually hits the 4. That's and then when it hits the 4, it's going to reject back. So it's actually that hole created after or during the confirmation of that origin. It's actually one of the highest probability scalps you can take. Then the retest to the base of the range is going to go back to at least whatever tries to break the range. And like I say, if there's been some kind of move below it, it's probably going to go bigger. But yeah, there's a couple trades in there.
Yeah, because we have the hold that is close to the break. Then again, there is an older hold level.
So
Okay.
in the Discord, there is a command on the Origin bot, which is called Origin Recent. So
Recent.
Yep. So it's just Origin Recent. Okay. And if you type in Origin Recent, and then you've got options, you've got created or touched. And if you type created and then put the symbol in, so BTC, it will, and then you can choose high time frame, low time frame, whatever. It will give you in order the origins by creation. So you take the most recent one created, and then you bring it up in your chart, and you look to see if it's got a hold level. And if it's developed a hold level after creating the origin, or during the process of creating the origin, then you've got a hold level you can scalp. So that's Origin Recent.
Okay. Sorry, I was taking notes. That's definitely useful.
Yeah.
I told you I'm taking more the academic route because I want to, really understand this process because, it can really help. So, no, very interesting. Okay.
Having more water.
Huh? Oh, yeah, please
I'm
do.
having more water. We know what that's going to mean.
Yeah. Okay. And on the on invalidations, again, you said, we touched on briefly earlier when you said maybe taking a stop loss way lower.
Sure.
But with invalidations, you just wait for what? A hard close against given thesis. Let's take that.
Sometimes I would hedge a position. So, or a lot of the time I would hedge a position because you just see it reversing and you don't know where the reversal is going to go to. But so this, say this one here, I would have entered, TP'd, and we wouldn't have hard closed. Now, if I'd TP'd 50% at this level, when we created this engulfment to the downside, I'd hedge that 50%, and then the price would come down to the origin down here. So I'm now hedged. I'm not losing if it comes down here. I've effectively taken profits and I've lowered my entry point. I'd have a short that's showing up in profits on my account, and I'd have a long that's showing up in negatives. One's cancelling out the other. And then down at this point, I would, a lot of this, it's very tempting to undo a hedge when you're looking at it and you're going, oh, I'm in profits. Oh, I'll take these profits and then I'll bounce this thing back up and I'll make some money. But you sort of just got to sit there and not do it. Maybe you would undo the hedge when you hit this hold, or undo some of it. Depends what your liquidation is and how far away your liquidation is, but you might undo 50% of the hedge here. The price starts traveling back up, gets back above the level, you close the remainder of the hedge, and now you've taken your short hedge profits and you let this thing run back up. And then you can close some of the position when you hit the hold, and that might be a break-even or negative close. It'd probably still be in profits, but it might be a break-even or negative looking close on the long. But it's not really, because you actually have offset your entry down to here by having your position hedged. So sometimes I'll see the price reversing and I'll just hedge it, let it go down, take some profits on the hedge, and then sometimes what I'll even do is just set the stop loss on my hedge at entry, and then when it just blows straight back up through my hedge, it stops out my hedge and the long continues. So if you know that you're going to go to a higher level, this is often just to stop out the people that have opened their trades. It's just to people who started longing in here, they just want to take them out so that they can continue up. So if you hedge your position here, have your stop loss on your hedge set to entry, keep your long open. When it stops out your hedge and just keeps going, you're back in your long without any loss. And if you want to be a cheeky bastard, you take some of your hedge and close it when it bounces the hold. Make some money down here. But yeah, so
you were targeting, let's say, on the hold level above where you took the profit of 50%, open a short, and then you target again the hold level back down.
Yep.
Below.
And then you SL stop out your hedge, and one side gets stopped out, the other side continues on. So that's another way to sort of just deal with these kind of pullbacks or retracements. And maybe that goes deeper. It doesn't matter. You took profits up here. Your short is in profits. Your long is in negatives. Doesn't matter. It's break even. And then maybe it finds a level down here and it starts to recover from there, in which case you can close your hedge, run it back up again, close your long, make profits. So yeah. Now, a lot of people who are using things like Jupiter or whatever, they can't necessarily hedge things like that, which is some of the benefits of using centralized exchanges, even though there are risks, obviously. Yeah, that's how I would manage that. I was doing a lot of that when we were bouncing around at 60K recently. Sol was bouncing around at $60, and it was just a case of, okay, cool, we're going up, and we hit a rejection, hedge, wait, it goes down, hit some support, partially close the hedge, and then wait for it to bounce back up again, hit a rejection, hedge. So you can keep the same long open, you're just effectively securing it. And you just, there is one risk you run into, and this is something that did happen on October 10, and that's that most exchanges have the right, under the terms and conditions, to unwind a profitable position if the market gets too out of balance. And it's only in extreme circumstances they'll do that, but they can do that. And so you've got to be a little bit careful that if the market really turns to shit, then get out.
I was on Jupiter at the moment, and I managed to, I was awake, and I managed to hedge my longs. And recovered pretty, I recovered well. And luckily, the Jupiter didn't liquidate the position due to this kind of
So there's sort of there's reasons why you'd hedge, in a bull market, because bull markets have flushes all the time. Do you remember when we dropped like 10 or 20K in BTC in like a single candle? And some rejection that we went through when we were in the bull market, it hit a level and just had this massive rejection and then wicked back up again. So you have all those kind of flushes all the time. So if you can either take profits when you hit those resistance levels, or you can hedge your position, and as soon as it pulls away from your level, you can just set the stop loss, on the hedge, and when it bounces back up through the level, you're just back in the trade again. So yeah.
Okay. I have just a few questions on range trend. It's quickly. I'll start with this and then we'll. Okay. So when range trend lines points aggressively upward or downward, you say that range trends never get really broke. Like you don't discard them. But if price may never interact with those level again, do you cancel them? What do you do usually?
We've got some levels like that. Sol's got some range trends at like $6,000. Maybe when a McDonald's burger is worth $300 for a cheeseburger, we might have $6,000 Sol. But
Exactly.
I mean, you don't cancel them. You just don't think about them. They're not
Okay.
really worth it. They'll come up on the Rainstream bot eventually.
Mhm.
It'll show them.
I'll remember you. I'll
Yeah.
remember you when
When that
when
happens.
I
Yeah.
buy a hamburger at $300,
$300
and I'll be
bucks.
saying, "Hey, Sync, where's the Solana?"
Yeah, where's the Solana Rainstream? Oh, yeah, it's sitting at $6,000.
Exactly.
Yeah, so the problem with up-facing range trends is the same problem with all up-facing trends. If you've got an up-facing resistance trend of any kind,
Mhm.
it's hard to break it, because
Mm.
if you touch it with a candle, you're probably going to close underneath it, which is when the next candle opens, that next candle is always going to be underneath it. When you've got a down-facing range trend, if you push up against it and close a candle, the next one's probably going to open over it. So
Mm.
up-facing trends are very much ignored, but they are the main reason why you get things like rejections and price discovery. There's going to be some kind of up-facing trend that you just run into, and the price will probably wick through it. And that's an even worse sign, is if it wicks through it and then comes back down and closes underneath it, and then that was the top. So yeah, up-facing trends shouldn't really be ignored. Some of them are, and they're the same with down-facing support trends. They're also very hard to break. There's things that are the risks involved in taking a trade off them is that if they find support and go back to test the level, it will always be, in the case of a support trend, lower than where it was previously, because it'll be lower than where you entered. Or if,
of
in the
course.
case of a resistance trend, it's always going to be higher than where you shorted. So the risk is the rejection or support is really high probability, but the risk of it turning to shit on you if you don't exit is also high. So they're just good scalp trades, good levels to take scalps on.
Okay. And what is the priority of range trends over to origins? Or this goes back to my maybe original question, or like a question that I maybe did wrong at the beginning. But what are the strongest level? Because I remember in the discourse or in the education that you mentioned that range trends usually are the highest, and then origins, I guess.
Polarized levels are kind of
polarized
thing.
level.
Yeah, it doesn't really matter too much what they are. It's it's how they interacted when they were tested. So if we look at these two, just an example. So this one, sorry, bad example. Let's remove those. This one. Away. So we tested it. We didn't go back to it. This will be something one day that creates a bit of a problem for somebody when we hit that.
Yeah.
So that's a level for the future. Let's find one that created some grief. That's probably going to be one. There you go. Ta-da!
Yeah.
Down we go. So this level, they even managed to close above it. But this is the difference between polarization and a failed retest. Went above it, closed above it.
Yeah, we hard closed above it.
Yeah.
Okay.
Then we retest it and we fail. We test it from the other side and we polarize it.
Because one thing you said is also the fact that range trends usually we hard close, and we probably have 2 candles after that we retest it.
Yeah.
Right? But
and so
in this case we failed.
The retest failed. And when the retest failed, it tested it from the other side again. And then we gained
polarization.
Polarization. So when we touch it over here, we get a really good short.
Yeah, we expect
Yeah.
a strong bounce off.
And when we break it, get over the top of it, you get a big move. So that's an example of range trends and how they can happen here, polarize here, bite you in the ass over here. So that's an example.
And
they're all over the place.
Yeah. No. I'm digging deeper into this polarization because I really see the of course the value. So yeah, and I think we are over the hour, but I have one more question, which is
Sure.
in the FibLab indicators, how does the range trends gets created by the indicator if you need the two same color candles, or
So there's two types of range trend that the indicator will create. So one of them is just the simple, I call this a class 1. I had to name it something for the database. So this is just a class 1 range trend, which is basically you've got a 4 candle block where one wicks up and closes the same color, at least into the body of the other one. So that's kind of what I call a class 1. And then you've got a class 2 range trend, and they tend to be a left behind level, which could be, say, this body, and it's the first yellow candle that closes into that body, which is going to be not that one, but that one. So that was a double whammy. So you had 2 right here because you had this one and you had that one. So it finds both of those, and then you can just choose as to whether you see them once they've been touched. I tend to leave them on until they are broken and retested. And then after that, I sort of don't look at them terribly often, unless I'm looking at something and I'm going, okay, where is this going? Where could this go? Sometimes when price is moving and you're just going, where are you heading? Then I might turn it back on and just see if there's anything in there. But in general, I just leave it settings.
Because I think yes, this one I did a little bit of a replay earlier on the daily of BTC, and I was seeing that in the indicator it creates this channel basically.
Okay, so yeah, there is also range trend channels. I can't say I don't really trade range trend channels too much, but or even really look at them. But those, you probably have to. To be honest, you probably have to ask someone else what the hell they're all about. I know it's one of the more recent cotton
addition
theories that he's added into it, but I've sort of stopped watching his newer content because it just contradicts so much what he used to teach, and what he used to teach hasn't changed. So I just can't really understand why. What's changed? I don't know. I can't see anything's changed. So, so I haven't really bothered with that one. He's also recently taught that a yellow candle close into a blue body can also create a range trend, which I don't think actually does. I just think that it would be on some other time frame. It would actually be a blue candle anyway. And it's the same way that actually technically a single candle looks like it can create a range trend. Like these ones here. That's a range trend. It's just not very accurate because it's not actually going to be an 8 hour. It's going to be something where this becomes 2 candles in the middle, which isn't an 8 hour. So, but fractally, there will be some kind of range trend in there on some time frame. So yeah, there's a wee bit of there's a lot of confusion around range trends.
Yeah, that's I would say that range trends are the not least the one I kind of understood it, but I'm not confident, not too much confident yet on the range trends. Holds and origins, yes, and breaks, yes.
Yeah. So I just look at range trends as a hold that's left behind at the top of a range. So it's got to be 2 candles if it's a range. When it's entered into, if it closes the same color, it creates a class 2. And then, of course, you just got your block of 4, like this one that's coming all the way down here, which creates your class 1. And I'm sure there are other types. And I'm sure there's also nuance things like if some of these candles sweep the trend, that could mean something. There's probably, certain differences to do with how they just close immediately over and go. That probably also means something as well. But there's really, you could probably go down a pretty deep rabbit hole just trying to figure out some of the absolute finer details of range trends. One of the ones I've noticed a lot is just that where one of the inner candles actually does the sweep before the trend exists, and that's that's, in my opinion, trends actually exist before you can put them on a chart because they're already there. The price trend is already there. It's just we know it's there when we get a couple of closed candles, and that's when we can run a trend line. But it doesn't mean that it wasn't actually already a price trend. So it does make you wonder that if you get the sweep of a trend before the trend exists, is the trend already a tested trend? So rabbit hole.
But how do you define it before it's created, right?
That's the thing. So what you then have to do is you have to go through every single trend that has had that kind of interaction with it, and you have to check how that trend reacts the next time it's touched. And you could almost end up with another class of trend altogether. So or we could just realize that we can make enough money with what we already know.
Yeah, exactly. I'd start focusing on origins, because polarized origins that
I think
already a good way.
If people can make enough money taking origin scalps, that's a good way to start to build some bags up, and then after that, look at created origins and first holds, which is now you're moving more into trading ranges as they're getting created, and that's pretty good evolution. So once you understand origins and you're scalping an origin, the key thing is to understand that you're actually scalping the potential failure of a range. So now why don't we let's start trading the creation of a range, and that could be your next one, which is basically like a high probability front side hold fib trade.
That was one of the questions that I left behind, but I had a question exactly on this. Like, how much do you consider the 2-candle range before the hold as a trade opportunity? And with this, you're basically telling me it's a high conviction, right? A front side hold level.
Particularly
is just behind.
Particularly if it was created off an origin. So you've already got a complete reversal based on the origin getting created, and then you've got a hold, and then you could look for a greedier entry inside that hold. So if it's a singular candle that's after the origin, you could break it down in time frame and see if you can find a front side and a back side. Because if you go back to that SPX chart, wherever it is, up here, you'll notice there was more than one bounce. Like it was this hold here, but you've got sort of this bounce, and then you've got these other bounces that are all kind of happening as it comes across here. So if you were to actually dive into this candle, you might find there's a backside just up here somewhere, and then there could be a front side down maybe here, which created that move to the upside. So there could be levels just inside that one candle that actually create different parts of this. Or you could just take it as a single trade, take it from this level and take it up to that level. Job done.
I see. I'm good with the theory. I just need to put a little bit more practice in it. Otherwise, it's the best thing to get some experience. And What are the holds that you skip altogether in general?
Really small ones. Doji
Really? Yeah.
looking ones.
Okay, makes sense. Yeah, like me personally, I say, if the fib 1 to fib 1618 is lower than 0.2% or 0.3%, it doesn't even cover fees.
Yeah,
So,
yeah.
doesn't really make sense to
Doesn't make sense to take it. And then Doji
yeah.
holds well.
Yeah, I remember that. You say
Questionable to
it's low
begin with.
conviction in the end.
Yeah, there was no conviction
It's
when they made it. Is there going to be conviction when they retest it?
mm,
Probably not. So I'd avoid those. I'd avoid ones where there's a wick that's gone right through them as well. But
wick right through
yeah,
them.
so if
Okay.
they were created and tested, that's not such a bad thing. If they were created and tested and went off to a new level, that's not such a bad thing. But if they were wicked right through and then went up, I'd look to take the entry at the bottom of the hold, but not anywhere near the top or in the middle. It would just be,
Okay.
so that's kind of like this whole candle here. So this yellow one
Ate it up completely.
has gone all the way from the bottom of that, or even maybe
Yeah.
this, maybe this one. That's another example of the wick of that candle has gone below. So you could probably find some kind of entry down on the bottom of the hold, but they're probably not the greatest examples actually. Most of these aren't too bad. That's pretty well violated. That's gone all the way, nearly all the way through it. I'd be a little bit skeptical of that thing. Yeah.
So if the wick goes through the body of the hold level into the body,
Yeah.
you might wanna.
If it
Okay.
goes completely through it and then comes back up again, I mean, in this case, that one still worked. But yeah, if it does go completely through it and back up again, then it's probably not the hold that you're trading. It would be things like the origin that was created here. So that hold did not do that. That origin did that. So it's that sort of thing you got to watch out for. Is if they've had a wick go completely through them, there might be another reason to take the trade, like this origin, which was a beautiful bounce, but not that hold. So
maybe I should look into a clustering between hold and origins.
Yeah.
See.
I mean, these are strong. Like quite often, these are strong origins. If one of the candles inside the range that hasn't even closed yet has created the origin, like in this instance where these show up on the indicator as what they call a range hit origin.
Range hit origin. Okay.
So inside here you've got hit by own range. So go show only. This is actually from when we were doing back testing, this particular setting that's in here. And why that's not popping up. Let's go over to BTC. Okay, so that's a range at origin. That one there. So these are typically quite strong levels because they were created, kind of created in a hurry. They just really wanted to reverse big time.
Yeah.
Didn't want to screw around, didn't want to create a range and come back to it or test it, then create the origin, etc. They just wanted to do it in one single motion. And as you can see, it was a pretty huge pump. So they tend to be quite strong levels. And when they break, they can be big dumps.
So the range created origin.
Yeah. See, if you want to just isolate your chart for those and do a bit of testing on them
Yeah,
or that kind of thing, you just come in
hopefully
here and tick this box, just go show only those levels,
Mhm.
and then you're only going to see those ones. And then otherwise you're going to see them all.
Great, great, great.
Mm.
Okay, a lot to digest. It's very interesting, the origin, recent, created and touched, and by creation and see if there's an hold.
Yeah. So
And
if you go, let's see,
Oh.
origin created, by time frame, BTC. Origin recent created. BTC, and let's just go by time frame. So we'll just see what the most recent one was. So it was a 2-day. Before that, you had a 3-day. So if we look at the 2-day, so the origin was created down here. Yeah, that's where it was created. So we got this engulfment. So that long that's in right now is basically a long that was very high probability because it's come off the first hold candle after the creation of the origin. And it's nearly at the minimum target, which is that 64,880. And how many times have we seen 64,880 as a resistance level tonight while we've been looking through these various different things? So that's that's an example of if you were to take a long on a front side hold because it was off that origin, and you would have found that just by going origin recent, search for created.
Yeah.
And before that, you're up around 77 where we created a bearish one. So the last couple that we've created, one of them was a 3-day bearish up here.
Yeah.
So it looks like that one. Nope, it's not that one. Must be that one. In range. Wicked. Down it goes. Super fast. Straight through.
Yeah. It's a first hold after origin.
Yep.
Okay.
So it was this one here. Didn't really even have a chance to retest it. It just tanked. So that's an example of just absolutely turning to custard because of things like that in range. Before that, it would have created this one here. So that must be 79,549, 459. Yeah, 79,459. And I'm reading that on the other screen. Total cheater. And it created that hold. So you could have got that one. So created this here. Enter the hold. 1618 minimum TP. Chances are it's going to keep going.
That we go down.
Yeah. Hit the bottom. Look where we're bouncing. Bouncing back up. So that's an example of why you would use that tool. And you're doing it not so much to take the trade on the origin, because the origin being touched indicates the range is being tested to see if it can break the range. You're actually doing it to take the trade off the first hold that comes about.
Yeah.
Which is this big dump here.
I'll do some testing, and I already have a few trades idea.
Nice. Let me know. Let me know how you get on.
Yeah. I'll let you know.
Ooh,
okay.
I get a half-hour break.
Oh, sorry.
No, not yet. Not yet. I've got a few minutes to go.
Not yet. Okay.
Man, Blue is such a slave driver. Morning, Blue.
Fair enough. Okay. I mean, if you want, you can start the break earlier. I mean, I don't think someone is joining, so you take 9 minutes back.
Yeah, I'm good. But hungry.
Okay.
Don't know what I'm going to do about that. It's probably a bit late to get food delivered to the house, I suppose.
What kind of food?
Don't know. Usually you just jump on the app and see what takes your fancy. Press the button.
Yeah.
Watch people go to the wrong driveway 5 times over before they eventually realize where you live.
You're in New Zealand, right?
Yeah.
I'm in Italy, so
Ah,
quite the difference in hours. Yeah.
Italy is lovely.
Yeah. Please let me know when you come.
It's been a while since
So we
I've been
can
there.
organize. Huh? Say again.
It's been a while since I've been to Italy.
Mhm.
Next time I was there
We can do
for
a meetup.
work. Yeah, next time I go there, I think I would definitely enjoy it more. When I went there the last time, I had a lot of work stuff going on, and it's
Mhm.
hard to concentrate. It's hard to be on holiday and in a place when you've
Of course.
still got a hell of a lot of attachments and things somewhere else. But yeah, geez, some of those
Blue is
buildings.
also close. Blue is also close
Oh,
in Germany.
some of that architecture there is just nuts. If you grow up
Oh,
in
yeah,
this
yeah.
country, you look at an old post office and you think that that's old. And then you go over there and
Fair enough.
you see churches that, you know, ended 12 generations of stonemason families all building one building. And then you go, yeah,
Yeah,
okay.
yeah.
Yeah, we're a pretty young country over here. So
Mhm. Mhm.
very different.
Yeah. Okay. I think I'll leave you to the food choosing.
Okay.
And yeah, I'll catch you up next time.
Okay.
And thanks a lot for the very insightful session.
Yeah,
And
no
really
worries.
appreciate the work.
All right. Catch you later.
Speak soon, eh? Take care.
Cheers. Bye-bye. Bye.
Ciao.
All right. My executive assistant is informing me that I have my break started 21 minutes ago. But there is 1 hour unoccupied, so 37 minutes. Okay, I have 37-minute break. Then when I come back, we should look at Siren. Okay. Not dead yet. Close. Yeah. Coughing break. Go get some water break. Starting to low time frame looks like it's going to go up and take that liquidity soon on BTC. So I might start to see something happen. Who makes these rules? It's Blue. He's a slave driver. Okay. Should I stop the feed now and restart it again, or should I just leave it going and restart it when I come back? What do you guys want? This is going to be the tough stretch for me. 10:25. Got to get through to 6 a.m. Let it run. Okay, let it run. Food or sniff. Have some candy. Okay. See you again soon. Right. I'm going to restart this live stream somehow.